to some of the tech names in North Asia. But at the same time, when investors are looking at earnings growth, you are looking at MSCI India earnings of roughly about 8% growth this year. Compare that to South Korea of more than 100%, or MSCI China at 16%, or even Taiwan roughly around 30%. And when Indian equities are priced at 22 times, which is more expensive than the rest of their Asian peers, the buy case becomes a little weaker, and therefore the skepticism comes in. That said, foreign inflows have shown tepid recovery. The past 2 weeks, we have seen inflows, which is the first time since October.
CJ, thank you so much for that. Bloomberg Asia Equities Editor Chiranjeevi Chakraborty there. Now, still ahead on Insight, we dig into the market implications of the surprise Thai election results with MBMG Group's Paul Gambles, plus Bain Capital and BCG advisor NB to run margin on the impact of AI automation on India's software as well as IT sectors. More to come in our next hour of Insight. Keep it here with us. This is Bloomberg. Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
I met him 1988 after my first lessons opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, I was traveling the business. But of course, after, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes, so strange idea,
Hello everyone, good morning to all of you. I think now my voice is clear. ठीक है, क्रूड ऑयल में देखें, परसों एक बाइंग का ट्रेड था, मार्केट में बाइंग आई थी, रेजिस्टेंस तक गया था, हल्का सा गैप डाउन ऊपर सी सपोर्ट एरिया पे हुआ है, यहाँ पर अब वापस से बाइंग मत करना, थोड़ा वेट करेंगे। नेचुरल गैस एक परसों सेलिंग का ट्रेड था रेजिस्टेंस पे, रिस्की ट्रेड था, मार्केट ने थोड़ा सा कंसोलिडेशन किया, काफ़ी क्लोजिंग होते होते थोड़ा बहुत नीचे आया था, फॉरेक्स में नीचे आ गया था तो गैप डाउन ही ओपन हुआ है आज। एक पहला लोअर सर्किट लगा, ये दूसरे लोअर सर्किट पे था, हल्का सा लोअर सर्किट ओपन हुआ है, बट मुझे लग रहा है शायद अगर फिर से डेलो के आसपास जाता है तो लोअर सर्किट में चला जाएगा, तो वेट करेंगे। कंटिन्यूएशन में है अगर कोई तो ट्रेल कर सकता है इस ट्रेड को। ठीक है, पॉसिबिलिटी है कि ये प्राइस अब हो सकता है नीचे 280 तक हमें जाता हुआ दिखे। कोई नया ट्रेड अभी इसमें है नहीं। और इंडियन मार्केट की बात करें, बैंक निफ्टी दोनों ही गैप अप ओपन हुए थे। निफ्टी फ्यूचर जैसा मैंने बताया थोड़ी देर पहले, परसों ही ऑलरेडी ये सपोर्ट पे आ गया था 15 मिनट टाइम फ्रेम पे, विच इज़ अराउंड 25,600 के अराउंड, वहाँ से ऑलरेडी फ्यूचर में बाइंग ही चल रही है। अभी यहाँ पर कोई रेजिस्टेंस नहीं है, इवन दो पहली कैंडल ने थोड़ा सा मोमेंटम सेलिंग साइड दिया जरूर था, बट अभी कोई सेलिंग है नहीं। ओवरऑल देखोगे मेजर रेजिस्टेंस निफ्टी फ्यूचर में 26,450 26,450 के अप्रॉक्सीमेटली है एक 15 मिनट में, उसके अलावा और कोई रेजिस्टेंस नहीं है। ठीक है, यहाँ पर एक रेजिस्टेंस बन सकता है जहाँ पर प्राइस अभी चल रहा है 25,900 950 के अराउंड, बट अभी वो फॉर्म ही नहीं हुआ है, तो देखेंगे क्या वो फॉर्म होता है या फिर नहीं। ठीक है, बिटकॉइन भी 60,000 से रिकवर करके 70,000 के ऊपर ट्रेड कर रहा है। गोल्ड, सिल्वर, फॉरेक्स में गैप अप ओपन हुए, कंटिन्यूएशन में है सिल्वर। गोल्ड में थोड़ा सा साइडवेज मोमेंटम, आज कोई मेजर डेटा भी नहीं है जिसका इम्पैक्ट मार्केट पे पड़े, तो 1:30 लंदन सेशन ओपन, 6:30 न्यूयॉर्क सेशन ओपन, 8 PM यूएस मार्केट की ओपनिंग रहेगी। ठीक है, कोई न्यूज़ वगैरह आएगी तो देखेंगे। जापान में इलेक्शन हुए थे, वहाँ पर जो अभी करंट प्राइम मिनिस्टर थी उनकी पार्टी अ, जीत गई है, सनाई तकाईची सिविन द इलेक्शन। बांग्लादेश में इलेक्शन है शायद 12 तारीख को आई थिंक। Japan's Iron Lady Sanai Takaichi forged stunning election win in Japan. थाईलैंड में भी आई थिंक इलेक्शन थे, वहां पर भी जो करंट गवर्नमेंट है वो फिर से पावर में है। Hong Kong tycoon Jimmy Lai sentenced to total of 20 years in national security trial.
capital markets globally for a while now. So we had sort of three defensive kind of pillars to portfolios. One was gold. We were probably more overweight gold than anybody I know. We had about a 10% allocation to gold. We had treasuries and we had JGBs. Well, with everything that's happened with gold, we've now pretty much sold off the gold holdings, recycled that into JGBs and into treasuries.
The yen. That remains intact as a safe haven play. I mean, lots of questions about how Takaichi will fund his spending plans, and hence perhaps the yen won't be doing well, and JGBs won't be doing well.
There's an argument that says that, but to be honest, we think that's a fundamental misunderstanding. That's based on the sort of, Bretton Woods era understanding of how government funding actually worked. And we all know it doesn't work like that anymore. We found that out in 2008. We found that out with what's been happening in the JGB market for the last few years when nobody's turned up for auctions except the Japanese government. Well, they don't mind being alone at the auctions now. They're quite happy to go and buy them. It's a way of creating currency for them. So I think we'll get a lot more JGB issuance. That might spook the markets in the short term. It might harm the value of JGBs, but that's a buying opportunity because in the long term, these are still, the Japanese government is still good for its credit.
Since we're talking about havens, are treasuries still the place to be when it comes to taking shelter?
Absolutely, no better haven out there. Again, a lot of nonsense talk by people who don't really understand how bond markets function in the modern world. Again, you don't need the buyers that you needed before. You only need one buyer to strike a price, and the government can determine that price. Again, it's a lesson that we should have learned in 2008. We saw huge amounts of treasury issuance going out of 2008, and look at the way treasuries rallied then. So to us, this is similar to that. The only difference is it may take a bit longer for markets to start believing it, because I'm not sure that Trump or Kevin Walsh have the credibility that the policymakers had in 2008.
Paul, what's the biggest risk to all the assumptions that you're making?
The biggest risk is that there isn't an AI bubble burst. That the AI bubble keeps going on forever, in which case it's not that we'll be badly hurt, but we'll certainly have missed out. But for us, AI bubble is looking every day closer to bursting. If you look at now at the fractures that are appearing between Nvidia and OpenAI, if you look at AMD and their forecast results, you look at what Microsoft said, it's all starting to look a bit nervy out there. So and the problem is, this is the biggest bubble that the world has ever seen. Compare it to the telecom bubble of the late 90s, and this is a totally different scale. It's bigger in absolute terms, it's bigger in relative terms, and it's a much bigger impact on markets and on the global economy. So
Paul, hang on to that thought. We're coming back with your thoughts on the AI play. Paul Gambles from MBMG Group is staying with us. When we come back, well, we'll turn our attention to Japan as well as AI, with the yen in focus as Prime Minister Takaichi's big election win set the stage for further fiscal stimulus. Keep it here with us. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
You're still Hong Kong, yeah?
Welcome back. You're watching Insight, coming to you live from Bangkok. Japanese Prime Minister Sanae Takaichi's big election gamble has paid off as the ruling LDP achieved the biggest post-war victory for a single party in a Japanese general election. The big win also raising concerns among yen and bond market watchers over her fiscal spending plans. For more, we're joined by the Asia Trade co-anchor Sherry An in Tokyo. And Sherry, what a win!
Definitely, you said it. I mean, this is a super majority by Prime Minister Takaichi and her Liberal Democratic Party. The 2/3 majority in the lower house means that they actually can override a veto from the upper house. This gives her a sweeping mandate to carry out her policy priorities. And given the election win, she's been compared with iconic prime ministers of the past like Junichiro Koizumi, as well as her mentor Shinzo Abe. And what a turnout as well. You can see right there, it was snowing yesterday. So I was wondering what the turnout would look like, but now media saying that it was past 56%, which is slightly higher than during the last election in 2024. And remember, it was that election where the ruling LDP actually lost its majority after a series of fund scandals. And this time around, the LDP actually managing to get 316 seats on its own, the most ever for this party since its founding in 1955.
Sherry, we know that Japanese voters will not be deterred, not even by snow. We also know that the Japanese voters were potentially sending a message to China.
Yes, this could actually be seen as a message to Beijing as we continue to see these heightened tensions between Japan and China, and all of this around Prime Minister Takaichi's comments around Taiwan just last year. But since then, we have seen Beijing really ramping up the ante against Japan with restrictions on seafood imports, with really discouraging Chinese tourists from coming to Japan. But the fact that the Japanese voters have really supported the Prime Minister will be a key point, giving her more authority, more confidence on the world stage. We have heard already from President Trump congratulating Sanae Takaichi as a highly respected and very popular leader. Remember, their meeting in the White House on March 19th. And this is a change in dynamics here, too. The last time Sanae Takaichi met with President Trump was when she was just elected prime minister. And what a turnaround, because even back then, she has struggled to get enough seats in parliament to become prime minister. But now we'll be watching very closely how Japan carries out those investment commitments into the U.S. that have, of course, topped $550 billion.
And Sherry, Takaichi stands for bold reforms. That includes the Constitution, Article 9. Where are we with that, and how quickly might that happen?
we have seen Prime Minister Takaichi being very bold when it comes to domestic policy, including more immigration restrictions and, as you said, perhaps even veering away from the pacifist constitution. So whether or not she'll be able to amend Article 9 of the Constitution, which allows Japan to have its own military force. And remember, technically, Japan is forbidden from having a military force since World War II. They do have the Japan Self-Defense Forces, but whether or not she'll be able to make these changes, including more offensive military capabilities and perhaps even lifting a ban on lethal weapons exports, is a key question. But of course, right now, investors and markets very much focus on her economic policies first. In fact, I spoke to a lawmaker earlier from the LDP, Rui Matsukawa, who was saying perhaps these pacifist constitution revision issues come later during her tenure. But right now, the key question is what happens to that suspension of the sales tax on food for 2 years.
Sherry on, the Asia Trade co-anchor, we thank you so much for your time today, Paul. But let's get to Paul Gamble's. MBMG Group is still with us. Sherry was just talking about, how Takaichi is likely to push through reforms, including the Constitution. Could defense be the place to be in Japan?
Yeah, I guess obviously most of the contractors are in the States, and they'll be importing a lot of the defense requirements that they've got. Defense is it's obviously an interesting place to be globally right now because geopolitics is in such a mess. We've got Germany rearming, we've got Japan rearming, and these things always, provoke reactions everywhere else. So, we are likely to see increased defense spending. But, our big worry is that even that is something that is probably not able to rebalance the global economy because we have got so lopsided with the amount of emphasis that has gone into AI, which we were talking about earlier. So it's a play, but most defense stocks are so expensive because they've been doing so well because of the amount of geopolitical increase in tension over the last couple of years that it's not a play where you'd expect there to be massive returns.
Would you play AI in Japan? Would you play tech in Japan?
There was a time when we would. In fact, if you look, probably. If you look at the combination between automotive and tech, that's a really interesting story because Tesla was everybody's darling a few years ago. We were very unconvinced, particularly at the price. And at that stage, we thought that Japanese vehicle makers, particularly manufacturers like Toyota, had a much better technological proposition on EV. A lot of the hybrid technology seemed to be the way to go. But it seems like they've just been snoozing, and their lunch has really been eaten by China. And this seems to be the story. It's the story in manufacturing, it's the story in automotive, which is obviously a more enhanced form of manufacturing, but also now, Chinese tech seems to be the go-to. We've been big fans of Chinese tech. We're currently out of it just because of pricing. It just looks like it's got a little bit expensive, and we'd expect there to be a pullback in sympathy with the pullback that we expect in Western tech. But having said that, at some point they are going to disconnect. We need to think about getting back in, to make sure we don't miss that point, because definitely the next 10, 15, 20 years in tech really belongs to China, I think.
We have been talking about concentration risks, and we're definitely seeing that in the AI space.
Absolutely.
Earlier you talked about how that bubble is bursting. When and what are you looking up for?
Okay, so that's a great question. The reason we think it's a bubble and it's going to burst is the sheer amount of leverage that's gone in there. And again, this reminds us of the fiber optic story of the mid to late 90s. Everybody was laying out fiber optic cables. It became the hot story. You had to be in it. You had to spend more. You had to leverage more. And in the end, it ended up getting so over leveraged and so much overcapacity that we ended up with all these dark cables for years that were no use at all. And our worry is that the data center game in the States in particular is going that way. And so any kind of cracks around the edge would be really, really worrying, because the amount of leverage that's in there, it really needs these targeted growth levels to sustain that. And just the fact that we're seeing the falling out between OpenAI and Nvidia, the fact that Jensen Huang seems so concerned about China that he's spending so much time either visiting there or talking about it, the fact that AMD, their growth numbers are looking so poor. There are so many marginal kind of symptoms now that this bubble is not sustainable. And I think probably we should look towards the funders. We should look for problems at Blue Owl or people like that. Once they start to slow down the rate at which they're investing into data centers and AI, then really from there the collapse is probably going to come fairly quickly.
So essentially we are already seeing those cracks.
I think we're starting to see those cracks. Those cracks can last for a while before it completely bursts open, but we're starting to see the cracks.
So if you look into the crystal ball, might we see the bubble bursting 12, 24 months from here?
Oh, I think before that, and I think the really interesting thing is if it bursts, what if it bursts in May this year when we have Jerome Powell handing over to Kevin Warsh? For us, that's the real game changer. That in the past you might have expected the Fed to be able to come in and backstop bubbles. It did that in 2000. It did that in 2008. If we've got a new Fed chair who isn't necessarily aligned with the rest of the Fed, that is really, really dangerous, because the ability to put some kind of a cushion underneath that burst, that really gets compromised very badly. So there's almost a sense that Trump ought to hope the bubble bursts before May, while Jerome Powell is still there and can do something about it.
Paul, if you're anticipating the bubble bursting, would you be putting your money in non-AI markets like India?
India, I think, is probably too leveraged to the AI and the US story. It still needs US consumption to be functioning. China, I think, is probably the most robust, but even there, as I say, we're hanging back. We would like to see valuations come down a little bit in sympathy with what we think is going to happen in the States, and then we'd certainly be increasing allocations. So right now, on the equity side, we're mainly in either equities that have some form of protection, such as options, or long short. Long short's been a great place to be for the last year, because we've been increasingly negative on equities, but we've been able to play there still. And it's long short means you can still be in there and never have to say you're sorry.
Paul Campbell's always a pleasure to have you on set. We should do this more often.
Absolutely.
Paul Campbell's co-founder and managing partner at MBMG Group. Still to come on the show, as new AI agents send shockwaves through software providers and IT outsourcers, we'll check the impact on India. Senior advisor to Bain Capital and BCG Tiger, Tira Garajan, will be joining us next. Keep it here with us. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Jobs Day, and Bloomberg has the report under surveillance.
Where's the emphasis, on headline payrolls or on the unemployment rate?
I'm focused on the unemployment rate, as is the market.
Wednesday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
What we're seeing is certainly a growing labor force.
A labor market that actually could be improving.
The January jobs report, Wednesday on Bloomberg.
We certainly don't think software is disappearing. In fact, there's probably an underutilization of software globally in the world, but there may be a shift of where the value accrues to in this tech stack. And we think a lot of it is going to accrue to the platform and infrastructure side.
There is a growth in AI budget. There is a growth in IT budgets. So yes, some of the SaaS companies will be under pressure. But my belief is either the infrastructure companies, data center companies, and the Indian IT companies will actually benefit.
Some of our guests sharing their insights on last week's software sell-off triggered by growing fears of AI disruption. AI automation tools are significantly impacting software companies by threatening their revenue models. Major Indian firms, including TCS and Infosys, face stock declines due to fears of AI displacing services. Let's get insights from NV Thiagarajan, who serves as a senior advisor at Bain Capital and Boston Consulting Group. In these roles, he primarily advises on digital technology, artificial intelligence, and business transformation. Tiger, good to have you with us. First of all, your take on whether AI will displace software companies. Will AI decimate software companies?
No, the simple answer is no. And as usual, the markets overreacted to what is obviously a change, and a change that continues the acceleration of the embrace of AI. Obviously, those companies that do not embrace AI and build it into their solution, and that includes software companies, are going to get decimated. But a number of other companies who will embrace it and use it in their solutions are going to thrive even more, because it's going to open up a much bigger market than software has ever had. So, it's kind of throwing the baby with the bathwater when everything is decimated. That's my view.
But Tiger, you got to wonder whether or not Indian software companies are ready to make that transition. Are they well equipped to embrace AI for the future?
Hasrita, the devil is in the details. So, the simple answer would be in almost every industry, and this applies to the Indian IT services industry, I can argue that half the companies are going to embrace, change, and thrive, and the other half are going to die. And that change is coming more rapidly than people expect. These are large companies, so driving change is critical. Some companies are going to do an amazing job at doing that. I remember when I was the CEO, this was 2 years back at Genpact, that's one of the things we focused our attention on for 20 plus years. How do you continuously drive change? So to me, those who embrace change and exhibit courage, because one of the interesting things that has to change is the business model. And some people have the courage to change their business model because it means cannibalizing your existing model, and some people will not. And that will distinguish the winners from the losers. And Indian IT services are going to have a number of winners because The stack is going to require change. No single company can do that. And therefore, IT services partners are going to do that, but they need to be the right partner.
I'm just going to push you a little further there, Tarek. I'm just wondering which are likely to be the winners.
Yeah. So I would say, instead of naming companies, because obviously I'll have my favorites and other people will have their favorites, I would say 4 characteristics that I would call out. Number one, is it an organization that actually understands the detail? I call that the last mile detail. Because, whether Claude or OpenAI, the infrastructure, large language model layer allows a technology to be leveraged. But let's be clear, you cannot bring it into an enterprise and turn the switch on. It must be integrated with your workflow. It must, change the way people work. It must align with the data you have. And that requires what I call last mile understanding of my business, of my domain, of the insides of my house to wire it up, the workflow, etc. So number one is which companies understand that in detail, not just the technology, but also the business and the data and the domain. The second is, how much are they willing to cannibalize their business? Which means, can they go back to the customer and say, I'm going to reduce the number of people who do this by 70%. Therefore, your, the bill that I send you is going to drop by 50%. And therefore, my revenue is going to drop. But in the meanwhile, I'm going to do more for you because you're going to be so delighted and there's so much more to do. I was in a meeting just a couple of weeks back where the technology company that we were talking to, this is a technology product company, were basically saying our ability to now use AI to code allows them to expand the recrafting of coding of their legacy code into new code by 100x. So think about this. They've been prevented from doing that because of the slow speed of human coding. Now, humans, leveraging all this new technology, can actually do it so much faster that actually they're saying, I'm going to open it up for complete recrafting. Every business is going to go through that. So that will be the third. And the last one would be, how much are they willing to change their commercial model to outcome-based pricing, to not input cost-based and people-based? All of that requires leadership and guts and courage, which is why I'm saying half of them will not do it, the other half will do it.
We talk to a lot of companies, and a lot of companies commit themselves to digital transformation. The issue is with execution. What usually goes wrong at the leadership level?
So maybe I would call out 2 extreme situations. Situation one is where there's excitement at the leadership level, at the board level, and they want to embrace AI right through the organization. Unfortunately, the view they take is that I'm going to bring AI into the enterprise completely. And what that does is a number of small pilots that never see the full light of day in production. So we have many, many enterprises that have done many, many pilots, many of them actually successful, but haven't yet productionized it. Why? Because there's not enough conviction that it's ready for production grade, as I described. In large enterprises, unless something is ready for production enterprise grade, they don't switch it on. So that's too much and too spread out. The solution there is to pick only 3 or 4 things that are most important for your strategy today, and then align yourself only to deliver that, and then go to the next 3 or 4 and the next 3 or 4. So prioritization becomes incredibly important in the world of AI. The second reason why people struggle is data. I mean, they realize that actually AI is amazing, these technologies are amazing, large language models are amazing, but the data they have is fragmented, is distributed, the underlying processes are disparate, they do the same thing in 20 different ways in the company, and unless that is fixed, you have a real problem because you can't use bad data in order to do AI. I mean, that's a dangerous path to take. And the last one I would call out is change in the middle. People don't like to change the way they work. And you can't just bring AI and say, I'm going to start using AI. You got to reimagine the way work gets done. And you got to focus not on cost of doing something, but on the outcome you can deliver. So what if you can double your business by actually changing your business model? What if you can increase prices? What if you can gain more market share? What if you can delight the customer? Those are the things that companies struggle with.
You talk about cost. India's outsourcing industry has been built on, I guess, cost arbitrage. In an AI world, what would it be its competitive advantage then?
So, Asunda, I think the way I would describe it is the same one word, which is arbitrage, but I'll replace cost with intelligence. So I call it the intelligence arbitrage world. And there's a real opportunity for an economy like India and the firms in India to actually ride that intelligence arbitrage wave. Why? It's got the largest talent pool that is on a path to learn all these new technologies on how to use them. And the world is going to be a place where organizations and societies that embrace these new technologies and use them to build new solutions and change businesses are the ones who are going to be the most successful. So availability of young talent that is embracing the new is one reason why I would call India out for success potentially. And the second one is, as I called it, it's a big services economy that serves all the global economies of the world. And it's been doing that for 30 plus years. So therefore, a deep understanding of that last mile I talked about. I mean, company after company, when you walk into the premises, you'll see people who understand all the details of lending, all the details of insurance, all the details of claims, all the details of how to service an aircraft engine or a power system, what part goes where, etc. All of that last mile domain is well understood. And in the world of data and last mile domain being so important to leverage AI, India has a real chance of winning. And the last thing I would say is a workforce that actually is adaptable. And the world of tomorrow will require a very, very adaptable workforce.
We often talk about AI's real operational impact. Where do you think it is still being underestimated, undervalued amongst large enterprises?
I think the problem that most of the world has, including large enterprises, is an assumption that the real value of AI is reducing the number of people that is needed for something. It could be software code, which is the flavor of the day today. It could be customer service. You just replace it with chatbots and that's it. Without realizing that actually the bigger game is what does it allow you to do that you could never do? I mean, I was talking to a large manufacturing company. I'm talking about a global manufacturing company that makes really big equipment that goes out into the field and stays there for 20, 30 years and needs to be operated for 20, 30 years. Before that equipment goes out, the engineers run a bunch of simulations over multiple years in order for an innovation to come to life. Let's say they run 1,000 simulations today in order to test how this thing works and how to deliver value and safety. In the world of tomorrow, they have two options. They can use AI to make the 1,000 simulations get done in 2 weeks rather than 1 year, and they can do it at, let's say, $5 million instead of $30 million cost. They have another option, is I'm not going to do 1,000 simulations. I'm going to do 1 million simulations. I'm going to increase the aperture of what I can do now using AI. I'm still going to spend $30 million, but now I do 1 million simulations. To me, the breakthrough is going to come from allowing the enterprise and everyone to do so many more things, and that being underappreciated. Imagine customer delight and what that does to market share. I'll keep going back to the same insurance company. I keep renewing, and maybe the insurance company is going to charge me more. That's okay, because I'm so delighted with the way they've managed claims that allowed me to get my insurance claim for the damage to my property because of a hurricane in 24 hours versus 4 weeks. That's delight. So I think that's a real underestimation of what AI does to businesses rather than just productivity and cost.
Tiger, great perspective there. NV Tiger Rajan, Senior Advisor of Bain Capital and BCG, weighing, of course, on the issue of whether software companies will be decimated by AI progress. Well, we're coming to you live from Bangkok. Let's take a look at how Thai assets are performing on the back of the results we got overnight from that election. A surprise indeed from the Bumjai Thai party, gaining 3 times the number of seats it received from the last election. We're seeing gains pretty much for the SET index, up by almost 3.5%. We're also seeing the Thai baht currently stronger by about 1% versus the USD. And the Thai Stock Exchange president says an initiative started last year to increase international inflows is boosting market confidence and improving the IPO outlook. The SET index has outperformed the likes of Indonesia, the Philippines and Malaysia so far this year. Asadat Kongsiri told us the Jump Plus program is also helping attract retail investors.
We've seen positive inflows from international investors.
Can you quantify that?
It's around, the Thai number is around 10 billion baht, so probably about 3 billion or 10 billion baht, let's say, and you can exchange rate later, because the exchange rate is another issue we could talk about as well. But it's been a positive flow, so it's been a push on the market. It's encouraged retail investors to also participate more, at least in January.
What is the SET doing to encourage more investments in the country, a bigger play in the stock exchange here?
Yeah. So it comes down, as I mentioned, fundamentals. How do we push growth in earnings, growth in returns on equity? So one of the big major programs that we launched mid last year is called Jump Plus. So effectively the same as Value Up program in Japan and Korea, similar, but adjusted for the Thai context. We've got 114 companies signed up already, so we're hoping the growth plans under this program will slowly be disseminated, communicated to investor community over the next 2-3 quarters. We still have room for people to join. We're looking for the larger companies to join the program as well. And hopefully...
Are there goals?
They will have set goals. So effectively, they need to formulate a 3-year plan, investment plan, and what they look to achieve out of those investment plans in terms of real measurable numbers, whether it's be ROE or increases in bottom line and so on. And this will be communicated to investors as well. And we'll be keeping track of it. We'll be communicating. I think they're required to communicate progress every quarter. So we'll see. Hopefully a stronger, more stable government will encourage more people to join the program and more, at least, be brave in terms of investing.
Could I ask that? I want to take a look at the IPO market. It wasn't that long ago that Thailand was actually a front runner. Right. It's now a laggard. What's the outlook for the IPOs in 2026? It's
relatively stable compared to last year, so it's still relatively down from the pipeline that we've seen at the moment. And for natural reasons, right? PEs are low. The uncertainties both in Thailand and outside of Thailand causes people to at least stop and think about investments and the funds that they want to raise to invest. So things are looking up with this result in the election, with the number of people joining the Jump Up program. I think general sentiment will be better and will ultimately help the IPO process.
Kunasadan, you alluded to monetary policy, which is, you said, a story on its own. What do you see the Bank of Thailand do it? What does it need to do to help support the economy?
I think from what we've heard of the current governor of the Bank of Thailand, they're looking to have a bigger role. So it's not just interest rates anymore. They need to be part of helping the economy grow. And that's a positive or a nice shift in perspective that we hear. And I'll actually be having lunch with our team. We'll be having lunch with their team shortly later this month, to discuss where we can help each other, encourage and help the economy grow at a faster pace as well.
It is interesting to see how strong the Thai baht has been despite growth being lackluster. Is that a concern because that impinges on exports of the country?
What we've heard, at least from my perspective, what we've heard from the international brokers who obviously speak to their international clients is that's been a bit of a sort of a ceiling, a limitation. So there are concerns that if they come back into the Thai market and the Thai baht weakens, it could be it's seen as a risk, to be honest. The other perspective that we look at it is from our listed companies. Obviously, Thailand is so quite dependent on exports, so I wouldn't call it unnaturally or possibly unnatural strength of the Thai baht does have an impact on performances of many of our companies listed.
And of course, Thailand relies a lot on the U.S. market.
Yes.
It has been imposed with 19% tariffs. I'm just wondering, how closely are you watching the change, the transition of the top man at the Fed? How sensitive is Thailand to that?
It has an impact around the world, obviously, where the U.S. policies go along. I think Thailand, as a relatively small economy, is probably less impacted. It will obviously have issues on fund flows, an impact on fund flows. But you mentioned tariffs. I think that's the bigger issue of concern, at least from a local perspective. If we can get the reciprocal tariffs clarified, it will give us or put us in quite a strong position to know where to invest and compete with the rest of the world.
SET President Asadat Kongsiri speaking with us earlier. Plenty more ahead. Keep it here with us. This is Bloomberg.
This is a 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top to the bottom, make the sushi shape the more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Welcome back. You're watching Insight. UK Prime Minister Keir Starmer's political future is hanging in the balance after his chief of staff quit over the appointment of Peter Mandelson as ambassador to Washington. That's after revelations over Mandelson's past ties to Jeffrey Epstein. Let's bring in Bloomberg's Rosalind Matheson, who has more for us. So Keir Starmer on the brink, just how much pressure is he under, Ros?
Well, increasing pressure. The whispers are definitely getting louder, and you can see that lawmakers are talking much more publicly about his future and questioning his future openly. As you say, this is the furor over his decision early on to appoint Mandelson as his ambassador to the US. That was the sense that at least Mandelson understood Donald Trump possibly could be a good conduit for the UK in that relationship, but overlooking, of course, Mandelson's previous ties to Jeffrey Epstein, which have now come back to really haunt Keir Starmer and his government. So his chief of staff has resigned, saying, I suggested this to the Prime Minister, but the Prime Minister made the ultimate call here to appoint him as ambassador. And so really the questions are, can Starmer now hang on? This noise is just getting ever louder within his own ranks. The sense this is the sort of thing that just dominates the headlines for weeks, dominates his government, which has been trying to get its message out about other things, the economy, jobs, and so on, coming into some important local elections. So really, is this going to derail that messaging for months to come? And is this the moment then to perhaps consider looking at a change of leadership? It's some years before the next election in the UK. So do they have time to reset, try and reclaim the narrative and get a new leader in the chair?
Any recourse for Starmer? Is there anything he can do at this stage?
Well, there's very little potentially he can do. He's likely to be meeting members of his own party today in the UK. It's possible some of the people have been talked about as challengers. He tries to bring them in closer to him by elevating them to more senior positions in his government. Angela Rayner, for example, Ed Miliband, others. But do they really want to do that? Or is it better for them to be keeping a sense of distance right now from Keir Starmer if they are considering a leadership challenge at some point, perhaps after those local elections that are coming in May? Are they better off to keep, again, a bit of a space between them and Keir Starmer and let him take all the heat for all of this and let him take the heat if the party performs poorly in those local elections? So can he really reclaim the narrative at this point in time? It'll be interesting to see what he does say to lawmakers behind the scenes. Does this mean too much chaos if they were to change leaders at this point in time? But, you know, his options are quite limited.
Rosalind Matheson, thank you so much for that. Now, before we go, here's a look at some of our guests for tomorrow. SEB's Eugenia Victorino will give us an outlook on the markets, plus JP Morgan's Pauline Ng will be joining us to discuss ASEAN equities. And that is it for Insight here in Bangkok. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the trend, the technology trend and the investment is real.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. Victory rally. The Nikkei 225 jumps and the yen edges higher after Prime Minister Sanae Takaichi's ruling LDP achieves the biggest post-war victory for a single party in a Japanese general election. Oil declines as tensions in the Middle East ease. Iran is describing its nuclear talks with Washington as a step forward, with another meeting set for this week. And we hear from Saudi Arabia's finance minister, Mohammed Al-Jadaan, as the kingdom plans to release an updated strategy for its $2 trillion economic diversification agenda. It's just gone past 9 a.m. across the Emirates, 7 a.m. here in Cape Town. I'm Jennifer Zabasaja in for Jumana Bersechi. Happy Monday to you. And if we just take a look at where your markets are trading right now, they are continuing with a bit of positive momentum that we did see at the close of last week. If you can remember, last week was quite a volatile day for a lot of the U.S. indices. And as you can see there on the board, a bit of marginal positivity is feeding into markets, a bit of a continuation from what we have seen in the Asian session, at least so far this week. Starting off in the green, as I just mentioned there, S&P futures up just marginally after last week was quite sizable losses earlier in the week tied to the AI trade, but still quite a bit to pay attention to throughout the week. We still have earnings season. We're in the midst of earnings season from a number of corporates that we're expecting this week, and also a delayed jobs report and a CPI print to watch in the U.S. So quite a bit to watch as far as U.S. equities go. We also have dollar yen on the board. Of course, we mentioned that sizable win by Prime Minister Sanae Takaichi's party. Right now, dollar yen, the dollar is marginally down just about 0.3% to trade at about 156 there. We're going to have more from our Sherian in just a little bit. We're also seeing Japanese equities up as well. Gold is back on the board. We've been talking quite a bit over the past few weeks about gold having quite a volatile week last week. As you can see, gold up almost 1% there, back above $5,000 an ounce there. Though last week was quite a roller coaster for precious metals, more broadly. But still, there's quite a bit to pay attention to when you factor in a few of the economic data prints that are going to be coming out this week. Perhaps we still see a flock to safe havens, despite what seems like a bit of stabilization feeding into the markets, at least to start the week. And really quickly, let's just bring you Brent crude. As you can see, down now almost 1% there to trade at about $67.38 a barrel there. We just mentioned at the top there, Middle Middle East tensions potentially easing as we get some insight into some of those talks over the weekend, potentially reducing the concern of supply for Brent and oil more broadly. And I want to bring your attention to this terminal chart really quickly. We didn't talk about it just there, but it's worth mentioning what we've been seeing from Bitcoin, because Bitcoin has bounced off some of the extreme oversold levels, but still it stays well below what we call the so-called Ichimoku cloud levels, which actually mandates risk management. What we're seeing from Bitcoin this morning, it is back above $70,000, but still Bitcoin has had quite a sizable roller coaster few weeks, and last week in particular. But pay attention to these levels that we're talking about here. And in particular, 74,000 and also 78,000 are the two levels to watch very closely for Bitcoin. So that's just a look at what we're watching there with the largest cryptocurrency. Let's get back, though, to our top story, and that is on Japan. Japanese stocks are rallying after Prime Minister Sanae Takaichi clinched a two-thirds supermajority, positioning her as the nation's strongest leader in the post-war era. Asia Trade co-anchor Sherry An joins us now from Tokyo. Sherry, thanks so much for being with us. So walk us through what this landslide victory actually means for the LDP party. This is significant for Takaichi, but also more broadly for investors that have been watching this closely.
Yeah, you've talked about how we're seeing the Japanese yen really holding steady at the moment, a little bit of a rebound after weakening earlier in the session. And of course, Japanese stocks rallying. The Takaichi trade, so-called by investors, where we're seeing really sell the Japanese yen, sell JGBs, but buy stocks, perhaps deepening from now on. A little bit of that priced-in momentum, which had already accelerated in this trade, perhaps leading to some of those mixed moves in the JGB market and also the yen rebounding a little bit. But it's just the fact that, as you mentioned, it was a landslide victory, historic for the ruling Liberal Democratic Party. Prime Minister Takaichi managing to gain that supermajority. What that means is that the lower house election has allowed the LDP to override any veto in the upper house. And it's also the most ever seats gained by the LDP since its founding in 1955. And yesterday was such a snowy day when the vote actually took place, which is quite rare here in Tokyo. I was wondering what the turnout would look like. It's actually slightly better at past 56% than in the previous election of 2024 when the LDP actually lost its majority. So we'll be watching very closely how big of a mandate they have and how much easier it's become for Prime Minister Takaichi and the LDP to pass policies around immigration restrictions that we've been hearing about, a signal from a shift away from Japan's pacifist constitution. But of course, most importantly for the markets, what it means for the economy and its spending plans.
Yeah, and let's just stay on that, Sherry, because this seems like it's potentially a vote of confidence then for Takaichi to move forward on some of these plans. Can you just take us through what we could potentially see as far as economic policies?
We've been very much focused on the temporary suspension of the sales tax on food of 8%. We have seen the JGB markets already react to concerns about the long-term fiscal health of Japan, as we heard from the Prime Minister campaigning on that potential suspension of 2 years, which could cost the Japanese economy more than 5 trillion yen. That's more than $31 billion per year. How will that be funded has been a key question. We heard from the Finance Minister Katayama coming out today saying that the sales tax cut is only on food, is for 2 years, and it will not require additional government bond issuance. That's been a key question plaguing the markets. We'll also be watching foreign policy very closely. This sweeping mandate really giving Prime Minister Takaichi more authority when it comes to how she deals with China as well. Remember, we continue to see heightened tensions around Takaichi's comments on Taiwan last year.
Sherry An, thanks so much for joining us there. Sherry An joining us on our top story there. Let's just stick on markets. Asian stocks have climbed to a record as a broad advance across risk assets took hold. Gold and silver also gaining, though the precious metals were still way off their record highs. For more market insights, let's bring in Peter Kinchela, and he's head of investment services for the UK at UBP, joining us now from Dubai. Peter, let's just start where Sherry An left off off there. And that is, of course, Takaichi's sizable win. Many investors potentially paying attention to what exactly this means as far as economic policies go, and then what that means for the yen. I wonder if you take a look at some of the moves we're seeing at this moment with the yen, is your expectation we see more volatility over the next few days?
Good morning, Jennifer. Look, I think there's a lot going on here. First, I think that we've had a pretty muted move today following the election results. I think, frankly, that was to be expected. The market had really already priced in an overwhelming LDP majority. I think if we look at it with a bit more a bit more altitude, what we can see really is that we're going to get increasing fiscal stimulus in Japan. It's kind of similar to what we saw in Germany about a year or two ago, and in a sense of a big announcement of fiscal stimulus. However, the difference is that the underlying inflation situation in Japan is much, much higher. So what that really means to me is that underlying inflation in Japan is likely to firm, and it means that the Bank of Japan will most likely be able to continue raising rates gradually. So what that means really is that we're likely to see a continued contraction in dollar-yen spreads, and that to me suggests that really we're very much close to the upper end of where dollar-yen is likely to trade. And I can see it definitely trading lower from here over the coming year. And that will reflect both, this front-end steepening, but additionally, more broadly, I would say, a wider dollar weakening move. So to my mind, we're pretty much close to the end of the huge yen weakening phase we've seen since roughly 2013.
But what about when we talk about from a fiscal perspective, because it still seems that there's quite a bit of concern, not just in Japan, but globally, a bit of fiscal concern about what the path ahead for some of these governments look like. How does this factor into your expectation of JGBs?
I think really vis-a-vis JGBs, look, the idea here is that we are seeing, a massive increase in yields, particularly at the longer end of the curve in 20s, 30s and 40s. And really now, when you adjust these for hedging costs, Japanese lifers can now get much better overall returns rather than investing in US Treasuries and then hedging it back to yen. So at the margin, I think this will lead to a lower outflow of funds from Japan, and those funds will simply stay in Japan to a larger extent. So the supply and demand dynamics here, I think, will more or less even out in the sense that you're going to see more domestic capital staying in Japan. So that to my mind suggests that we're not likely to see very significant up moves in yields. Sure, we might get marginal increases, but overall I don't think they're going to be hugely significant from current levels.
Peter, I want to get your take on what we've been seeing with precious metals. Potentially, you say that we could you say that we could see even more of a correction. We saw that gold is actually up right now. Do you believe that there is even more of a correction to come for gold and both silver? And is it a sign potentially of broader weakness for both of these metals?
Sure. I think really what we've seen the correction already. We saw that 10 odd days ago in gold. I think broadly speaking, I'm still extremely constructive on gold. I think we're going to get to levels of around $6,000 per ounce by the end of the year. And the underlying factors for that are pretty simple. You've got sort of ongoing geopolitical tensions, enormous central bank demand, and then very, very robust retail demand. So in a sense, what's really happened here is that the global demand curve for gold has shifted remarkably higher when you've got a background of inelastic supply. So to my mind, really, that suggests we're going to see gold trading at materially higher levels. We've seen the correction. I don't think you're going to see it a lot lower from here. And I think it's worth pointing out, some context. The correction we saw 10 days ago was the first significant correction we've seen since 2020. This has been a remarkable bull market for gold. And all of the underlying factors which propelled it to current levels, they're still very much in play. This was a very overdue correction. And let's be frank, it didn't last longer than 3 days. And that really tells you a lot about the underlying demand story here for gold.
But we heard over the weekend Scott Bessent in the U.S. actually saying that the action that we've seen in gold looks like a classical speculative blow-off. Would you agree with that assessment?
A speculative blow-off, perhaps, yes. I mean, that, you've seen a little bit of the froth being taken out of the market, and certainly that would, that's been reflected in the options market in particular, where you've seen sort of, option volatilities really skyrocketing. At one point in gold, we were looking at 1 month implieds at, above 35%. Which is extremely unusual for gold. So it does seem that the blow-off was, due to, speculative activity. That was especially true in silver. However, I think that correction is now largely done. You've seen sort of, I would say, a lot of the leverage being taken out of that trade. And look, we're now still left with what are very, very constructive underlying fundamentals. So yeah, it was a speculative blow-off, but nothing more than that.
Yeah, and your house view is for $6,000 per ounce by the end of the year. So we'll see how that plays out. We'll leave it there with you. Peter Kinsella, Head of Investment Services for the UK at UBP, joining us there in Dubai. Thanks so much, Peter, for your time and insights. Now, coming up, we speak to the CFO of ADNOC Gas, Peter Van Driel, as the business reports earnings. Stick with us. That's next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Cape Town. ADNOC Gas has reported full-year revenue of $23.5 billion, beating the average analyst estimate. But compared to the year before, that's a drop of 3.9%. However, full-year profit has risen more than 3% year on year. Joining us now is Peter Van Driel, CFO of ADNOC Gas, joining us from Abu Dhabi. So, Peter, thanks so much for joining us, especially on this day. Let's just start here because we did mention you did beat records. What's your expectation for how this sets you up for 2026? Are you expecting continued outperformance given the current volatility that we're seeing, at least geopolitically, and how that's factoring into energy prices more broadly?
Yes, Jennifer, good morning. 2025, we delivered $5.2 billion, whilst the oil prices were 14% lower than the year before. So that means that if you increase your net income by 3% in a 14% lower oil price environment, there's quite some resilience in the company. Now, if we look forward in 26, I believe we will continue to operate in an oil price environment that is somewhat volatile. However, the company is able to continue to benefit from the strength of the UAE demand. Demand in the UAE for our products remains strong. We serve the power sector, we serve the heavy industries, we serve the petchem, soon also data centers. So that is where the balance comes in. We are able to sustain certain volatility in the export market, but the backbone of the company, and you've seen that in 24 and in 25, is the strength of the UAE demand.
Let's just talk about the export market, Peter. And I wonder, how are you balancing in terms of demand for the business, in terms of what you need domestically and what you need as far as some of these agreements that you're seeking in the export market? What is your focus right now for the business?
Right. So we believe that demand for gas remains strong in the coming decades, both in the domestic market and in the international market. If we look at the domestic market, you can see the GDP growth of the UAE, which was 4.8%, being the key driver for that strength. It's also the population growth in the UAE that drives demand for our gas products. Internationally, demand for gas remains strong, with Asia at least 40% demand growth. And we serve with our products, that is LNG, that is LPG, that's naphtha, those markets. So we're betting not just on one market, we see gas demand growth across the board, both within the UAE and in the LNG and LPG and naphtha export markets.
You recently signed an agreement with India. Is your expectation then for more of these agreements to come, just given some of those numbers you pointed out there?
Well, today we have 6 MTPA of LNG export facilities in Abu Dhabi. And under construction is another 9.6 MTPA. That's always LNG. That project will be ready late 28, and the majority of the volumes have already been sold. So about 80% plus has been already contractually agreed with our buyers. The current production, we will continue to see more value from LNG contracts, and there are either longer-term contracts or shorter-term contracts. And we balance that across a number of countries, predominantly in the East, but we also serve our customers, for example, in Europe. So it's quite a wide range of customers, and the customers want security of supply and diversification of their suppliers as well. And we're well positioned for that.
Can you definitively say which market will be the biggest market for LNG and for ADNOC over the next 5 years? Could it be Asia? Could it be Europe? Sitting where you are right now, what does it look like?
From where we are, Asia is definitely very important. Countries like India, for example, you see a huge growth in energy demand. And within the mix, you see that the share of gas is growing. So it's not just the size of the cake getting bigger, but it's also the part in the energy mix that gas fills is growing. Then we've got our markets in China. We go all the way to the east to more traditional markets like Korea and Japan. Those markets we serve. And then there also are a number of new entrants coming to the market. Think about countries like Philippines, Thailand. So the LNG market, longer term, is very healthy in terms of supply demand. Shorter term, you may see some oversupply, but we focus on the longer term. That is how we position the company for growth.
We'll leave it there with you. Peter Van Driel, ADNOC Gas CFO. They're joining us on earnings day from Abu Dhabi. Peter, great to speak with you. Thanks again so much for your time this morning. Now, coming up, Iran has described Friday's nuclear talks with Washington as a step forward. We have all the details a little bit later in the show. Stick with us. This is Bloomberg.
bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Cape Town. A Hong Kong court has sentenced former media mogul Jimmy Lai to 20 years in prison for conspiring to collude with foreign forces and a separate sedition conviction. The judges said Lai was, quote, the mastermind of the conspiracies and therefore warranted a heavier sentence, with the punishment being effectively a life sentence. Thailand's ruling Conservative Party has clinched a solid election win, marking the first victory this century for a party aligned with the country's royalist establishment. Preliminary results show the Boomjai Thai party is set to secure 191 seats out of a possible 500 in the House of Representatives. Meanwhile, the pro-democracy People's Party is on track for 115 seats. And the political future of UK Prime Minister Keir Starmer is in the balance over the appointment of Peter Mandelson as ambassador to the US. That's after revelations over Mandelson's past ties to Jeffrey Epstein. Starmer's chief of staff, Morgan McSweeney, has quit, saying he takes full responsibility for advising Starmer to make the appointment. It leaves the Prime Minister increasingly exposed as calls grow for a change at the top. And China's central bank has extended its gold buying streak to 15 months, even as bullion's record-breaking rally was curbed last month by a sharp sell-off. Data shows the PBOC's holding rose last month by 40,000 troy ounces. U.S. Treasury Secretary Scott Bessent has blamed Chinese traders for last week's wild swings in the gold market.
The gold move, things have gotten a little unruly in China. They're having to tighten margin requirements. So the gold looks to me kind of like a classical speculative blow-off.
A little bit unruly there from Treasury Secretary. Let's look at markets. Not unruly, as you can see, a bit of stabilization, at least for futures. As you can see, a bit of green on the screen for U.S. equities, continuing on from some of that momentum that we did see last week to end the week after what was quite a volatile few days over the past few days. Of course, that was in response to the AI trade, though we did see most of the major indices ending the week in the green. Euro Stock 50 futures also looking like potentially a positive start to the week, up about 0.4% there, though quite a bit of economic data that we are paying attention to, at least in the U.S., and plenty to watch for how precious metals are affected as such. Coming up, Saudi Arabia is looking to fine-tune its diversification push and draw more private capital. We'll bring you our conversation with the kingdom's finance minister next. This is Bloomberg.
Crises.
two essential crises, and for both it's now or never: democracy and climate. And they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers. Insight with Haslinda Amin, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. Victory rally. The Nikkei 225 jumps and the yen edges higher after Prime Minister Sanae Takaichi's ruling LDP achieves the biggest post-war victory for a single party in a Japanese general election. Oil declines as tensions in the Middle East ease. Iran is describing its nuclear talks with Washington as a step forward, with another meeting set for this week. And we hear from Saudi Arabia's finance minister, Mohammed Al-Jadaan, as the kingdom plans to release an updated strategy for its $2 trillion economic diversification agenda. It's just gone at past 9:30 a.m. across the Emirates. 9:30 here in, it's actually 7:30 here in Cape Town. I'm Jennifer Zabasaja in for Jumana Bersechi. And let us just talk about that geopolitical development that we did get over the weekend, and that is about Iran saying that it has agreed with the U.S. to continue indirect talks to de-escalate tensions and avert a military confrontation. Tehran described the first day of talks being held in Oman as positive. Stuart Livingston-Wallace, Bloomberg's head of Middle East and North Africa, is joining us now in Dubai to break it all down for us. So, Stuart, are we close to a diplomatic settlement between Iran and the U.S.? This story has whipsawed a bit over the past few weeks and months. Where would you say we're at right now?
Yeah, good morning, Jennifer. I mean, the short answer is it's very hard to tell. Certainly the rhetoric that we've seen from both sides coming out after those talks in Oman on Friday is significantly more positive than we'd seen in sort of the run-up to that is in the days running up to those meetings. However, it's still not clear where exactly the red lines are here. We seem to be focusing those talks around the nuclear issue more broadly, but no one quite knows what does that mean. Does that mean nuclear weapons? Does that mean nuclear enrichment? What about the very large stockpile of highly enriched uranium, that is uranium that has the potential to be upgraded even further to sort of bomb grade? And then there's sort of the outstanding questions of what about the missile program? What about Iran's support for its proxies? So there's a huge number of unanswered questions here, but they're still talking, and that's maybe the main thing to focus on.
Yeah, and notably, we're seeing the Israel Prime Minister actually heading to Washington. That seems like it could be a good sign. Do we have any more details about what exactly this trip might entail?
I mean, I think in terms of the comments that we had come out of his office yesterday, he's very keen to impress upon the US president that these talks must go far beyond the nuclear question, the nuclear file. So he's very keen on adding Iran's missile program and also its support for the regional proxies to those talks. He's saying, look, all of that should be one big question, because that, as far as Israel is concerned, is the full scope of the threats posed by Iran. So I think he's going to be pushing Trump for a much tougher line in those talks, and to make sure that the talks don't just focus on the nuclear file.
Stuart Livingston-Wallace, Bloomberg's head of Middle East and North Africa, joining us there. Stuart, thanks so much. A busy week ahead for you. Appreciate you joining us. Let's get back to our top story, though, and that is on Japan. Japanese Prime Minister Sanae Takaichi's historic election victory is sending assets in Tokyo soaring. For more, we're joined by Paul Dobson, our executive editor for Asia Markets. Paul, thanks so much for joining us. So we were speaking a bit earlier about how we're seeing a bit of muted activity as far as dollar-yen goes right now. What are you noticing right now with some of the market activity after this election win?
Yeah, hi, good morning, Jennifer. So the market, as you're saying, is taking it genuinely positively. And I think because of the force and size of the resounding victory, especially for the stock market, this is being seen as a real endorsement of the sort of Takaichi trade, the idea that Takaichi will do more to encourage growth, to fuel the economy, to reform the stock market, and therefore to boost the value of Japanese assets and companies. And that's why we're seeing the stock market do so well. But what I think is more interesting maybe is that the yen is relatively stable, as you said, and even the bond market, although there's some twitchiness there, isn't giving us a very big sell-off. So the market holding to the belief that maybe issuance won't be too overwhelming, even if she does have these plans to increase the spending, that the market will be able to absorb it maybe with that stronger leader in place. Likewise, the yen, you might have expected to weaken if the Takaichi trade played out the way that it has done previously. People may have been expressing their concern about Japan's debt load and about the way that it would manage it. But the yen has held in place as well. And I think that, we did hear from the finance ministry officials saying, well, with a bit of a warning, we'll address the market if we need to, but remember, we've had these talks with the US about the currency. So giving that idea that they're there to support the yen if needed. But in any case, it hasn't really gone to those levels at this point.
If we take a look at assets across the board more broadly, Paul, we're seeing a bit of risk appetite setting in, and commodities as well. We were mentioning gold surging right now. How would you assess the current sentiment as we start this Monday session?
Yeah, I think you're right, Jennifer. I think risk on, and I think I would describe gold and silver at the moment as being a risk asset, not a haven asset. So when they're performing strongly, it tends to lead the way for the equities market to have a good day as well. Even Bitcoin, we're seeing a little bit of a rebound after the heavy drawdown that we saw last week as well. So for whatever reason, the market seems to have recovered its poise for now. We had a really good day in US markets on Friday, and that has fed through into sentiment for Asia. So it's not just Japanese stocks that are flying high, but South Korea as well, and pretty much all of the regional gauges are up and enjoying a more positive kind of feeling to it. It feels very unstable at the moment in markets. The big volatility and swings we're seeing backwards and forwards as people try to tease out what exactly the AI trade looks like. How do you play it? Is it going to succeed? Are these companies strong enough to push through the plans that they have? But into the start of the new week, the market is certainly feeling a little more optimistic than it was in the middle of last week.
Yeah, of course. We'll wait to see how that plays out as we get more earnings throughout the week. Paul Dobson, our executive editor for Asia Markets. Paul, thank you so much for walking us through some of your analysis there. Now, Saudi Arabia plans to release an updated strategy for Crown Prince Mohammed bin Salman's $2 trillion economic diversification agenda as the kingdom adjusts its policies and spending priorities amid fiscal pressures. In an interview with Jumana Bersechi, Finance Minister Mohammed Al-Jadaan said Saudi Arabia will continue to reprioritize and rework policies.
It's not only the GDP, it's the GDP, it's the inflation that is being put in place. It's around 2%. Unemployment in its lowest level. Women participation in the workforce is the highest level. and a lot of activities in the small and medium enterprises. We have seen significant increase in new businesses establishing in Saudi. All of this actually brings a lot more consumption into the economy and more investment, which we are likely to see this in the medium term continuing at this level. And we are quite comfortable, but not complacent. We continue really to reprioritize, rework our policies, making sure that we enhance as we go to ensure that we enable the private sector to lead the economy.
Okay, so feeling good about the outlook for this year. What do you think the biggest risk is right now to the Saudi economy?
I think there isn't one specific risk that I can talk about, but the multiple shocks that we see globally will need to be watched very carefully, and you need to make sure that your policy is adjusted to deal with these shocks. And if we avoid complacency, which we are very much avoiding, I think we will be in the right track. It's not free of challenges. The world is the uncertainty world, and you just need to make sure that you build the resilience within the economy to deal with this uncertainty.
So let's talk about the transformation that the Saudi Arabian economy has undergone over the last decade. And there's been lots of talks, reporting recently that there's a certain reprioritization of focus that is also taking place as you look ahead to the next 5 years of Vision 2030. Walk us through just how those priorities are going to be recalibrated.
I spoke about this, Jumana, before, and the idea is when you have a 15 years plan, you will need to make sure that you adjust these plans as you go, because a lot of things could happen. And we have seen COVID-19, the inflation, monetary tightening, trade fragmentation, geopolitical tensions. And on the other side, you have seen a technology revolution that did not exist when we started Vision 2030. So we needed to adjust our plans. Our North Star is very clear. We need to diversify our economy. But the way we go about it is adjustable. And what we have seen is we have shifted certain projects that we scaled down, certain projects that we actually expanded, certain projects that we put on hold. Key reason for this is you wanted to make sure that you don't do too much at the same time, because that overheats your economy. You didn't need to do too much at the same time because your private sector will not be able to catch up. You need to make sure that your private sector is actually leading these activities. And you need to ensure that your people are able actually to capture the value that you are bringing onto the table. So reskilling, adjusting your education system, etc., that will enable the people to actually benefit from.
What are some of the main lessons you learned from the early implementation of the vision?
A lot has been learned. I can tell you, ensuring that you have a very aligned government is key. When we started, there was a lot of efforts to make sure that as a government, you understand exactly what you need to do and you are aligned. You coordinate rather than working in silos. That is very critical. The second is mobilizing your people. Unless you talk to your people and explain what you are doing and why you are doing it, and you show them benefits in a very short period of time. And we have seen that in the women participation. We have seen that in housing ownership. These are things that touches people immediately, and they need to see it. They need to see the benefit and mobilize them so they embrace the change and accept some of the difficult decisions that you need to make throughout this journey.
Yeah. Are you going to be releasing a formal updated strategy for the next 5 years? Will there be a formal plan that's discussed?
Yes, and we are about that. I mean, we started this week within the government in a wider discussion to basically communicate what is the next 5 years plan, which is basically just doubling down on what makes an impact and execution and making an impact. I've said during the budget, our key focus is ensuring that we double down on tourism, we double down on manufacturing and logistics, technology, and ensuring that we provide the basic service. So the power, the energy generally in a wider context, water, and water services.
I want to ask you about the budget deficit forecast for this year. You're targeting a budget deficit of 3.3% versus 5.3% last year. If the budget overshoots again, how will you plan to fill that gap? Would you resort to the international markets?
What we have done is, I think for the last at least 4 years, we started to publish 3 scenarios with the budget. And despite the fluctuation that you have seen last year and the years before, and our revenues, we have not actually been lower than what the lower case in our scenarios. And I don't think this year would be an exception. And we have a plan for it in terms of how we are going to fill the gap should we reach the stage where we are going to the lower scenario of the 3 that we have announced. So I'm not really worried about that. We announced our debt plan for this year, and we are unlikely to go to the public market with more than what we have announced. So we are using alternative financing for any additional financing that we may need.
That's Saudi Arabia's Finance Minister Mohammed Al-Jadaan speaking with Bloomberg's Jumana Bersachi there. And you can explore live streaming news and interviews, as well as all Bloomberg TV shows, documentaries, reporter analysis, and more in one place. Check it out at bloomberg.com/videos. All right, coming up, after an underwhelming 2025, could IPO deal flows in the Middle East come surging back in 2026? That's next. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Anne-Marie Hordern in Davos, Switzerland, and this is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Cape Town. The fate of a few major IPOs in 2026 will determine whether Middle Eastern equity capital markets can recover from their weakest showing in 5 years. Middle Eastern IPO volumes failed to breach the $6 billion mark in 2025, with activity falling to the lowest levels since the pandemic. Deal flow was hampered by a string of soft debuts, a rebound in bigger markets, and anemic oil prices. Joining us to discuss this is Sumaya Al-Jaziri, Assistant Vice President of Research at Seco Bank. Sumaya, thanks so much for your time. So we just mentioned it there. 2025 was difficult for Gulf IPOs. What is your expectation right now as we look ahead to 2026? Is it setting up to potentially be a bit more promising?
Good morning, Jennifer, and thank you for having me. When we talk about Gulf IPOs, it's important to focus on the largest market within the GCC because it has seen the largest part of the IPOs. And here I speak of Saudi Arabia, the Saudi market in particular. Now, it's not to speculate or foresee what's going to happen in the future, but to put things into context, the recent reforms that have been implemented in Saudi Arabia, we see them as a catalyst and perhaps as an important factor, meaningful factor that can contribute in enhancing the IPO ecosystem in Saudi Arabia. And that is due to, generating higher participation, higher IPO demand, and, even better pricing, and therefore better IPO trading. And this is where we see this in a positive light. It comes in tandem with the reforms that have been implemented in Saudi Arabia. Because capital follows reform yeah.
Go ahead.
Yeah, I was just going to say that, capital follows liquidity and liquidity follows reform.
Do you see some of these reforms then being broad-based? Will all sectors then benefit from some of the reforms instituted in Saudi, or will it be more specific potentially to tech like we've been seeing in some of the other markets?
Indeed, I think these reforms and, they are especially the latest market signaling that has, come through in the last couple of weeks, especially what has been reiterated by the CMA's board member in New York, reaffirming that there is ongoing study of full market liberalization or potentially either lifting the 49% cap or raising it. And this signaling is what we consider a follow-through, and it's viewed in a positive light. It gives the market confidence and reassurance. And what we see from this is also the ultimate benefits on the sectors, where I categorize them into two buckets. The liquid sectors, or what we call the liquidity leaders, and then we can call them the Vision 2030 enablers. And within the liquidity leaders at the forefront, you have the banking sector. Names like SMB and Al-Rajhi would be at the top of the beneficiaries from such reforms. Indeed, and within the Vision 2030 enablers, you have the telecom sectors, you have the healthcare sectors. And, this is not to just, be exclusive to those. Generally, by and large caps, index heavyweights will be the largest beneficiaries. And in addition to that, as well as those companies that are potentially to be included in global indices or could potentially benefit from upgrades. So all in all, these are the ones we see benefiting from further reforms.
Sumaya, just on that point, we have some Bloomberg reporting out this morning, which indicates that some of the banking sector is potentially urging Saudi Arabia's markets regulator to rethink potentially giving retail investors a larger share of IPOs just initially. I wonder if you have any thoughts on this, and potentially if that will help at least initially with some of the activity for IPOs in 2026.
Look, any room for increasing participation and, addressing the demand that exists on IPOs would be positive for the general performance of IPOs. And so if you can allow for the increase of retail investors, and there is, some demand that warrants that increase, then it should be a positive contributor.
And so potentially then that sets up more options then for retail investors moving forward. I mean, how does this shape out for the domestic community and also then for international investors who are looking to some of these companies and investing into the market?
I think we should look at this and also in relation to what has been implemented, allowing, there's removing limits on participation from foreign investors. And so perhaps what is being looked at here is, increasing the scope of retail investors that could potentially include foreign retail investors. And this would perhaps benefit the performance of IPOs. All in all, what you want to make sure is having solid participation that reinforces IPO demand going forward in the future.
We'll leave it there with you. Sumaya Al-Jaziri, Assistant Vice President of Research at Seco Bank, joining us there. Thank you so much, Sumaya, for your time and for your insights today. For more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Plenty more news ahead. Stick with us. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Angola is reportedly looking to take a 20 to 30% stake in Anglo American's diamond unit De Beers. Reuters reports the proposal is being discussed with other diamond-producing nations on the continent. Angola previously submitted a bid for a majority stake in De Beers in October of 2025. Zimbabwe has secured a 10-month staff-monitored program with the IMF, seen as a key step towards clearing billions of dollars in debt arrears. The deal is intended to rebuild policy credibility and support talks on debt restructuring. Zimbabwe has been locked out of global capital markets since 1999 and is seeking to restructure about $21 billion in loans. And South Africa is withdrawing its troops from the United Nations peacekeeping mission in Congo as the country seeks to realign its resources. President Cyril Ramaphosa says the country will work on exact timing, though the withdrawal will be completed before the end of 2026. Now, let's just take a quick look at your markets. As we were mentioning, we are seeing a bit of positive momentum continuing from the Friday session on Wall Street. We did see some of the major indices closing up on the week, despite some of the volatility throughout the week, though quite a bit of earnings ahead in the U.S., as well as economic data to pay attention to. And Europe, Eurostock 50 futures are looking to start the day up as well, up about 0.5% there. That's it for Horizons Middle East and Africa. I'm Jennifer Zabasaja in Cape Town. Stick with us for Daybreak Europe. This is Bloomberg.
we are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Victory rally, Japanese stocks surge and the yen edges higher after Prime Minister Sanai Takaichi wins a supermajority and a powerful mandate for her spending plans. Starmer, meanwhile, is under strain as the UK Prime Minister's closest aide quits amid controversy around former US Ambassador Peter Mandelson. We'll get the view from the Reform UK Deputy Leader, Richard Tice. Plus, easing tensions. Oil declines after Iran describes its nuclear talks with the US as a step forward. Well, happy Monday. Welcome to a new week. It's a big one when it comes to data, when it comes to earnings, and when it comes to geopolitics. But the market picture looks like this. Off the back of Sanai Takaichi's election victory, we have stocks powering to a fresh record on the Nikkei 225. So the Takaichi trade in full force, at least when it comes to equities. But you have the yen strengthening against the dollar. Japan's currency czar saying that he's got a high sense of urgency as he's watching these markets. The dollar weakness, though, powering gold higher. We are past that $5,000 an ounce level once again, up 1.5%. Now, we've got a lot of risk on the docket for the week ahead. We have a raft of European bank earnings with Barclays, Commerzbank and NatWest Group reporting. We'll also bring you the UniCredit numbers in just a moment. And then stateside, we've got a load of data to bring you as well, delayed as it is because of that US government shutdown. And so we're expecting payrolls, CPI and retail sales. But then on Friday, we have the Munich Security Conference. Who can forget US Vice President J.D. Vance's comments at that summit this time last year? Of course, NATO and the future of the war in Ukraine will be on the agenda. Now, let's get you those breaking earnings from UniCredit. The CEO, Andrea Orcel, saying that he's much more focused on the existing business. What you're seeing here is fourth quarter net income coming in at 2.17 billion euros, so beating the estimate of 1.77 billion euros. Net interest income for the fourth quarter coming in at 3.43 billion euros. Also beating the estimate of 3.135 billion euros. And UniCredit saying that it's going to return about 50 billion euros to investors over the next 5 years. A strong set of earnings, and we'll dive into those as well. But let's set you up for the day ahead. We begin with Japanese stocks rallying to fresh record highs after a resounding win by Prime Minister Sanai Takaichi. Let's go to Winnie Xu now in Hong Kong for the market reaction. Winnie, what are you watching?
Yeah, morning, Lizzie. Like you mentioned, it is that landslide victory by Prime Minister Takaichi that's lifting Japanese stocks today with that revival of the Takaichi trade as investors bet that her key spending areas like AI, tech, energy will be able to get a boost. And hence you're seeing Nikkei 225 here up more than 4%, the most since April. And that is taking both Asian stocks and also Japanese benchmarks to fresh record highs. Now, you would also wonder why the Japanese yen, which should have been weakening, is actually strengthening, up 0.5% here. And as you mentioned, it is some of these warnings from the chief currency officials that they are closely watching the moves in FX with high sense of urgency, and also the finance minister saying that she will communicate with markets if needed. Now, also flip the board and take a look at what's going on in the JGB space, because we're also seeing some divergence moves earlier today, especially when it comes to, for example, on the longer yield, a longer term yield actually stabilizing a bit, because investors are now actually expecting that Takaichi now will not have to really aggressively push for those spendings because she has won that super majority. However, when you look at the shorter end of things, a bit more, rising a little bit more, that's also coming after how right now that she is able to push for those spending, inflation will likely going to continue to rise. And that will lead the Bank of Japan to be able to still continue with that rate hike path. And for now, markets, when it comes to the swaps, we are pricing in an 80% of a hike by April. Also flip the board and take a look at what are some of the sectoral moves when it comes to that victory. And yes, obviously with tech and also defense being those key sectors of her spending, we are seeing these related stocks up some 10% or so. But also when it comes to the chip stocks, it's also supported by those comments by NVIDIA's Jensen Huang over the weekend saying that these capex spending are actually appropriate and sustainable. Also, we've got those local reports saying that Samsung will be mass producing some of these HBM4 chips from Lunar New Year. Back to you, Lizzie.
Really great stuff. Thank you. That's Winnie Su in Hong Kong. Well, let's dive into the Japanese politics now. Sanai Takaichi winning the biggest election mandate of any Japanese leader since World War II. Now, back in October, she struggled to wrangle enough seats in Parliament to become Prime Minister, but now her Liberal Democratic Party controls 2/3 of seats, giving her freedom to increase defence spending and cut the sales tax on food. Let's get more with Bloomberg's Sherry Arn. She's in Tokyo for us. Sherry, when it comes to domestic fiscal policy, what's Takaichi likely to do with this big win, and really, how fast?
Lizzie, you said it. This was a real historic victory for Prime Minister Takaichi. We're talking about not just the 2/3 majority achieved, but the supermajority that allows the Liberal Democratic Party to override any vetoes coming from the upper house. So in question right now, what happens to that promise of the sales tax cut on food that the Prime Minister put forward during the campaign season? That's an 8% tax that she said will be suspended for 2 years. You talked with Winnie about those JGB yields stabilizing on the long end. Perhaps a lot of it was already priced in, but the concerns about the long-term fiscal health of Japan had led to partly that JGB meltdown that we saw just a few weeks ago with yields rising to record highs. Now, Finance Minister Katayama had to come out this morning to explain further that this is a sales tax cut only on food, only for 2 years, and it will not require additional bond issuance. But the key question by markets is, how will you fund it otherwise? Because we're talking about a cost that will be more than 5 trillion yen. That's more than $31 billion per year. Not to mention that she has already announced billions of dollars in a huge stimulus package.
And Sherry, how should we interpret the currency comments this morning?
We've heard really from the likes of Atsushi Mimura that Winnie alluded to, the chief currency official here in Japan, talking about how coordination with the U.S. continues and that they're watching the yen with a high sense of urgency. These are some of that rhetoric that you get from policymakers here in Japan, signaling potential intervention to come. But of course, we had also heard from Prime Minister Takaichi herself, as the votes were being counted, that she wanted to rectify and clarify her comments on the benefits benefits of the Japanese yen, which really sent the yen plunging just last week. The incredible pressure that came when she talked about some of the benefits to the export industries. That what she meant to say was that the economy in Japan, she wants to make it strong enough that it can withstand any currency fluctuations. But given how anxious really the markets have been around the Japanese yen on this large expected fiscal spending, not to mention that Takaichi prefers a more loose monetary policy coming from the BOJ, her comments have really been in focus about what really do Japanese policymakers want when it comes to the strength of their currency.
Sherry, thank you so much for your reporting this morning. That's Bloomberg's Sherry Yarn out of Tokyo. I just want to bring you a scoop that's broken across the Bloomberg terminal just now, which is that Chinese regulators have advised financial institutions to rein in their holdings of US Treasuries. They're citing concerns over concentration risks and market volatility, and they're urging banks to limit purchases of US government bonds and instructing those with high exposure to pare down their positions. Now, the directive doesn't apply to China's state holdings of US Treasuries, but of course the worries are really echoing those made by governments and fund managers elsewhere in this brewing debate about the safe haven status of US government debt and the appeal of the dollar. You are seeing on your screen the moves in markets, Treasuries extending their losses on this report, yields higher across the curve. You've got the 10-year Treasury yield now up 4 basis points at 4.24%, and the dollar edging lower off the back of this report as well. So the Bloomberg Dollar Spot Index is down 0.2%. But still ahead on Daybreak Europe, as speculation swirls about the future of Prime Minister Keir Starmer, we'll be speaking to the Deputy Leader of Reform UK. That conversation with Richard Tice later on this hour. But first, what's next for Japan's markets following Sanai Takaichi's landslide election victory? We'll dive into that with our next guest. This is Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Hazlinda Amin, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
Where's the emphasis, on headline payrolls or on the unemployment rate?
I'm focused on the unemployment rate, as is the market.
Wednesday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
What we're seeing is certainly a growing labor force.
A labor market that actually could be improving.
The January Jobs Report, Wednesday on Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:12 a.m. here in London. Now, the yen is strengthening after Sanai Takaichi's landslide victory in Japan. moving away from the intervention zone, some might say. Well, let's dive straight into the market reaction with Carol Kong, economist and currency strategist at Commonwealth Bank of Australia. Carol, thanks for joining us. Your note this morning says the Takaichi trade is here to stay. Should we just look past the yen strengthening this morning?
Look, dollar yen did initially rise off the back of, media reports of a big LDP win. That reaction wasn't surprising because markets were pricing in more expansionary fiscal policy and probably slower BOJ rate hikes. Dollar yen did, reverse some of its gains in the following hours, but I think those, was probably driven by concerns about FX intervention. We've got some renewed warnings from MLF officials with the chief currency chief saying that, the MLF is again watching the currency market with a high sense of urgency. So that probably, caused speculators to move back, on the sidelines for a while. But I don't think the reversal in dollar yen would last just because fiscal policy will loosen under an emboldened Takaichi administration.
Well, yeah, how do you interpret those comments from Matsushi Momura? Does it signal to you that maybe an intervention isn't far away?
Look, the MLF and officials from different Japanese authorities have been warning about the currency for quite a while. They have been pretty clear that they are uncomfortable with the current level of the, Japanese yen. I think, under a Takaichi administration, the risk of direct intervention has definitely risen. And judging by warnings by, MLF officials, we are definitely getting closer to an actual intervention. People think that there is a so-called line in the sand for the MLF, with some people saying that the 100 zone could be the trigger for MLF officials. But I don't really think the MLF is really targeting a specific level. They care more about the speed and disorder of the moves rather than a specific level. So I think, if the yen does weaken sharply from here, the risk of a direct intervention will definitely rise.
Well, if Takaichi goes back to welcoming yen weakness, could we see it testing 160 per dollar, for example?
Yeah, look, her comments earlier about, a weak yen favoring exporters really sparked some speculation that Takaichi may welcome further yen weakness from here. But I would note that she did pare back her comments and said that she didn't really specifically highlight the positives about a weak yen. So I think ultimately, Takaichi will have to accept a weaker yen because, if she does want to pursue looser fiscal policy and probably, put some pressure on the BOJ to slow rate hikes, she will ultimately have to accept a weaker yen, and it will just increase pressure for the MLF to slow the rise in dollar yen.
Do you buy this idea that because it was a decisive win, Takaichi might not push her fiscal policy through as aggressively, that she might not want to upset markets and indeed won't need to upset markets as much?
I do think that, Takaichi will continue to press ahead with her reflationary policies because she would interpret a landslide win by the LDP as strong public endorsements of her policies. So I think she would definitely go ahead and, deliver on those promises of looser fiscal policy. But ultimately, the markets, especially, the FX and bond markets, will be the biggest constraint on her fiscal expansion plans. If the yen does weaken further and JGB yields rise further, then ultimately, Takaichi will have to pare back those stimulus plans in order to appease market participants.
So where does it leave the Bank of Japan? When do you see the next hike?
Our base case continues to be one more 25 basis point rate hike by the Bank of Japan in June. Now, that's fully priced by markets. And I note that markets have been, recently shifting their pricing towards an earlier rate hike in April, probably because of the weakening in the Japanese yen. And I do note the risks are definitely skewed to an earlier rate hike because BOJ is getting more concerned about the weakness of yen passing through to imported inflation. But, we have to wait and see what the BOJ thinks the terminal rate is, or I should say the neutral rate. The BOJ has recently been playing down their estimated neutral rate range of 1 to 2.5%. And I think that suggests that, the BOJ may be trying to, shift their view of neutral upwards. So that means that the current rate of 0.75% may be still a little bit too accommodative for the economy. So the risk is definitely a larger rate hiking cycle than what we currently expect. But our base case is one more 25 basis point hike in June for now.
And maybe if you see the Ministry of Finance leaning towards issuing more shorter data bonds, you could see more flattening than steepening of the curve, maybe. Carol, great to get your insights this morning. Carol Kong, economist and currency strategist over at Commonwealth Bank of Australia. Well, coming up on this programme, oil slides on an easing of tensions in the Middle East as the US and Iran hold talks. We'll bring you the latest next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome back to Bloomberg Daybreak Europe. Oil prices falling as tensions in the Middle East ease after Iran and the US engaged in indirect talks on Friday in Oman. Iran said it agreed with the US to continue these discussions to de-escalate tensions and avert a military confrontation. Let's get the latest now with our Middle East Managing Director, Onur Ant. Morning, Onur. Just walk us through what the two sides had to say about the outcome of these talks.
Well, the brief discussion on Friday in Oman ended up basically allowing both sides to say that the discussions provided a basis for a continuation of talks. Both the Iranian foreign minister and president said as much, while on the US side, we saw that the President Donald Trump saying that not only he was under the impression that Iran wants a deal, in his own words, very badly, he also said that a limited deal on the nuclear issue alone could be acceptable for the U.S. And both of those commentary from both capitals in this conflict were taken as a sign that there is the immediate threat of a military confrontation. Another war in the Middle East between the two countries is now less of a risk than it was until a few days ago.
And Honor, we know that the Israeli Prime Minister Benjamin Netanyahu is going to be visiting Washington on Wednesday to meet with President Trump. How much pressure is he putting on the White House to broaden the scope of these talks beyond Tehran's nuclear program?
Well, this is a serious crack that appears to be emerging between the two sides. As I said, U.S. President Donald Trump said that a limited deal, a somewhat more limited deal, concentrated on the nuclear issue alone could be acceptable for the U.S. But Israeli officials have made it clear from the get-go that that is not what they're seeking. Even after the Oval Office meeting between the U.S. and Israeli leaders were announced over the weekend, we have seen that the Israeli Prime Minister's office made a statement saying that they were seeking to push the U.S. to seek a broader deal that would first limit Iran's long-range missile capabilities and also force the Islamic Republic to end its support for the so-called Iran Axis. That is a group of militia across the Middle East that are supported by Tehran and are openly hostile to Israel. So yes, Israeli Prime Minister Netanyahu will be pushing for this when he meets Donald Trump on Wednesday in Washington, D.C., Lizzie.
So, Honor, as we start a new week, where does it all leave oil?
Well, we have seen that the oil has been coming down a little bit on signs that the risk of an imminent war between the two sides has somewhat subdued. But needless to say, oil is still up more than 10% when you compare it to where the prices were at the beginning of the year. So investors are still pricing in the possibility that these talks might go nowhere and a military confrontation between Iran and the U.S. might be inevitable in the near future.
Honor, thanks for the reporting. That's Honor Ant, our Middle East Managing Director. Well, now to some other top stories we're following for you this morning. A Hong Kong court has sentenced pro-democracy former media mogul Jimmy Lai to 20 years in prison. It's the harshest sentence to be given under the Beijing-imposed national security law. The judges ruled that Lai was the, quote, mastermind of the conspiracies and therefore warranted a heavier sentence, with the punishment being effectively a life sentence. Elsewhere, Thailand's ruling Conservative Party has clinched a solid election win, marking the first victory this century for a party aligned with the country's royalist establishment. Preliminary results show that Phum Jai Thai Party is set to secure 191 seats out of a possible 500 in the House of Representatives. Meanwhile, the pro-democracy People's Party is on track for 115 seats. And socialist Antonio José Seguro has won Portugal's presidency, defeating far-right challenger André Ventura in a runoff vote. Projections from public broadcaster RTP show Seguro taking up to 73% of the vote. The results expected to ease tensions with the centre-right government and reduce the risk of institutional confrontation. Meanwhile, here in the UK, the jobs sector is starting to stabilise as businesses emerge from a period marked by speculation over higher taxes. That's according to a survey conducted by the Recruitment and Employment Confederation, which is closely watched, of course, by Bank of England rate setters. Employers continued to scale back hiring for permanent roles in January, but the pace of decline was the slowest in 18 months. Well, those are some of our top stories from around the world. Let's check in on these markets as we start the week. Here's a picture when it comes to stocks. And when we're looking at the MSCI Asia Pacific Index, under the hood of this, we have Japanese equities at a record high. This, of course, off the back of Sanai Takaichi's election victory. So the Nikkei 225 powering the broader index higher. The Takaichi trade in full force, at least when it comes to equities. And on both sides of the Atlantic, we've got futures pointing higher. Of course, we had lots of concerns about tech valuations at the end of last week. The Dow pushing above 50k on Friday, and so a volatile one because of those tech concerns, but in the green this morning. Now flip the board over to the cross-asset picture, and we continue to watch the Japanese story. When it comes to the currency reaction, we actually have the yen strengthening against the dollar this morning. So 156 per dollar is where we trade. As we've been hearing from our reporters, perhaps this is because the victory was priced in, but also because we've been hearing commentary from the currency czar saying that he's watching these markets with a high sense of urgency. We also have the 10-year Treasury yield at 4.23, minding the long end of the Japanese curve as well, but of course with a raft of US economic data to come later on this week. Just finally, keeping an eye on the pound, it took a blow from the political speculation around Keir Starmer's future and that dovish vote split at the Bank of England last week. We also now factor in the resignation of Starmer's closest aide, Morgan Sweeney, a story that we'll be diving into later on this hour. But coming up, we'll monitor the Japan story with the yen in focus as Prime Minister Takaichi's big election win sets the stage for further fiscal stimulus. So more on that next, and UK politics. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Victory rally. Japanese stocks surge and the yen edges higher after Prime Minister Sanai Takaichi wins a supermajority and a powerful mandate for her spending plans. Here in the UK, Starmer's under strain as the Prime Minister's closest aide quits amid controversy over former US Ambassador Peter Mandelson. We'll get the view from the Reform UK Deputy Leader Richard Tice. Plus, easing tensions. Oil declines after Iran describes its nuclear talks with the US as a step forward. Well, a very good morning. It's 6:30 a.m. here in London. Welcome to the programme if you are just joining us. And your markets picture looks like this. We have stocks in Japan at a record high off the back of Sanai Takaichi's election victory. The Takaichi trade in full force, at least when it comes to the equities picture. But the yen actually strengthening against the dollar this morning. Could it be because the victory was priced in? Could it also be because of those comments from the currency czar saying that he's monitoring these markets with a sense of urgency? So 156 per dollar is where we trade. The dollar weakness actually helping to power the yellow metal. Gold higher this morning. We're above $5,000 an ounce, again after a historically choppy week last week. So keep an eye on that. On the front pages this morning, we are looking at the Financial Times leading on UK Prime Minister Keir Starmer facing a crunch week to try and hold on to power. So this is after his Chief of Staff, Morgan McSweeney, quit, taking responsibility for that decision to appoint Lord Peter Mandelson as ambassador to Washington. But in fact, our UK political editor Alex Wickham is reporting that number 10 officials are bracing for cabinet ministers to privately tell the Premier to stand aside or threaten their resignations if he doesn't. So we'll keep an eye on that. The Telegraph running with that angle in particular. it's reporting that leaders of 3 trade unions have also called for the Prime Minister to quit as well. And this is the story that's on the front page of The Guardian too. They've got Starmer's allies hoping that McSweeney's departure is going to draw a line under the Mandelson fiasco. So a bit more of an optimistic note there. But you can get a roundup of all of these stories and all the global stories you need to know to get your day going by looking at today's edition of Daybreak, which, of course, Terminal subscribers can find by going to DAYB Go. Well, let's dive back into the Japanese story. Our top story this morning, Japanese stocks rallying to a fresh record high after a resounding win by Prime Minister Sanai Takaichi's ruling party. The yen has edged away from the danger zone now for intervention, while declines in government bonds have been limited. Let's bring in Bloomberg cross-asset strategist Mark Cranfield for analysis now. Mark, what stands out to you from today's Japan asset moves? Good morning.
Good morning. Probably the yen, I think. A lot of people will be slightly surprised that the yen is a bit stronger today and not weaker, as that was considered to be one of the main things that Takaichi was in favour of. Judging by the way she was speaking ahead of the election, she seemed to like the idea of the yen staying weak to help exporters in Japan. But obviously, as you were saying earlier, a lot of that is priced in. And what we've also heard at the end of last week were some relatively hawkish comments from somebody on the Bank of Japan who was thought to be a dove. Now, the odds for the Bank of Japan to raise interest rates again in April is now running pretty high, well over 70%. And it looks as though we could run into a situation here now that the election's out of the way. The Bank of Japan don't need to be so circumspect in how they talk about raising interest rates as they were before the election. They can probably be a little bit more upfront about it. And at the same time, the Japanese leadership may be a little bit more relaxed. Now they've won the vote, they can possibly look at the real underlying problem in Japan, which we were reminded of today with the labour cash earnings, that Japanese people on a relative basis are losing out. Over the past year, inflation has risen too quickly in relation to the value of their wage increases. So clearly it is in the interest of the Japanese leadership to do something about fighting inflation. That's the job of the Bank of Japan. They may encourage them to start to push ahead of a slightly earlier rate hike. Traders can see that. That feeds into a slightly stronger currency. And of course, the yen was starting to move. And then we've had this story that China is advising its banks to be more circumspect about holdings of US treasuries. That's also helping to push the US dollar a bit lower. Maybe we'll talk about that as well.
Yeah, because we're looking at Treasury yields higher across the curve as well. Dollar weakness, as you mentioned. How can we separate this scoop out from the Japanese election impact?
I mean, the timing, a lot of macro traders will be saying, why today? Why are the Chinese authorities showing concern about holdings of treasuries in China? They've had big holdings for a very long time. Why suddenly now? Well, it may well be that they're also taking into account the fact that Japan is a very big holder, even bigger than China these days. And there's even been some talk that the Europeans are getting a little bit edgy about holding so many treasuries as well. Traders can see all this building up. Now, it would be irresponsible if the Chinese authorities don't go to their banks at home in China and say, look, there's a chance there's going to be a lot more volatility in the dollar and in the treasury market. How are you guys positioned? How is your hedging strategy in place in case we do get a situation where more money moves back to Japan because yields there are more attractive, also the stock market is getting more interesting, or the Europeans themselves start to move money back as well? China wouldn't want to be left out. That's two very big holders of US bonds. If China is left too late, their banks will suffer. So it could well be that the Chinese authorities are warning their banks at home, if you have got Treasury holdings at the moment, or US bonds in general, prepare for a lot more volatility, possible curve steepening, and you might not be the only ones. Don't be the last one out of the gate, because once the dollar and bonds start to move, it could be pretty big in these situations where Treasuries haven't moved a great deal over the past few weeks. Volatility could increase very quickly. Nobody wants to be the last person through the exit door.
All right, well, we're looking at 10s and 30s up 3 basis points as things stand. The dollar weaker 0.2%. Bloomberg's Mark Cranfield, we thank you for that analysis. Well, coming up on Bloomberg Daybreak Europe, as Prime Minister Keir Starmer's future hangs in the balance, we'll be talking to the Deputy Leader of Political Party Reform UK, which currently leads opinion polls. That conversation coming up next. This is Bloomberg.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. It's a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi. But Peru use fresh fish, make the called ceviche, cooked with the lemon juice. You know, never use the soy sauce. First time I eat this, kind of the, wow. So then after this one, my open eye more, my cooking style that change, combine to Japanese style and another country food, then make a novel style.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Season is here.
Europe's most valuable companies kick off earnings season.
Bloomberg is first to break the numbers.
Some breaking news from First Abu Dhabi Bank.
So Shell, SAP, Total's in the mix there.
You're bringing all the fun today, Guy Johnson.
With the smartest insights.
How are you feeling going into earnings season?
We are still confident that we can deliver to that acceleration of total revenue growth.
Give me a sense of what you're most optimistic about.
I really expect a very strong Q4.
Continuing coverage on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Well, the UK Prime Minister Keir Starmer's future hangs in the balance after his Chief of Staff quit following a backlash over Peter Mandelson's appointment as UK Ambassador to Washington. For more, I'm joined by Bloomberg opinion columnist Rosa Prince. Rosa, can Starmer last the week, is I'm sure the question markets are asking. How is he going to try and shore up his position this week?
That is the big question. So he hoped that by sacrificing his advisor, Morgan McSweeney, he can buy himself a little time. That was something that some of his critics were asking for. But it's a huge sacrifice. Morgan McSweeney was so central to his project. And there are definitely rumours in Westminster that he is in his final days. It's difficult to see how, even if he does manage to stumble on, how he will achieve much. I think he's not ready to go, but it could be a matter of days, if not weeks.
And how worried should the markets be when it comes to fiscal credibility about the runners and riders to replace the Prime Minister, Rosa?
Yeah, we have seen some jitters in the market in the past at the prospect of someone else taking over a number 10 who would be to the left of the Prime Minister. Now, the fact is that actually we don't really know what measures somebody who replaced him would want to introduce, simply because even though his premiership has been in trouble for, well, 9 months or so, there isn't an overt leadership contest yet, so we haven't had people setting out their kind of policy programmes. There are definitely some runners and riders, such as Angela Rayner, who we can see on the screen, who is to the left of the Prime Minister, and I think that does concern the markets. However, in the short term, what I think will give the markets as much concern is just this sense of crisis, the instability. This is the last thing that any of us want, really, is so much political turmoil at the moment. So I think that's the big hit at the moment that will be coming down the track.
I'm still recovering from 2022. Rosa, thank you. That's our Bloomberg opinion columnist, Rosa Prince. Well, the leader of the Reform UK party says that Prime Minister Keir Starmer won't be far behind his key aide Morgan McSweeney, who, as we say, quit yesterday. If Starmer survives the clamour for accountability, the Prime Minister faces a special election in Manchester this month and a raft of local elections in May, where polls suggest that Labour will hemorrhage seats to opposition parties. I'm joined now by the deputy leader of one of them, and that is Reform UK, Richard Tice. Richard, great to have you with us in the studio. Thanks for coming in. You must be rubbing your hands at this chaos engulfing Labour.
Well, it is chaos, that is for sure. And Morgan McSweeney's resignation, it's just the beginning, because over the next few weeks, what is going to be released via the Intelligence and Security Committee is the depth of messages and emails that have gone on in and around Number 10 in the run-up to the appointment of Peter Mandelson, and subsequently, and also his involvement at the heart of this Labour government in the run-up to the election and afterwards. And I think as those come out, if the Prime Minister is still Prime Minister at that time, that will effectively finish him off. But as your columnist was just saying there, I mean, it could be a matter of days. Such is the turmoil and fury in amongst his own backbenchers, who didn't have much love for him anyway.
So the question for you is whether you're ready for government. And, of course, the rumour is around your party that you would be Chancellor, or at least Business Secretary. And if the polls are right, it's Reform who would be winning the next general election. The question for markets is, how can you ensure they can trust you?
The reason markets can trust us is because we are business people. We've got a successful track record of making money for shareholders, for investors, for lenders, and, you know, that's who I am. I ran a FTSE 250 reserve business for 4 years, tripled the share price. So I think people can say, yeah, actually, these are business-like people who understand profit and loss, balance sheets, how to make money, how to protect cash flows, and who can create proper growth. And that's what we need in this country. We're going to need growth because we've got flatlining GDP. We're borrowing £150 billion a year, which is completely unsustainable. And all of the potential candidates post-Keir Starmer in this Labour government, they're all high spending, high borrowing, and frankly, I think the markets would take fright at that.
And Nigel Farage has argued that you'd balance your tax cut plans with spending cut plans, right? But
the first thing we have to do is we've got to cut the vast amount of wasteful spending, which we're already doing, cutting our teeth, running successfully the 12 councils that we run. Alongside that, you need to deregulate the daft regulations. We all want smart and safe regulations, but daft regulations that hinder growth is a problem. Only then can you afford performance-related tax cuts.
Well, last time you were in this building in November, you talked about those working groups when it comes to deregulating the city. What's the progress there?
So they're all up and running. We've got working groups looking at financial services and governance and regulation, SME growth capital, because there's a shortage of growth capital in the UK, simplifying our pensions and savings that's far too expensive and complex, and also our over-complex tax code. Those 4 working groups, they're underway. They'll be reporting to us as the leadership team later this year. And then I've also got one on energy as well, because our electricity is far too expensive because of net zero that we would scrap immediately. Catastrophic policy imposed on the UK, and more besides.
What we haven't heard much about, though, is trade, and we've seen how unpredictable President Trump is. Do you still want to have a close relationship with the US when it comes to trade?
Of course, the US is our most important ally. It's our single biggest trading partner, both ways, in terms of exports, imports, foreign direct investment, and we're so aligned with them on critical matters around defence and national security. So of course we want that strong relationship, but that's the thing about good friendship, is you tell your friend when they're doing well, they've got something right, but also if they've got something wrong.
What about if they want more when it comes to food standards? Because, of course, you don't want to undermine British farmers.
Of course, we all want, as I say, smart, safe regulations, and there's always a negotiation around the edges. The thing about trade deals is you don't have to do an all-encompassing trade deal. You can do partial trade deals where you can agree things. But sometimes things can be a bit too difficult for the respective countries' national interests. So you put that in the sort of the pending tray. Look at that later down the track when you build sort of a successful track record of making trade deals work for both sides.
I also want to ask you about donations. I was in South Africa recently and a billionaire told me Nigel Farage is for sale. What do you say to those who are concerned?
He's completely and utterly wrong. Nigel Farage is not for sale. None of us are for sale. We stood up against Elon Musk about a year ago, actually, and said thanks, but no thanks. So your gentleman there, utterly wrong.
But why are you taking so many donations from donors who are not living in the UK?
Look, all political parties take donations as long as they are lawful, in accordance with electoral commissions, because otherwise you can't exist, you can't function, you can't have good infrastructure, good research teams. And the markets want to have the confidence that we know what we're doing, we know what we're talking about. And the simple answer is we do. We've been talking about concerns over rising bond yields in the UK, spending more than we're earning. I've been talking about that for many, many months now.
But Nigel Farage's trip to Davos was paid for by the Iranian billionaire Sasan Gandhari. What do you think his interest is in reform?
What actually many people's interest is in the great United Kingdom being successful again. We're sort of at the moment, frankly, down and out and on the ropes because of weak, feeble, cowardly mismanagement, firstly by the Tories, now by Labour. It's absolute chaos. There's no growth. And the role of government is to create growth. I'm old enough to remember when the UK was growing at 2.5% to 3.5% year in, year out in the 80s and 90s. Anybody under 40 doesn't know what that feels like, what it looks like.
You really think that's why he's giving you money?
I think what entrepreneurs want, who believe in Britain, they want a successful party running the government who will get the country growing again for the benefit of all. And that's what I hear from people. And your alternative is, if you don't want any donations, then you have to go to state funding. And, that's a national debate if you want, but I don't think that would be very popular. And, let's just remember, for example, the Labour Party's biggest donation in 2024 was a South African multimillionaire.
We've also taken £9 million, a historic amount, from a crypto investor who, by the way, lives in Thailand. What about people who are worried?
Crypto's part of the future. I mean, lots of your viewers and listeners are involved in crypto markets. Doesn't it show sort of common sense that actually we understand what's going on out there? What are the growth markets? What are the opportunities?
But what about those who are worried that you're taking that money and it's going to shape your crypto and financial services policy?
Don't worry. Relax. We know what we're doing. It's about growing the economy. And we're not for sale to anybody.
OK. Look, we've got the local elections coming up in May. What's success going to look like in London for reform?
In London, well, there's about 1,800 seats up for grabs across the whole of London. We will win some councils from a standing start in London, and that's going to be a remarkable thing. And also elsewhere in the UK, where we're allowed to have elections, where Keir Starmer hasn't cancelled them because he was terrified that he was going to lose to reform. I mean, this is what's going on. That's what you do in sort of dictatorships in different parts of the world, as opposed to one of the greatest democracies in the world. And truly shocking. But we're fighting hard for every seat, and I think we're going to surprise people on the upside.
You're also fighting hard to claim ex-Tories to join reform. You've got more Boris Johnson cabinet members than Kemi Badenoch's shadow cabinet. How do you defend that when you criticise former Conservative governments?
Because lots of good people in the media are saying, hang on, you haven't got much experience to run the country, so now we've brought in a bit of experience, and yet we're still being criticised. We almost can't win. Look, the reality is that we need some ministerial experience. We've now got that. I'm not saying I've run a department, but what I have got is a successful business track record, like Nigel Farage and others. And you combine those two things and you have a winning formula. And the key thing is you have to get this country, our economy, growing again. We have to make people up and down the country feel better off, feel there's a reason to go to work. There's a reason to be an entrepreneur, a small business owner, to be successful, to invest in crypto, to invest in the latest technology using AI, improve our productivity, all of these amazing things. We've got to get going again, as opposed to being stagnant.
OK. Richard, thank you for coming in, explaining your position. Good to see you. That's Richard Tice, Reform UK Deputy Leader. Well, switching focus now, the Winter Olympics got underway in Italy over the weekend, with the opening ceremony split between Milan's San Siro Stadium and the Dolomites. Italy faced widespread rail disruption on the first day of the Games, with the country's transport minister saying it was an attack on the nation. On the slopes, Lindsey Vonn's defiant bid to win the Winter Olympic downhill at the age of 41 came to a crashing halt. The American skier broke her leg just days after she badly injured her left knee. Norway tops the medal table with 3 golds. Staying with sports, the Seattle Seahawks are the Super Bowl champions. They dominated the New England Patriots 29-13 to win Super Bowl 60. Puerto Rican superstar Bad Bunny making history, becoming the first male solo Latin artist to headline the halftime show and performing the entire set in Spanish. His performance, though, drew criticism from US President Trump. Well, we've got plenty more coming up, so don't go anywhere. This is Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Japan, the prime minister called a snap election, the quickest snap election in Japanese history. And boy, has she had a big victory today. She's going to have 2/3 majority in the upper house. President Trump endorsed her last week. She is a great ally, great relationship with the president. And when Japan is strong, the U.S. is strong in Asia.
US Treasury Secretary Scott Bessent there heralding the victory of Sanai Takaichi in Japan and her party. You can see here the reaction in markets, the yen strengthening against the dollar and the volatility, though, very much remaining. How much of this victory was already priced in, you might ask? We also have to factor in, of course, the comments from the currency czar saying that he's watching these markets with a high sense of urgency. But flip the board over and a purer sense of the Takaichi trade comes out when we look to stocks. So the sectors, specifically transport, banks and machinery, higher off the back of this victory. And flip over one more time to the bond space. We've seen a sense of calm, actually, when it comes to JGBs. First of all, you had the government calling for that, but also a series of strong auctions. And perhaps there is a sense, as we were hearing from our guest earlier, that because of this decisive win, Takaichi can get on with her fiscal plans, but at a more calmer pace now that she has that victory behind her. But to access all of these charts and all the charts we use here on Bloomberg TV, do check out CHRT TV Go on your terminal. And a reminder as well of your risk events for the week. So we've already got the election in Japan behind us. Now we look at bank earnings here in Europe. We also have lots of luxury earnings to watch as well. A raft of US data coming out because of the delays, because of the US government shutdown. So we've got payrolls, CPI and retail sales all on the docket. And then on Friday, geopolitics in focus. The Munich Security Conference comes around again. Who could forget those comments from the US Vice President J.D. Vance at that summit this time last year? The future of NATO and the war in Ukraine very much in focus. But coming up, we'll talk all things competition and big tech with an exclusive conversation with the European Commissioner for Competition, Teresa Ribera. That's at 9:15 a.m. London time, and the opening trade's coming up next. This is Bloomberg.
A cidade estava sitiada.
Isso ao começo eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho tanya ki kon ahma ta suara pang aku ahma le pah manjang le nya ai kon mamanya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Good morning. It is Monday the 9th. On today's agenda, Takaichi's historic triumph, China warns on treasuries, and Starmer on the brink.
Tom, there's some really interesting moves developing in the bond market right now. Let's talk about what is happening. As you say, Takaichi wins big. The Japanese 10-year goes higher, 30-year goes higher. Is that the repatriation trade beginning? Does it give legs to the repatriation trade back into Japan, out of treasuries? You've then, as you say, got the Chinese talking to private investors saying, curb your enthusiasm around what is going on in the treasury market. Be careful. US treasury yields go higher on the back of that. What does it all mean for precious metals? Well, it's another boost for the gold trade this morning. That is back north of 5,000. We're up by 1.25%. It's going to be a big week for the bond market. The countdown to the opening trade starts right now.
Good morning, everybody. It is Monday, the 9th of February. In fact, this is the opening trade. And politics is everywhere. This is going to be, as you say, Guy, a big week for the bond markets. Politics on display, strength in politics over in Japan, weakness in politics here in the UK, and the influence of politics on our macro data agenda in the United States. We have we're looking ahead to a cluster of data points that could be huge for bond markets, for investors globally, as a result of the politics.
Now's not probably the time to have a political crisis in the UK. Let's just put it that way. This could be not the week maybe to deliver that. But let's talk about the positive politics coming out of Japan. Takaichi wins big. She kind of had a snap election, one of the fastest snap elections I think we've ever seen. And she has smashed it. The LDP has a super majority. We are going to see, therefore, some quite big changes in Japan as a result of that. Are we going to see her spending as freely as maybe some suggest? A little bit of caution maybe creeping in on that front. But she won 316 seats in the lower house. It is a huge victory. It's going to change the relationships in Asia in a big way. You've got a constitutional change potentially coming, potentially a more bellicose, a more militarised Japan. China's going to be worried about that. The ripple effects of this could be massive.
You march the JGBs, and we are selling that sell-off then at the front end. Well, the front end, the 10-year, where yields are up. Yields are up, but, you know, the Japanese context, when you go up to 40s. The 10-year selling off, so up 5 basis points in terms of yields. So the question for market seems to be, does this significant historic win for Takaichi, the first time we've had this kind of majority for the LDP since the Second World War, does it allow her to go bigger on stimulus, or does it actually give her the political mandate to ease back on some of those spending plans because of the political mandate she has? And the opposition parties were pushing for more spending. So one reading from the markets would be we're probably going to get less spending than maybe other political dynamics could have left. But for now, the question is, how far does she go? And so we're listening into her, and we're listening into her members of her cabinet as well around the currency.
Yeah, because going into this election, we had been all obsessing about the long end of the curve, and we haven't seen a huge amount of move there, but we have at the 10-year, as you say. And that had been around fiscal concerns that maybe more spending would happen, and maybe that was the wrong lens. It's interesting how political clarity and large mandates, large amounts of power concentrated, can have this impact on markets, isn't it? And really focus opinion. Something that might have been seen as a risk previously, suddenly if you're going to get policy effectively delivered, the market thinks, oh, maybe actually that might not be so bad.
Interesting to see how the BOJ reacts to this. Does it accelerate or decelerate kind of what happens at the BOJ? The interesting thing this morning is that this fits into a wider narrative. And that is that we are seeing some potentially quite significant pressure being applied to the Treasury market. So you've got a big week coming up for the Treasury market, haven't you? And you've got this news story, which we had in this morning, on China.
So what is bigger then for the Treasury market? Is it the inflation data that we get out of the US later this week? Is it the jobs data that we get out on Wednesday? Or is it this jawboning from Chinese officials talking of their lack of concern about stability in the Treasury market, jawboning, at least verbal rhetoric for some of their lenders out there who hold about close to $300 billion in terms of dollar-denominated debt? This is a Bloomberg scoop. Chinese authorities leaning on their banks and other financial institutions saying, be cautious in terms of your exposure to US Treasuries. To be clear, this is not the Chinese government saying we as a government are going to stop buying US Treasuries. There is that distinction. But nonetheless, this is significant, and you saw a move in Treasuries on the back of this.
And you could either cast this as a politically motivated story, tension between China and the US, China pulling levers, power, you know, that it has in large Treasury holdings, or at least leaning on others to do so. Or you can say this is an extension of that de-dollarization conversation that many people around the world have been having, given the credibility issues that the dollar was facing up until recently.
It could just be a warning, just saying, you know what, we see volatility in the Treasury market. Just be careful. It could be as simple as that. But the issue, and we talked about this with Europe a few weeks ago, is all you've got to do is just not buy as much. The marginal impact is huge if you don't buy as much. If the rest of the world doesn't buy Treasuries, that implies higher yields in the United States.
And yet foreign holdings of US Treasuries have actually gone up. They're above 9 trillion. And the UK is now amongst the biggest buyers, ahead of China.
And as you've been saying, this is a busy week in terms of data points that we know are coming, the clustering of these data points. We have retail sales tomorrow, payrolls on Wednesday, CPI on Friday, and a 10-year auction in the mix there as well. So maybe that Chinese story gains relevance as we head towards the middle of the week, 4.5 hours between the payrolls data and that 10-year auction. So we'll certainly watch how that one goes. Shall we pivot to UK policy?
It is connected. Is this the week you want to have a political crisis? Probably not. If there's turbulence in the Treasury market, this could be quite dangerous for the UK.
Up until yesterday morning, it wasn't clear whether the very important aide Morgan McSweeney was going to go, but now he has. We know. Closest aide has gone. This is to Keir Starmer, and he said in his departure he takes full responsibility for the appointment of Peter Mandelson as ambassador to the United States, which of course is what has driven the most recent crisis judgment, whether Starmer's judgment was flawed in appointing Mandelson. Now, markets have reacted and also not much reacted to this story. So we have seen a bit of weakness in the pound, but it's flat against the dollar. There has been a bit of movement against the euro, and that's where we're watching, because Goldman Sachs is talking about how we could see 6% drop in 12 months there. Nomura talking about a 3% drop, and they're possibly not factoring in a huge amount of political turmoil there. So if we get political turmoil, what does that do? We're back to talking about whether there are any candidates within the Labour Party who can feasibly take over. And these things, as we saw with Corbyn in previous, iterations of this, can be extremely unpredictable.
We've seen, in terms of the market mechanics around this, yield steepening over 12 months. And we've seen, of course, volatility when Rachel Reeves, for example, cried in the House of Commons and there was a sell-off. The markets seem to like the stability of Rachel Reeves and Keir Starmer, or maybe it's a question of better the devil you know. But what we've seen is pretty significant moves into the front end. So yields are down 50 basis points on the 2-year in the UK over 12 months, and they're up about 30 basis points on the long end. So in terms of that steepening story, how does that adjust? How much risk premium do you start to price into the UK markets if we do get someone from the left of the party looking to take over from Keir Starmer?
The market does feel like it's moved on from that Rachel Reeves moment, though. She didn't go to China. She's been sidelined. There's talk this morning of the fact that she may not even be there to deliver the spring budget, spring statements, not budget, that a junior minister might do it. She's already been sidelined. So is the kind of the risk that the market reacts violently because it doesn't like the instability, has that moment now passed? It seems it has.
Yeah, I mean, it is another take on that story that they're trying to downplay having a second fiscal event, so maybe you let someone else... Anyway, but the focus today is on Keir Starmer's going to speak this morning, deliver a quote-unquote intervention at some point today, so we'll see what that can deliver. And, of course, this comes before the May elections, local elections, so is there point in reshuffling the decks now, or do you wait and make a statement after that? So that could be an important data point or date to keep in mind. 7:08 here in London. Let's tell you what is coming up in the programme in terms of the conversations we're going to have with our guests. We're going to be joined by Yusuke Miyahiri, who's going to be with us to talk all things Japan, G10 FX strategist over at Nomura. Where does the yen go next? Paul Jackson, global market strategist EMEA at Invesco. We perhaps will start the conversation there around UK politics and the way that is influencing bond markets right now. Helen Jewell, international CIO, fundamental equities, will be with us. Lots to digest, thinking about what we saw last week, that volatility in software stocks. Where do we go next on the equities story? And we'll also be speaking to Vikas Dwivedi, who is global oil and gas strategist at Macquarie. A little bit of a retreat in oil prices this morning on the back of a lack of activity over the weekend in the Middle East. Yep,
still waiting and watching very carefully on that front, though. What else we need to know this Monday morning? A Hong Kong court has sentenced pro-democracy former media mogul Jimmy Lai to 20 years in prison. It is the harshest sentence to be given under the Beijing-imposed national security law. The judges ruled that Lai was the, quote, mastermind of the conspiracies and therefore warranted a heavier sentence, with the punishment being effectively a life sentence. Bloomberg has learnt that Anthropic is finalising details of a funding round likely to raise more than $20 billion and slated to close as soon as this week. The company was initially, we think, seeking around $10 billion, but it's now on track to raise more than double that amount at a $350 billion valuation for the firm, thanks in part to excess investor interest after last week. Unsurprising, you could argue. And the Seattle Seahawks are the Super Bowl champions. They dominated the New England Patriots 29-13 to win Super Bowl 60. The Puerto Rican superstar Bad Bunny making history, becoming the first male solo Latin artist to headline the halftime show. His performance, which was entirely in Spanish, drew quite significant criticism from the President of the United States, as you can see on the screen right now. Big defence, massive defence.
It was all about the defence,
yeah,
wasn't it?
Like I haven't watched the game because I was asleep, but I've seen some highlights.
Yeah.
And yeah, the Patriots didn't score for, until the back end of the game.
Glad you're here to tell me this, because I saw much more write-up of Bad Bunny than I did of the actual game.
Well, the Bad Bunny stuff was on the front pages, injecting fun, and then President Trump says this is one of the worst performances in terms of the Super Bowl that we've seen ever. Who could understand what he was saying? Of course, he was speaking Spanish.
Yeah.
So there's a significant proportion of the US population.
Massive weekend for sport, though. The Olympics were amazing.
Yep.
And so much going on there, plus also some fantastic rugby.
I've been brushing up on the rules of curling. Just so, come Friday, I can engage in some serious conversation
just that
on
horrible
this
crash
sport.
for Lindsey Vonn.
Oh, yeah, that was horrific.
Yeah, she's recovering, fortunately recovering on the back of that fall. Coming up, we will be watching UniCredit, switching focus from sport to what's happening in the banking space, of course, this morning after their fourth quarter net income beat estimates. The Italian banking giant also saying they will return about 50 billion euros to investors in the next 5 years. Plus, later we're going to check in on oil as those easing Middle East tensions between the United States and Iran reduce supply risks, at least in the near term. Up next, we'll be checking back in on Japanese assets, of course. Japanese stocks ripping higher after Prime Minister Takaichi's landslide and historic election victory. Numerous Yusuke Miyari joins us on set. If you have any questions of your own for our guest, send them to us on IB plus BBTV Go. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Welcome back. Monday morning, 45 minutes to go until the equity market session here in Europe. We've got a little catch-up still to play versus the very strong finish we saw in the United States Friday. That needs to be priced into markets this morning. So we're up by circa 0.5% on futures right now, pretty much across the board.
Yeah, absolutely. So Friday lives on into Monday, but we add some new news lines, and one of those comes out of Japan. Japanese Prime Minister Sanae Takaichi has secured an historic election triumph. Her win now positions her as the nation's strongest leader in the post-war era. Joining us with the latest from Tokyo is Bloomberg's Japan economy and government reporter Erica Yokohama. Erica, really good to have your reporting on the programme. So was this election result expected? We went into the weekend, yes, expecting her to win, but the scale of the victory, how unexpected was that?
Yeah, exactly. So the market was expecting the LDP sweeping victory, but the scale was far larger than any forecast in local media. So Takaichi has clearly strengthened her grip on power. Now there is like a strong momentum for her to push ahead with her agenda from economic policy, defense ramp up, and growth strategy and more. The LDP secured 316 seats. That's clearly the majority on its own and marking the largest number for a single party in post-war history, as you said. And together with its coalition partner, Ishin, the bloc now holds 350 seats. This is a major breakthrough because before the election, even with Ishin and some independent lawmakers, the ruling camp only managed a slim majority of 233 seats. And, you know, the LDP picked up many seats from the centrist Reform Alliance, newly formed opposition party by LDP's longtime ally, Komeito, and Constitutional Democratic Party. The co-leaders of CLA are now considering resignation of the position.
Okay. Let's talk about what the Prime Minister does with this huge majority. Everybody's trying to work out, is she going to spend big or are we going to see more responsible fiscal activity? What's top of mind as she starts her new tenure?
Yeah, so the market is kind of expecting that the Takaichi will further proceed with the larger spending, but at the same time, she's pretty cautious as well. What was surprise for me yesterday was Takaichi actually started her speech after post-election speech by saying that the government is really paying attention to fiscal sustainability. And Finance Minister Katayama said the consumption tax cut, which is a long-term concern for lots of market participants, is just for only 2 years on food, and it won't require additional debt issuance. Just making sure that Japanese finance is kept in check. And you know, the first things she has to do is actually to get in the budget for the year starting in April through the diet. And you know, the ruling coalition is still in the minority in the upper house, so some amendments there are possible. So maybe that's something Takaichi has to do first before thinking about the new spending things.
Okay, Bloomberg's Erica Yokoyama in Tokyo with that update on those historic election results in Japan. Thank you. Let's stay with that and the market perspective and with a particular lens on the currency space. Let's bring in right now Yusuke Miyairi, a G10 FX strategist at Nomura. Yusuke, thank you for joining us round the desk this morning. Obviously, really significant in terms of the electoral outcome for Takaichi. Which Takaichi turns up, do you think? Is it the Takaichi who is willing to spend big and cut taxes, or is it the Takaichi who's going to be more fiscally responsible than maybe some had expected?
Yeah, that's a big debate in the market right now. Initially, she wanted to go big in terms of fiscal, but now she's started to understand the market volatility, what could be the pain for her when market volatility increases. So when we listened to her speech and TV interviews yesterday, we think that she's more skewed to being responsible rather than proactive, under her slogan of responsible and proactive fiscal policy. So should she be responsible about the fiscal policy? We think that would be a relief for the JGB market and also relief for the yen weakness. So overall, if she sticks with her responsible fiscal policy, I think that's going to be positive for the fixed income market in Japan.
What does that mean if we stick to the? I mean, there's obviously the interlinks between the JGBs and the yen, but with your view on the yen, which has rallied in the session today, and maybe part of that is down to weaker dollar. What is that direction of travel for the yen in that scenario then?
So in near term, I think we should also have to pay attention to the equity market where it is today it boomed. along with that, I think their near-term risk is that dollar yen would go gradually to the upside. But at the same time, if you go to like dollar yen go 160, then you have to be aware of the FX intervention risk by the Ministry of Finance, and possibly from the U.S. Treasury side as well. So we think that the upside of the dollar yen is capped, and as if the Prime Minister Takaichi, maintains her responsible fiscal policy, I think the direction of travel of the dollar yen will go to the downside towards the middle of this year.
What does it mean for the BOJ?
We think the BOJ will hike 2 more times this year and 1 more time next year. But if the yen weakness just sustains, then I think the BOJ needs to hike more. If you see the break-even inflation in Japan, it has now reached 2%. And some investors are thinking that the real policy yield in Japan is so low compared to other G10 peers. So in the BOJ,
where's the line for the BOJ on the yen?
So I think 160 is, I think, a key level for not just BOJ, but for Japanese officials as well. But so if we go again 160, then I think the BOJ...
Do you get a quick rate hike? If you get to 160, does the BOJ... how quickly is the reaction?
So I think 1 cent a quarter is the quickest pace. I think back-to-back cut for the BOJ is still a very high hurdle. Yeah.
Okay, so once a quarter then is the quickest pace we can expect, because they've been going slower than that. On the consumer tax, on the consumption tax, where we started the conversation, so the finance minister has said a number of times, she keeps saying, this is not going to result in more borrowing. We're not going to raise debt as a result of this. But have they said anything about how it's going to be funded? Wouldn't that be an easy way to sort of take the pressure out of the JGB market by just saying, well, we're going to cut consumer taxes on food only for 2 years, and this is how we're going to pay for it? It's the unfunded nature of it that spooks markets, right?
So actually, she hasn't said anything about the funding yet. She said that she will discuss at the National Council with other parties as well to how to fund for it. That means she does have a leeway to ultimately not do consumption tax cuts and do other fiscal measures to curb inflation in Japan or increase the real wages in Japan. So our view is that she hasn't strongly committed to implementing consumption tax cuts, although the majority of the public and the majority of the LDP lawmakers support the consumption tax cut. So how she will manage that will be obviously a key going forward.
Yes, and you wonder what the mandate was driven by, but I suppose that's difficult to say. Something that is difficult perhaps to pin to markets, but I wonder how it affects JGBs and expectations of debt load, is a pivot to a more nationalistic Japan, a Japan that will spend on defence and perhaps changing the constitution to allow that to happen. I mean, that's a step removed from markets maybe at this point, but how does it fit with the markets conversation, Yusuke? Is this something that bond markets are going to be watching?
So, yeah, I think national defense spending, I think the direction of the travel is to increase it. And I think that is kind of inevitable these days, what's happening outside Japan. But it's not just like, Japan choosing either U.S. or China. Japan is trying to be, insulated from these two countries or other part of the country. So Japan to be independent, I think that's the key for the national defense spending. But for a constitutional change, you need a 2/3 majority in the upper house as well. And the LDP hasn't got that yet. So I think that's still, we still have a distance to discuss that. But I think the, direction of travel of the national defense is going to more increase.
Are we going to get repatriation?
That's $1 million question, obviously.
Yeah.
But I think 2 things are key here. One is the market volatility, especially in the JGB market.
Yeah.
If you see the carry-in role of the JGB yield curve, it's very, very attractive, but Japanese investors haven't yet repatriated. I think that's one of the factors of volatility.
Well, we got the election out of the way. We've got a massive LDP majority. We've got a BOJ that's hiking 2 or 3 times. What gets the repatriation story going?
So I think this is the base of our conversation here. So it's the fiscal policy. So if Takaichi says that she's going to be very responsible, and if she doesn't do too much on the fiscal side, I think Japanese investors will become more attractive in buying JGBs, especially on the long end, 10 years or super long.
Buying big or just at the margin?
Greater than now.
Greater than now. Yes. Okay, at the margin. Yeah, okay.
We have a great deal of political clarity now in Japan, and with that comes the sort of ability to execute big, and it might be around the things we've been talking about. Are there policies that maybe have not, because we seem to spend a lot of time talking about this consumption tax, Yusuke. Are there other policies that we need to focus on, pro-growth policies maybe, that we need to understand?
Yeah, I think so. Takaichi has established a council to target 17 areas of the economy for, example, shipbuilding, space, robotics. So there are those sectors. But from the fixed income market side, I think what's important is whether Takaichi will go big or not. But for the equity space, there are those sector theme trades going on. So those sectors are attractive.
On the equity space, before we let you go, you said you think dollar yen is capped at some point. Obviously, Japanese equities benefited from weaker yen. What is that a potential drag? I mean, it's another very strong day for Japanese stocks. Does that narrative then of maybe a slightly stronger yen longer term, or at least in the medium term, does that cap the kind of gains we've seen in Japanese stocks?
So if, say, for example, that dollar yen drops sharply, like we saw in summer 2024, then that's going to be negative for the Japanese stock market. But if you see the Japanese corporates like earnings that are being resilient relative to the FX movement, and there are big themes like corporate governance changes, etc. So those structural shifts will likely to support the Japanese stocks going higher.
Really interesting. Yusuke Miyaiiri, G10 FX strategist at Nomura, with the market implications, of course, on that victory for Takaichi. Coming up, from the political stability then of Japan to the instability here in the UK as Prime Minister Keir Starmer's future hangs in the balance, we will discuss what it means for the pound and the bond markets with Invesco's Paul Jackson. Stay with us. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Welcome back. This is the opening trade, 7:30 this Monday morning here in London. Let's have a quick look at the futures picture then. And the memory of Friday seems to be living on in terms of equity markets and that story, because we saw real strength coming through in US stocks on Friday, of course, up by more than 2% on the NASDAQ. If it's all about diversification, not just about tech, the Dow doesn't get many mentions on this show, but that was also up by more than 2%, which seems important for a change. So we've got European equity futures pricing in more strength, Guy, at the start of our European trading day. We add in, of course, the positivity, risk appetite coming from the Asia session and Japan.
If the Chinese are advising their funds not to, or at the margin, not buy US treasuries, are they going to buy European bonds? So that's a question. Do you get a rotation out of the US into Europe as a result of what's being said? At the moment, it's a very mixed picture in terms of the European bond market. Not much movement at this point. I think the big action may come at 8 UK time when we get the gilt market.
We will be glued to moves in the gilt market on the back of the volatility in UK politics, because the UK Prime Minister Keir Starmer's future now hangs in the balance after Morgan McSweeney quit as his Chief of Staff. That follows backlash, of course, over Peter Mandelson's appointment as UK Ambassador to Washington. Reform UK Deputy Leader Richard Tice told us earlier that this is just the beginning.
Morgan McSweeney's resignation, it's just the beginning, because over the next few weeks, what is going to be released via the Intelligence and Security Committee is the depth of messages and emails that have gone on in and around Number 10 in the run-up to the appointment of Peter Mandelson, and subsequently, and also his involvement at the heart of this Labour government in the run-up to the election and afterwards. And I think as those come out, if the Prime Minister is still Prime Minister at that time, that will effectively finish him off.
OK, that the view, of course, of one of the UK opposition parties, the deputy head of UK Reform, of course, Richard Tice, talking to us earlier. Let's bring in Bloomberg opinion columnist Rosa Prince now for another view. Rosa, does Starmer last the week?
That's the great question. Now, it's quite hard to get rid of a Prime Minister, particularly a Labour Prime Minister. And Starmer's been under pressure for months now. And really what's kept him in place is that nobody has had the kind of nerve to stand up and challenge him. And that remains the case. Now, I think the two big factors for this week and whether he survives in the short term are whether the cabinet are still with him. If a major cabinet minister said, I can't stand this anymore, I'm going to resign, if he had a couple of resignations, I think he would be gone immediately, or if his own Labour MPs turned on him. And they do seem pretty upset with him. So people have been talking about 50-50. I think that sounds about right to me.
Rosa, who's going to be the next Prime Minister?
Ooh, that's a difficult one. And like I say, really the issue with replacing Keir Starmer, and the reason it hasn't happened already, because he's been in trouble for so long, is that there isn't an obvious replacement for him. Angela Rayner, who was his deputy, you know, she's had to resign in a scandal of her own because she didn't pay full property taxes. My money, therefore, would probably be on the Health Secretary, Wes Streeting. He's a good talker, he's very charismatic, but he has issues too. He also was close to Peter Mandelson, and he's not universally liked in the Labour Party. It's unclear he could win a leadership contest. Then some other candidates, just to throw some names out there, are Ed Miliband. He was leader once before. He's also from the left of the party, so might be popular with the party, but not necessarily with voters who have already rejected him as Prime Minister. So, and then there's Andy Burnham, who would be popular both with Labour MPs and with the public, but is not an MP. And at the moment, the rules are that you can't be Prime Minister and therefore Labour leader if you're not a Member of Parliament. So not a clear answer to that question.
Yeah, it seems even more difficult to answer, doesn't it? The list seems to be growing. Rosa, thank you very much. Rosa Prince, Bloomberg opinion columnist, on the latest in UK politics. Let's dig into the implications for UK assets then. We're joined by Paul Jackson, global market strategist EMEA at Invesco. Paul, good morning. Happy Monday for you. Let's talk about what's going on with UK assets then. I mean, we've got the pound as a bit of a barometer. It's the only thing that's open right now. It's not moving all that much, though, on this. Maybe this development was kind of priced. Maybe we're where we were on Friday. We look to gilt markets to show us a little bit more volatility, perhaps, and see whether they respond. What are you thinking about UK assets as we go into this week?
Well, just stepping back a bit, I actually quite like UK assets as a whole. Overweight UK equities, overweight UK gilts and investment-grade credit. and I suspect that throughout the year sterling can appreciate a bit against the dollar. That maybe says as much about the dollar as it does about sterling. On the positive side, the Bank of England is cutting rates, and I think they'll probably cut 3 times this year, bringing the policy rate down to 3%. Another positive when it comes to the bond market is that gilt yields are relatively generous compared to other developed markets and compared to the US, and that's why gilts have been performing relatively well over recent months. Having said that, of course, the risk is with this political situation that we get back to a point where the markets worry about Rachel Reeves no longer being Chancellor. I'm not sure that the concern is so much about Keir Starmer, but if Rachel Reeves were removed, then I think there could be more volatility. And so if there's a threat of that, then you could see those gilt yields going back up again and sterling weakening. But whether we get to that point or not,
we'll have to see.
It's the million-dollar question.
So is the question then whether that monetary policy direction can reassert itself and become uppermost in investors' minds when actually the last week or so it seems as if politics and fiscal dynamics have been to the fore?
I think at the end of the day, the monetary policy does dominate in most markets. We're seeing an example from Japan where there is a lot of hope on the fiscal side at the moment. But in general, the monetary side, what the central bank is doing, I think, dominates. In the short term, yes, you can get a lot of noise coming from politics. But I would say that over the course of the year, that political noise will dampen down and it will have been a short-lived phenomenon. So, I would focus on what the Bank of England is doing.
Oh, why do you think it's important that Rachel Reeves stays?
That's a really good question. I think it's important because the markets think it's important.
But haven't we moved on from that? The kind of the incident where she was kind of seen as being upset in the House, that obviously had a fairly big reaction. But since then, she's been massively sidelined by Starmer. Is she the important figure that she once was?
I think that she is important in the sense that the fiscal discipline, I think did come from her, and I think still probably is.
But if Starmer goes, wouldn't she go as well?
That's what I'm saying. That if the big question is whether Reeves goes, and if Starmer goes, it is possible. It raises the odds that.
Do you think a new Prime Minister would keep her on as Chancellor?
I think it might be an interesting option. Again, we don't know. We don't know who the next Prime Minister would be because there isn't an obvious candidate, which is why Keir Starmer stays in place and why he may survive and see the year out and maybe more than that. But if there were to be another candidate that really did present themselves and that the party got behind them, then it might be an astute move to keep Reeves in place. Whether politically that would be acceptable is another thing altogether, but as far as the markets are concerned, that might be reassuring.
Could we assume that the gilt markets would tame any left-wing instincts of any new leader?
Eventually, yes, but it doesn't mean that you don't get the volatility in the meantime. And so it can be something that's quite damaging, but then the markets step in and do control things. And I think the Labour Party, I don't imagine that the Labour Party would choose a candidate who would destroy the markets. We've had the experience of what Liz Truss.
But do we assume a higher risk premium in gilts, at least in the medium term?
If there were a left-leaning Prime Minister and Chancellor, then yes, for sure.
Are UK equities relatively, I'm thinking the FTSE 100, is that index and those, are they relatively immune to the political instability that we're starting to see in the UK now? UK stocks, in terms of the rotation trade, are they relatively well positioned despite all of this?
I would say that they're one step removed, but they would still be dragged into it if you get this is all hypothetical, but if you get a big move in the gilt market with yields rising and sterling weakening, equities probably would suffer in the short term. Usually it all goes together. But UK equities, as far as I'm concerned, on the valuation metrics that I look at, they're still roughly in line with historical norms. The UK market does benefit from a steepening yield curve, for example, Bank of England cutting rates, long yields going up. The bank sector benefits from that, and the financial sector within the UK is important. If global commodity prices are rising, the UK market gets a benefit out of that because of the weighting of energy and metals and mining stocks within the major indices. So there is some insulation, but I think you would see some downside in stocks.
Let's go from the political weakness story of the moment to the political strength, and that's over in Japan, Paul. We've already talked a lot about Japan, but interesting to get your views, because I know that you think that the yen will be the strongest of the major FX, the major currencies. Is that this year? I'm not sure. But, I mean, we've seen a huge amount of volatility on the back of this result. But now the yen is strengthening. I wonder what you think about the yen and its immediate prospects.
It's a mystery to me why the yen has remained so weak, given that the BOJ is one of the few central banks in the world that is tightening. And given that JGB yields, for me, have made a big step towards normalization. So at the longer end of the curve, it's actually quite an attractive proposition, I think. You've got yields that are competitive in a currency that is really cheap. If you look at the real trade weighted index of the yen, it's like 40% below post-1990 norms. So you've got a really cheap currency. I think the BOJ is behind the curve and they need to get a move on and be tightening at least every quarter and not putting a limit on how far they go. Just say, OK, every quarter we're going to tighten. And I think with that, you've got short rates catching up with long rates, and the yen, you know, what's not to like? The yen will benefit from that, from a very weak position. So, yes, I do think the implicit question that you posed me was, I think it will be this year.
Let's link the dots between Japan and a potential repatriation to Japan from the data that we expect out of the US on inflation and jobs later this week. And you expect a pretty robust economic outcome globally. When it comes to the data front, what are you most focused on? Are you concerned about the labour market in the US, and you're making assumptions about further cuts from the Fed?
Yeah, I think the labour market is on the weak side, and yeah, we'll get the data this week. But if you look at the ADP numbers that were published last week and focus on the private payrolls, they are at a very low run rate at the moment, probably somewhere between 0 and 50,000 per month being added, which is way below the 200,000 to 300,000 that we had become used to. So the labour market is not in a great place. The housing market is weak, but the Fed, I think, is still easing. Again, like the Bank of England, I suspect there may be 3 cuts, at least 2 cuts this year, maybe 3 cuts coming from the Fed. And given the easing that we've already seen, I think the US economy probably will accelerate this year.
When's the first hike?
In the States?
Yeah. This year? Next year?
No, not this year.
If the economy really accelerates, are we going to have an inflation problem?
Well, we're already starting to see that inflation is no longer trending down around the world.
Yeah.
If you take a look at what's happening globally, inflation has stopped its downward trend. Money supply growth has picked up, which, based on my studies in the early 80s, money supply always led to acceleration, always led to inflation. It stopped work. That relationship has stopped working since. But I would expect that there will be more inflation coming through. But I don't think the Fed is going to hike this year unless something
next year
very big happens. It could be towards the end of next year, maybe into 2027. We're already seeing somewhere like Australia that they have hiked rates. The BOJ, but is in a very different place. The BOJ is running such a loose ship at the moment that it does need to keep raising rates. I just think, given the context of everything that is happening in the US, both politically and economically, I can't imagine the Fed raising rates this year. I'd be very surprised by that.
Interesting, the new Fed chair, maybe more of a monetarist and maybe kind of paying attention to that.
This is the interesting point. So be careful what you wish for. The monetarist idea, but also the shrinkage of the balance sheet idea. It's not obvious. It's not obvious that you're going to get massive easing just because of the new Fed chair.
Great to see you, Paul. Thanks for joining us. Lots of things to talk about this morning. Paul Jackson, Global Market Strategist, EMEA, joining us from Invesco. Let's talk about that inflation story. Rising consumer prices certainly being thought about at the Fed.
What I've learned is that we really don't want to have inflation. Right? Once inflation gets entrenched in people's minds, it changes how the economy evolves. And it's one of the reasons why I think that we need to keep our policy in a restrictive posture so that we get inflation back to 2%. That's paramount. High prices and the prospect of rising prices really do have a lot of families on the edge.
Bostic's worried. Big week of US data. We'll talk about it next. This is Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. This is the opening trade. European equity markets then reflecting the risk-on mood that we certainly saw in markets on Friday in the United States and certainly through Asia today. Japanese politics, part of that story, but also the Kospi bouncing, guys. So there's a broader sort of risk-on tech positive story.
Yeah, it continues out of Friday. Nice bounce Friday. People were talking about the Dow this weekend. Who'd have thought? OK, let's talk about what is going on and what's happening this Monday morning. Joining us now for a few minutes, Markets Live Executive Editor Mark Cudmore. Mark, I want to start with this China story on treasuries. Not a big market reaction. Are we going to get a bigger one as this story develops?
Yes, I think this is a real grower of the story. I understand why there's not been a panicked reaction. This is China warning banks to basically watch out for their concentrated exposure to treasuries and trim where it's excessive. Not for state banks. It is really just a kind of warning to the market. And it happened a couple of weeks ago. So it's during kind of the Greenland fiasco. So it's kind of understandable there's not been a panic. And that's right. But I think this is another notch in the idea that the world owns an awful lot of treasuries. The US government is seriously indebted and is funded by the rest of the world. And given the international policies of the US administration right now, people are increasingly nervous about those holdings. We had, Danish pension fund talking about reducing exposure a couple of weeks ago. This is another notch. And I think as we get more of those notches, you get a game theory situation where no one wants to be left holding the bag. And so I think this is potentially a very big story. I'm not expecting a bigger panic Sunday today, but I think it's a confirmation that we're going to continue to see US yields drift higher because of that concern that people have too much US Treasury exposure.
Mark, let's pivot to Japan, where we are seeing a lot of market reaction. Certainly stocks really strong, up by 3.9% on the Nikkei, for example. We see the yen bouncing. It's been really volatile, I know, through your session, through the Asian trading day. What difference does it make, the strength of the win for Takaichi here?
Yeah, I think this is really massive, a supermajority, and I think, Takaichi can do some really, immense things here since they can override the veto from the upper house. So I think people are underestimating how far the Takaichi trade can go. Now, it's obviously difficult to trade because one instinct is to kind of sell the yen, but you're worried about intervention risks, so tactically that's very hard. But I think the idea of yen, the 6-year bearish trend on, in the yen is sustainable. Now, it might be more on crosses than versus the dollar, but I think that's the long-term trade over the next couple of years, over Takaichi's term for the next few years, is sustainable. I also think JGB yields have higher to go, and I think it's going to be very pro the Japanese economy from a very low base, but I think it continues to be good for Japanese stocks. So I think all the themes of the Japanese trade that we've seen over the past year are all sustainable ones, just hard to trade tactically.
Mark, it's a big week in terms of data out of the US, inflation data, jobs data. What for you is going to be top of mind?
I'm quite bullish the US economy this year. I'm quite bullish the global economy this year, quite bullish global stocks. One of the dynamics we've talked about a lot, though, is that the overpricing in the short term versus the underlying fundamentals are quite positive for risk assets. It's with that in mind that even though I'm relatively positive the US economy, I fear that this week's data set is going to be quite stagflation impulse. So I think the short-term negative is quite poor, where the jobs data we've seen so far for January is very negative, and yet it's unlikely that inflation is going to be particularly soft. So I think it's going to be a red herring stagflationary signal that we're going to play over the next week. And I think that's partially why I think this week's going to be very tough for risk assets.
OK, short-term stagflationary risks out of the US. Bloomberg Markets Live Executive Editor Mark Cudmore. Mark, thank you. Remember, you can get up-to-date, of course, analysis and insight from Mark and the rest of the team. Go to MLive Go on your terminal. Let's get your stocks to watch this Monday and bring in Chloe Millet. Chloe.
Good morning, Tom. It could be a really good day for UniCredit this morning after it said that it plans to return of 50 billion euros to shareholders through to 2030, and it also beat estimates for the fourth quarter. So all of that could really boost the shares this morning and help UniCredit continue on this really good performance streak from over the last few months. And overall, the tone from the CEO was very optimistic, very positive, with Andrea Orchel saying that the plan is for consistent outperformance in terms of both profitability and investment return. So definitely a stock to be watching this morning. Moving on to InPost, and the parcel locker company is also in focus after getting bought by Advent International and a consortium led by FedEx. And so this is a deal that values the company at 7.8 billion euros, and the deal could be completed within the second half of this year. So we'd seen a big jump in the shares back in January when the deal was first talked about, and so we could see a very similar jump today as well as the deal is confirmed. And finally, Novo Nordisk could also be getting a boost after Hims & Hers says that it will not be selling cheaper copycat version of weight loss pills. So it will be seen as a big relief for Novo, given that it is pinning so much hope on this obesity pill, and that a competition from a cheaper rival would have been seen as a big blow. So we could see a lift in the shares, but it is worth remembering that it still has to compete with Eli Lilly, which is also developing its own obesity pill.
OK, thank you very much. Our equities reporter, Chloe Melly, of course. I'll throw into the mix NatWest. We've had confirmation of a story that was doing the rounds at the weekend that they are acquiring Evelyn Partners for $2.7 billion in enterprise value. So we'll see if that has any impact on the stock.
Yeah, big day for banks. Barclays tomorrow, isn't it?
Big week, yes,
so
certainly,
we've got a lot coming through in terms of...
and UniCredit this morning,
So we'll talk about banks as we work our way through the second hour of the show. The futures, I think, still reacting to what we saw late last week. Are we going to see the continuation of that theme? US
how sustainable was the run-up we saw on Friday after such a volatile week?
Yeah. Was it short covering? Does it sustain? I don't know. There's a lot kind of to think about.
Yep. OK, the European market open. That's coming up next, just in a few minutes' time. Futures pointing in the green. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Monday morning, good morning. Need to talk about Friday before we talk about Monday. So let's talk about Friday. Europe went out here. This is the S&P. So we basically got to price that bit in this morning. There's a load of other stories we need to price in as well. What's happening in China, what's happening in Japan. All of that needs to be factored into our thinking as well. There's a few corporates we've got to fold in too. UniCredit's out with numbers. But that basically is the trade this morning. So we'll see where we are mid-morning, and then I think we go from there. US futures are still fairly flat at the moment, but we've got to price that gap in, Tom.
Yeah, and futures are pointing in that direction, looking to price that in then. On the front foot this morning, European futures looking to add 0.4%. We're looking in terms of the breakdown at energy, oil prices dropping pretty sharply on the reduced geopolitical risk when it comes to Iran. But you're seeing higher metals prices, precious metals, iron ore and copper also slightly higher. So that will all filter through. For the FTSE 100, where futures are pointing higher by 43 points, DAX futures looking gains 0.3%. Anna.
Let's talk about some individual stocks then that could be on the move, Tom. And they come from a host of sectors this morning, some diverse names to put in front of you. UniCredit is certainly one of them, reporting numbers for the fourth quarter today, beating estimates with a focus very much on their plans over the next 5 years to return cash to shareholders, 50 billion euros to investors in the next 5 years through a combination of buybacks and dividends, of course. We're also watching InPost. There's a buyout on the table for this particular business, planned by Advent and by FedEx. It's for $15.60 a share, and it closed at $13.30, so we would expect to see some movement on that one at the start of trade. Also keep an eye on Novo Nordisk. One of the reasons it slipped midweek last week was around Hims and Hers and what they were offering, a copycat version of Wegovy over in the United States, and then they withdrew that on Friday after the close here in Europe, and so ADRs went higher. We'll watch to see how the listing in Copenhagen goes this morning. Guy?
OK, let's talk about this market open. Feels kind of mechanical this morning. You've basically just got to price in the gap. We'll see what happens as we come through the open. I think we'll check back in and see what the market looks like in a little while. But this morning, the FTSE 100 is expected to go higher, like most of the markets across Europe. We're expecting circa 0.5%. We've got a little bit of that this morning. We'll let it open, climb a little bit more maybe as we start to look around the rest of Europe to get a better sort of sense of direction. The CAC's going to be up a little bit this morning. Big week for luxury as well. Just kind of pay attention to that too. Don't ignore the fact that there are some really significant names coming out of France this week in terms of the reporting story. It's up by 0.2%. We're actually not getting quite as strong a market response as maybe we first thought, but the IBEX is out. It's up by 0.6%. The other markets are beginning to climb a little bit more, so the FTSE's now up 0.3%. We were looking for 0.4%, so we're pretty much there or thereabouts. But a positive start, an indication maybe more about Friday than Monday. So let's see how this market develops, Tom.
Top performing sectors so far. Basic resources up 1%. Tech also performing well, up 0.8%. That ties into what Guy has been talking about, of course, in terms of the upside that came through for the tech stocks, at least on Friday, out of the US. We'll see if that momentum can be maintained. Banks performing relatively well as well. UniCredit in the mix, up 0.7% in terms of the sector. On the downside, you've got energy down 0.3%. We mentioned the fact that oil prices have been falling on easing geopolitical risk. Personal consumption products as a sector is also off 0.5%. But it's basic resources, again, top of the list, up 0.9%. Gold and silver jumping again in the session today.
Yeah, to your point, Guy, we're kind of evenly split between the gaining sectors and the losing ones. So we're up by 0.2%, so perhaps not quite the gains we thought we could see. Personal consumer, grocery stores, that sector is under pressure. I can see that Greggs is down by 5.5%. That seems to be the biggest mover on that particular index.
There's a story in one of the papers this morning talking about weight loss pills and Greggs somewhere, I think. ASML, which I think has got its dividend this morning.
Yes.
Is actually up quite nicely. It's up by 0.5%. So that's quite a decent bounce. But it looks like it's the banks that are doing the heavy lifting this morning in terms of the points. UniCredit, Santander, BBVA, all up quite nicely. Some of the defence names are in the mix as well. But it's tech and banks that look like they're doing some decent lifting. Though NatWest is a little softer on its acquisition this morning.
Yeah, acquisition there in the sort of wealthier end of the consumer spectrum. Let's have a quick look at what's happening on the gilts market.
Yeah, actually, the bank I wonder whether the bank story is related to the gilts story this morning, because the UK banks are softer.
Right, and we are seeing a bit of movement in gilts. So this to do with the politics, very much watching what happens with gilts here. We're seeing some selling of gilts. We're up by 1 basis point at the short end. We're up by 2 basis points at the long end. So these are not by any stretch big moves. And I'd also highlight that on Friday, these markets, we saw yields dropping by 3-4 basis points. So we are not even unwinding the moves of Friday. Just to add that context, that doesn't change the fact that these markets are very jittery around political risk. And we are watching that very carefully.
But you're seeing a bid into EGBs, European government bonds, and selling of gilts.
UK, yeah.
Which is probably worth mentioning as well.
Let's talk to Helen Jewell, BlackRock's international CIO for fundamental equities, and we'll put the gilt story to one side for the moment, Helen. But let's talk about overall markets and where we are and your expectations. Last week seemed to be a week where we all had to question a lot of assumptions about winners and losers from AI and start to ask really hard questions about who the losers are going to be and can we even answer that question right now. That seemed to be a real preoccupation. At the same time, the overall indexes didn't reflect all of that nervousness necessarily because there was a lot of rotation. So what were you taking away from last week?
Yeah, thanks, Anna. I mean, you're absolutely right. The market was actually pretty flat, which is incredible for those of us who were involved in it day to day because there was so much going on. And you talked about Friday where you saw a bit of reversal. But what really the market was telling us last week is, you need to have diversification in portfolios because we don't know exactly how that AI story is going to play out. So on the one hand, you had this huge amount of capex being committed. So obviously with a large number of those Mag 7 names, so a commitment of like $650 billion, which is an enormous amount, more than 60% more than last year in terms of the AI spend, and a nervousness of the market of saying we really need to see some kind of return on investment coming through this year. And alongside that, you also had this situation where, because of Anthropic and Claude, a situation where, for the software companies, there was a question mark on actually how much disruption there was going to be. So those two stories going alongside each other. But what was incredibly important is that the money was staying in the market. So you saw a huge amount of rotation. You saw actually from a momentum perspective, 5-6 standard deviation moves in the middle of the week.
Yeah.
And actually what you saw, if you look at, for example, I mean, there's so many ways we can measure this, but one that caught my eye was that the S&P equal weight versus the S&P market cap had its best relative performance since the COVID vaccine was announced back in November 2020. So what you're seeing is not capital leaving the market, but you are seeing a broadening out, and you are basically seeing we need some kind of balance in portfolios, while, to your point, Anna, we actually work through how this might land. But that's where the opportunity is from an investment perspective.
Okay, and let's get more on that opportunity then, because another way of looking at it would be the realised dispersion that we saw in European stocks, and we've got a chart that sort of points to that, and that stood out as a big theme of last week. But that goes back to the rotation that you're talking about and how we find those winners. What are you thinking about where we lean next then on the AI trade? Is it still about hardware?
Yeah, well, less so. I mean, we're kind of shifting a lot more to the bits that we just think that there are still gaps and opportunities in. There are going to be opportunities in the hardware. For the software space, for example, it does feel the entire sector has been priced down, so trading at like 17, 18 times now, and there will certainly be opportunities there. But whilst we're kind of working out exactly where those opportunities are, what we're still really focused on is where the sums simply don't add up. So one of the areas remains in that energy space. There simply is not the energy and the energy infrastructure at the moment to supply what AI will need in terms of data centres. So we continue to lean into that space. We lean into things like a Prysmian, cable maker. You know, it's actually kind of just needed for that grid expansion, and you need grid expansion for energy, and you need energy, more energy than you needed for a long time. So that's where we're leaning at the moment. I think where there is that more clarity, but that's not to say we don't think there will be opportunities elsewhere as well.
The Nasdaq hasn't made a new high since October. The S&P is kind of going sideways. But to your point about rotation, when we think about flows into just the mechanical flows into the market, if the market just goes sideways, are we convinced that those flows are going to remain? Because they've been a huge factor that has driven the market ever higher. If we don't get index gains, is that a problem?
I mean, overall, you do want some form of index gains. I would also say, don't forget, Europe is actually doing okay. So, and that is because of the flows. We are starting to see those shifts from flows into Europe. We started to see that a little bit last year. We didn't see as much as I think.
ये क्रूड ऑयल का ध्यान रखना, ये पॉइंट ऑफ इंटरेस्ट से निकल रहा है. थोड़ा सा मैं एक्सपेक्ट कर रहा था और नीचे आएगा, प्राइस नहीं आ रहा है. एटलीस्ट ये 5,540 530 के अराउंड आ जाता है. यहाँ पर एक अच्छा सपोर्ट था. नीचे भी सपोर्ट है, बट ये भी एक सपोर्ट है. ये पॉइंट ऑफ इंटरेस्ट से निकल रहा है. ठीक है, जाने देते हैं, कुछ कर नहीं सकते फिलहाल के लिए. नेचुरल गैस भी देखोगे बिल्कुल साइडवेज हो गया रेजिस्टेंस पे. नो बिग मूव राइट नाउ. तो यहाँ से भी जा सकता है ऊपर ये पॉइंट ऑफ इंटरेस्ट से, बट अभी इस लेवल पे इंटरेस्टेड नहीं है. काफ़ी बार टेस्ट हो गया ऑलरेडी. सो एक्सपेक्टेड है कि थोड़ा सा मोमेंटम अपसाइड की ओर हो, देन मार्केट डाउन साइड की ओर हो, देन मार्केट मूव करे अपसाइड. सो ध्यान रखना इस चीज़ का. गोल्ड का शॉर्ट टर्म व्यू ऑन फॉरेक्स में गोल्ड सिल्वर नहीं देख रहा हूँ सर आजकल, तो भी कुछ खास व्यू नहीं है. चार्ट देख लेता हूँ. वैसे कुछ मेरी पोजीशन चल नहीं रही है तो मैं चेकआउट कर नहीं रहा हूँ. इंट्राडे में वैसे भी बुलिश ही है. ओवरऑल गैप अप हुआ था, उसके बाद साइडवेज चला गया. 4 आवर टाइम फ्रेम. कोई भी नहीं है गोल्ड और सिल्वर में फिलहाल के लिए। एक 70 सिल्वर में बता रखा था $70 to $74, वो काफ़ी स्ट्रॉन्ग है, सपोर्ट अभी भी होल्ड करके बैठा हुआ है। सो जब तक वो है उसके नीचे जब तक जाता नहीं तो और ज़्यादा बेरिश तो नहीं होगा सिल्वर स्पेसिफिकली। गोल्ड का कह नहीं सकते, ओवरऑल तो बुलिश ही है लॉन्ग टर्म के लिए। शॉर्ट टर्म में हो सकता है वापस प्रॉफिट बुकिंग आ जाए थोड़ा बहुत। एक मेजर रेजिस्टेंस है ऊपर 5200 के अप्रॉक्सीमेटली। 5200 के ऊपर अगर सक्सेसफुली क्लोजिंग देता है 4 आवर टाइम फ्रेम या फिर वीकली टाइम फ्रेम, देन देयर आर चांसेस कि वापस ऑल टाइम हाई की ओर जा सकता है। अभी के लिए वही कहेंगे 4200 के अप्रॉक्सीमेटली है रेजिस्टेंस स्ट्रॉन्ग, तो वहां तक स्पेस है, उसके ऊपर अभी मुश्किल लग रहा है अनटिल अनलेस कोई नहीं आ जाती। मुझे लग रहा है शायद थोड़ा मार्केट कंसोलिडेशन कर सकता है इस एरिया के आसपास अगर बेस बनाता है, बिकॉज मार्केट में अभी भी पैराबोलिक जो रैली है वो ऐसा नहीं है कि खत्म हो गई है। नीचे से चार्ट को देखोगे हायर टाइम फ्रेम पे स्टिल मार्केट इन अ पैराबोलिक कर्व, एंड नॉर्मल इस तरह के पैराबोलिक कर्व सस्टेन नहीं करते अनटिल अनलेस बेस ना बने। तो अगर कहीं बेस बनाते हुए जाता है तो लॉन्ग टर्म के लिए अच्छा रहेगा, अदरवाइज विदाउट बेस बनाते हुए फिर चला गया ऊपर साइड पे तो वही मंथली टाइम फ्रेम पे अगेन पैराबोलिक कर्व कंटिन्यू रहेगा, विच इज़ नॉट गुड। क्योंकि फिर जब भी गिरेगा प्राइस तो कहीं ऐसा ना बड़ा फॉल एक साथ ही हो जाए। तो बेस बनाता है अगर 4 आवर टाइम फ्रेम में तो बेस्ट है फॉर लॉन्ग टर्म, इवन फॉर अ शॉर्ट टर्म। बाकी ऐसा कोई व्यू नहीं है मेरा व्यू इसमें। नेचुरल गैस भी काफ़ी देर से रुका हुआ है इस लेवल पे, अभी तक तो चला जाना चाहिए था ऊपर। ये पहली बार नहीं आ रहा है, ध्यान रखना इस लेवल पे। प्रीवियसली एक बार ऑलरेडी इस लेवल को ये टेस्ट कर चुका है 3 फरवरी को। वहाँ से एक स्ट्रॉन्ग बाइंग ऑलरेडी आ चुकी है, सेकेंड टाइम है। कैंडल क्लोजिंग नहीं होनी चाहिए अब डेलो के नीचे। डेलो के नीचे कैंडल क्लोज होता है अब 15 मिनट का, तो मुझे लग रहा है फिर ब्रेक डाउन करने चला जाना चाहिए। अभी भी होल्ड है, बेस्ट के सिनेरियो थोड़ा सा रिकवर करे, एटलीस्ट 292 के ऊपर क्लोजिंग बेसिस पे चला जाए, तब थोड़ा सा मोमेंटम आने के चांसेस हैं। नहीं तो या तो एक साइडवेज ही रहने वाला है या हो सकता है डाउन भी ना आ जाए। बट यार डे लो इज नाउ वेरी क्रूशियल लेवल फॉर नेचुरल गैस 15 मिनट MCX चार्ट। डे लो के नीचे अगर एक 15 मिनट की कैंडल क्लोज होती है तो लगता है ब्रेक डाउन हो सकता है उस केस में। ठीक है, मॉर्निंग से सपोर्ट जोन पर ही है एक्चुअली में, 5 घंटे हो गए सपोर्ट जोन पे ही। लेट्स सी 130 की कैंडल ऑलरेडी चली रही है, न्यूयॉर्क सेशन ऑलरेडी ओपन है, कुछ वॉल्यूम आता है तो आज एक तो डेटा भी नहीं है कुछ, नहीं तो फिर सेकंड हाफ में ही मोमेंटम आएगा मोस्टली।
Thanks very much indeed. Helen Jewell, BlackRock's International CIO for Fundamental Equities. Thank you very much. OK, let's talk about where we are with these European equity markets and show you what's happening. We'll get to the banks in a minute. Rheinmetall is up by 2.27%. The defence stock story is back on. Chips are actually having a fairly good day. I think SML is ex-dividend. Schneider's up by 0.7%. Standout story, though, post-Friday, and what we saw with him and hers and the copycats is Novo, the stock bouncing on the news we saw as a result of the withdrawal of that copycat drug late Friday. Let's see what else we're watching. Back to the banks, Chloe Melly.
Good morning, Guy. UniCredit is doing pretty well today for the fourth quarter results, beat estimates, but also what is really pushing UniCredit in the green this morning is the plan to return 50 billion euros to shareholders through to 2030. So the outlook is definitely very positive for UniCredit, and therefore we are up about 4.6% this morning. Moving on to another bank that is not doing as well, and NatWest is in the red this morning. It agreed to buy the wealth management company Evelyn Partners for £2.7 billion, and this is part of a strategy to access more wealthy clients in the UK market, in the home market for NatWest. But perhaps that price tag is a little bit too high for investors, and we are down about 4% for NatWest. Moving on to InPost, and the parcel locker company is up very strongly, 13.4% this morning after this takeover deal from Advent International and the consortium led by FedEx. And so this is a deal that investors are getting quite excited about. It values the company at about 7.8 billion euros, and we are most definitely in the green this morning. Novo Nordisk is also in the green, which, as you mentioned, Guy, is on the back of this, of hims and hers saying that they will no longer sell this copycat version of the weight loss pill. And this is going to be seen as very positive for Novo, given that it is pinning a lot of hopes on this obesity pill and what it can do this year for the company. And we are up about 8%. On the other hand, the fact that this weight loss pill is happening is maybe not such good news for sausage roll sales. And Greggs is down this morning after being cut to hold by Jefferies analysts on the back of those risks coming from weight loss drugs. And we are down about 3.3% for Greggs this morning.
OK, not good for the lovers of the bacon breakfast roll. Just one item on Greggs.
You sound like you're familiar with it.
I'm just looking at the menu right now. They haven't updated it for a while. There is a vegan sausage breakfast roll, though.
Oh, well, they were almost world famous at one point, weren't they, for the vegan?
For the vegan sausage rolls. There we go. Greggs. So. Under pressure. What isn't under pressure is the banking space, as our previous guest was saying. UniCredit promising to return 50 billion euros to investors over the next 5 years. That stock is jumping. This, as fourth quarter profit blows past estimates. We'll bring you the details next. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back. This is the opening trade. It is Monday, everybody. 8:19 here in Europe and here in London. And we have European equity markets going a little higher this morning, actually making better gains than they were just 5 minutes or so ago, up by around 0.5% on the stocks Europe 600. The Xetra DAX getting some decent gains this morning. Travel and leisure stocks doing OK. We've got oil prices coming down, so that sometimes helps those, doesn't it, after the weekend was more peaceful in the Middle East than had been feared.
Yeah, defence stocks, though, ironically, up. That's probably the biggest driver in terms of what's driving the DAX this morning. Rheinmetall's up by nearly 3%. Let's talk about banks. Big theme of the morning as well. UniCredit higher. The Italian lender said it plans to return around 50 billion euros to investors over the next 5 years. Earnings were a little kind of more iffy in terms of maybe where the market is this morning, but it doesn't care because loads of money's coming back, and that's kind of the main driver. Let's figure out what is happening here. Our finance and investing managing editor for EMEA is Tom Metcalf, joining us around the table. Am I slightly sort of simplifying the situation? Lots of money being returned, earnings, do I really care?
No, Guy, you're right on the money. It was a messy set of earnings, and there's certainly reasons, you might pick out things to be slightly concerned about, but the big picture is Orchel coming out saying, look, 50 billion through 2030. So you can really see his playbook, right? He is just laser focused on that, and then you've got the much more complex matter of, will he ever manage to get any sort of big name M&A? But frankly, if you're a shareholder right now, you're probably quite just happy. Give me the returns, and Q4 is always an interesting one for UniCredit. So they take a few charges, it becomes a bit messy. But that does set them up nicely for sort of future outperformance across other earnings.
Does that return of cash to shareholders suggest that he's not going to be pulling the trigger on significant M&A? They've built up that stake in Commerzbank. They've struggled, of course, to get anything further across the line, regulatory reasons. Is it a signal that they're going to be more focused on returning cash to shareholders rather than M&A, or you don't read it that way?
No, I don't think yet. I mean, I think he's keeping all his options.
And they do
open.
both?
Yeah, I think it would be a stretch, but I think definitely in terms of under the plan, they could. And, I think like Orchel said, he's got until about 2027 to make a call on Commerzbank in particular. So, no, I think he's a deal maker by heart, right? And so that's the thing I find fascinating is pretty much all the success of UniCredit has been based on the operational side.
Let me ask you about the UK banking sector right now, Tom. We've got NatWest down, 5% or so this morning? 4.5%. They've agreed to buy Evelyn Partners for £2.7 billion. Why the negative response, or is it just, the knee-jerk reaction to spending money on M&A?
I think it's as much that reaction. We normally see it with M&A. So, I think it's about, 3% you were saying down on the shares? It makes sense. Every bank in the UK and, wider also just wants to get into this wealth market and, get that recurring revenue. So I think it was a pretty competitive deal. So that might be something shareholders reacting against. We knew Barclays were in there right to the last minute. And certainly 2.7 billion enterprise value is a pretty decent price to be paying.
OK, Tom Metcalf, our EMEA finance and investing managing editor on UniCredit, on NatWest deal making on that front as well. Tom, thank you. Let's get back to a check on UK assets. We did see a sell-off in gilts. We're seeing that, and then it paired, and now we're kind of back again in terms of yields up about close to 3 basis points on the front end, 365 on the 2-year. The 10-year is yielding 454, up 3 basis points, but not particularly dramatic. But the selling is there. We tie that to the UK politics and the uncertainty. Keir Starmer and his future very much in focus. The pound currently trading versus US dollar at 136, a little softer by 0.1%. Let's bring in our Markets Today editor Morwenna Coniam on how the politics of the UK, the political uncertainty, ties into what we're seeing in terms of UK assets. What is the key takeaway? Are markets bracing for this Prime Minister to step down imminently?
It's not a huge reaction this morning. I think this has been building up for a while. Of course, we had the news over the weekend about Morgan McSweeney, which focuses it even more so. And, the betting odds have crept up slightly there as well. But overall, at the moment, we're seeing yield across the curve up about 3 to 4 basis points. That's not a huge move, particularly if you look back, say, to the summer where there was some concern about Rachel Reeves. We saw them shoot up at 18 basis points. So this just isn't that big compared to previous moments of political uncertainty. The pound is actually only a little off against the dollar this morning at the moment. It is down a little bit more against the euro. But what we've been discussing this morning is that a lot of it probably comes down to monetary policy as well. We had the Bank of England meeting on Thursday, signalling a slightly more dovish direction. And that comes in contrast to the ECB, who seem to be sort of at the end of their policy easing cycle. So that move we're seeing that you know, it is definitely exacerbating those trends already, but is not the only driver of asset moves today. And
Moena, it's interesting. You know, if you're in the left of the Labour Party and you want to get rid of Keir Starmer, you're pushing for that to happen. There is another argument that there's a big election coming in May, or you know, at least local elections coming in May, and maybe they won't go so well for the incumbents, and therefore you wait until then and you make Starmer take the fall for that. I mean, you could see logic in either argument, I suppose. And so maybe is the market is it a wait and see here? And given there's a lack of clarity over who would take over as well.
Well, I think exactly your last point there is a certain element of wait and see because there isn't an immediately obvious situation that's going to evolve from this. And I think there is perhaps a suggestion in some camps that you wait it out, you see how things fall out whilst everybody actually gets themselves in position, if that is what's going to happen for a proper leadership challenge. You know, at the moment, of course, Angela Rayner and sort of Wes Streeting have been touted as the sort of front runners, but at the same time, you've got at least 6 other names in the mix as well. And it's not entirely clear that neither of those names are uncontroversial at the moment as well. So perhaps for those who aren't gunning for Starmer to leave, just in principle anyway, there's not necessarily that much merit in forcing the situation.
OK, Moena, thank you very much. Moena Coniam, Bloomberg Markets Today editor, of course, with us this morning on the market reaction and the politics. It was interesting to me that list of contenders was growing over the weekend. More and more people being mentioned, which it does give you a sense of a lack of coalescing around a
But does that mean it's more likely that Starmer stays?
Maybe.
Because you've got to get quite a big number of MPs behind you to become the next leader. So if the party feels more fragmented, if there are more camps, is it harder to get to that point?
Yeah, perhaps.
That you get a leadership challenge.
We're waiting for more details in terms of the vetting process and what could come out in terms of the emails and the text messages and to what extent that ties Starmer to that decision and possibly fuels calls from his own cabinet.
And the Met seems to have delayed some of that, doesn't it?
But the Chief of Staff going, is the Chief of Staff about to publish a whole load of other stuff? So that could come this week.
When we come back, we will talk energy markets. We'll join Vikas Dwivedi. That conversation is next. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Happy Monday. This is the opening trade. We are 30 minutes into today's session. So a very strong session, of course, on Wall Street on Friday, making up for some of the losses of the previous week. Then a decent session in Asia, particularly focused on the Kospi in Korea, but also Japanese stocks as well, surging on the back of Takaichi's pretty historic win. European stocks are up 0.3%. You break things down, there is some idiosyncrasies in terms of what's happening in the energy space with oil under pressure. The miners doing very well. That's lifting the FTSE 100 to some extent up 0.2%. Stronger silver, stronger gold in the session today. The FTSE MIB lifted by UniCredit, the banking space performing well, a big return of cash to shareholders. The FTSE MIB up 1%. Over in Germany, the DAX gaining 0.5%. Some of the industrials, some of the defence names performing strongly in the session. Guy, what are you seeing?
Internals 2-1 up versus down. You've got 382 up, 299 down. Volume's a little light. We'll put that down to it being a Monday morning after a busy weekend of sport. Did you stay up and watch the Super Bowl? Let's talk about what's happening in terms of the single stock news. Tom's just given us some of it. UniCredit, certainly one of the standout stories, but Novo's having a really good day on the back of the him and hers pill being withdrawn. It's up by 8%. UniCredit's up by 5%. InPost is up by 13%. There is an offer on the table, Advent-led consortium bidding for this business. The stock responding quite strongly to it. So you're getting some M&A in the market this morning. UniCredit on the results, Novo Nordisk on what is happening in the GLP-1 space over in the United States. Downside looks like this. Acquisitions for NatWest driving that stock lower, but UK stocks are a little lower as well. Lloyds is down by 1.83%. Can I draw a line between that and what is happening with UK politics? That might be a stretch, but nevertheless, UK banks under a little bit of pressure. Gold, silver, gold in particular, going back up again. Pandora responding negatively to that. Its stock is down by 4%, Hannah.
Guy, let's get an update on some of the other news flow this morning. The Japanese Prime Minister Sanae Takaichi has secured an historic election triumph. Her ruling Liberal Democratic Party, the LDP, achieved the biggest post-war victory for a single party in a general election. An extraordinary transformation of fortunes for a party that was on the ropes last summer before getting behind Takaichi back in October. Bloomberg has learned that Chinese regulators have advised financial institutions to rein in their holdings of US Treasuries, citing concerns over concentration risks and market volatility. Communicated verbally to some of the nation's biggest banks in recent weeks, the guidance reflects growing wariness among officials that large holdings of US government debt may expose banks to sharp swings. And Kevin Walsh has called for a new accord with the Treasury Department, overhauling the relationship between the two institutions with a new version of an agreement from 1951. A revamp could prove to be just a bureaucratic tweak with little near-term impact for the $30 trillion Treasuries market, but a more ambitious effort involving a shake-up of the Fed's current $6 trillion-plus securities portfolio could see increased volatility and, depending on the scenario, deepening concern over the US central bank's independence. Tom.
OK, so from central banks on a big week, of course, inflation, jobs data through this week to what's happening in the energy space right now. You've got Brent currently down 0.7% at 67.60. WTI at $63 a barrel, down 0.7 as well. The focus, of course, on the geopolitics. Oil down after Iran's president described Friday's nuclear talks with Washington as, quote, a step forward, even as he pushed back against any attempts at intimidation. Joining us now for an insight into the impact these talks are having on the energy markets is Vikas Dwivedi, who is Global Oil and Gas Strategist at Macquarie. Vikas, good morning. Thank you for joining us.
Thank you for having me.
What assumptions are you making about Iran oil flow on the back of these talks going forward?
On the crude oil flows itself, we are not expecting any real changes, especially directly vis-a-vis like what Iran may do. And the problem is they don't have a tapered way to approach it. It's too big of a hammer. Either if you do much to the Strait of Hormuz, you block way too much volume, and then the reprisal from the rest of the world, the U.S. in this case, is too strong. So, you go from a rhetorical match to a full-out, military engagement too quickly.
These markets seem to be pricing in a resolution, or at least an easing of tensions. How are you thinking about the geopolitical risk premium priced into oil at this point?
Yeah, we think it's in the range of $6 to $8 a barrel. So it's still very big, and more than 10% of the price. And the reason is the market cannot actually bear the risk. Everybody generally agrees the market is very oversupplied globally. We do too. These are our biggest surplus balances that we've seen since we've been doing these models, ex-COVID, right, obviously. Yet it's very hard to short this market, because you've got this looming risk. Even if it's a very low probability of some supply issue happening, you can't short this market comfortably.
When do we get clarity enough to short the market? Are there kind of milestones that you're looking at?
Yeah, look, we think there's still a decent chance that there will be some kinetic exchange, right? And it may be
around Iran.
Yeah, between Iran and the U.S., Iran and Israel. It's not our base case, but it's a high enough probability that you cannot ignore it.
Okay.
And it may be the highly telegraphed and even choreographed, like, hey, we're going to tell you when, and we're going to tell you how, but be on the lookout for it, and Iran will do their response. And I think until that has happened, the market won't be very comfortable shorting.
So once you get that, in a weird way, oil prices go down on the kinetic action because we've seen it.
Yeah, exactly. Everybody will have seen, like, hey, you know what? We can still have a measured exchange with each other. Like, no one's going to go full out and try to, overwhelm the other side. And we think Iran is going to be far too smart to try to even encroach into that territory.
Right.
There's a lot of unpredictability with President Trump. You push a little too far, and it could backfire very badly.
Vikas, away from Iran, can I ask you about the global supply glut narrative that has been dominant for quite a while? Because some people really do focus on that, and we see elevated stocks on the water, and they maybe point to that. But others are referencing onshore stocks and saying, actually, in January, maybe they weren't as strong as people had expected.
Absolutely.
What's the detail that we need to be aware of there?
Yeah, great question, and it's certainly where the oil market would like to focus. Our clients would like to focus on that and not try to predict what Ayatollah Khamenei or President Trump, like kind of trying to figure out their MO. Look, we think the market is in a massive glut. Okay, and it's very fair pushback. Well, prices don't suggest that. Spreads, right? The structure of the curve doesn't suggest that. The January, to your point, January stock numbers don't suggest that. So what's going on? What's going on is we've had an unusually large number of one-off outages on the supply side. We think, between higher than expected refining runs, which kept exports down, and outages in so many places around the world, whether it was Russia going down, Venezuela temporarily going down, Turkey, Iraq, Mexico, without listing half the world, it's like you had a lot of outages, and that kept a lot of exports off the market. And that's why December and January have not looked as big on the onshore. The other thing is most of the stock builds have still been in China, right? Their SPR is building rapidly even now, way above what a normal need would be. So,
Makes
normally,
you wonder why.
Well, it does beg that question, right? Normally, countries want to have 90 days of net imports.
Yeah.
China is on track to do 150, maybe even 180 days.
Okay.
So people do ask, why? Why do they need it to be that big, right? And it leads to other interesting questions. But.
Okay. So you do believe still in then the glut story reasserts itself, and that causes prices to drop quite low, 50s you're talking?
Low 50s, Brent, and maybe below 50 for sort of a one touch on the path. Yeah.
And what does that do to investment and, clients, companies' ability to go and invest? I mean, President Trump wants more oil companies to go invest in Venezuela. Do they do that at $50 a barrel?
No, they won't. No. If it gets stuck there, it won't. We don't think it'll stay there. But if you go down that low and for various reasons, let's say it stays there for just long enough, meaning, a couple of quarters, that will slow down investing in oil and gas, especially in the shale, but it'll also disincentivize Venezuela badly. Because then you'll be in a situation where, hey, I have to worry about my employee safety, a really volatile political situation, and terrible prices all at the same time, right?
Yeah.
It's not a good
The
look.
risk and reward is not... Yeah.
That $50 on Brent, that's stripping out geopolitical risk. That's where you get to. Once we've kind of looked through and we've got some clarity on the geopolitics, you get to $50.
Yes.
And that's for a couple of quarters. That's the kind of time frame you see it at.
Yes. Our struggle, by the way, is, we think the numbers we have forecast on the supply demand still are playing out. But it's easy to forget, we just finished the first year of the Trump administration. So the question for us is, will it be even more active in year two? Will it be the same as year one, or will there be some tapping of the brakes?
When does Venezuelan oil come onto the markets then?
Starting really now. It's picking up. I think some of the narrative that
material barrels on the market from Venezuela.
Yeah, we think of materiality as every 100,000 barrels a day,
right,
up or down, and we think that's already underway. There was probably about 200 to 300 of low-hanging fruit that just needed a little TLC, right? And we think that's coming. The next step will be more oil field services.
Yep.
And then you need E&Ps to actually arrive and drill more. And then the final step will be the downstream refining and upgraders. They have to get fixed. So you'll hit a few plateaus along the way, but we think Venezuela will get some extra oil, and it'll probably arrive in the U.S.,
Yeah, which will help gasoline prices into the midterms. Thank you very much.
Yes.
Trump wants to accelerate the U.S. economy into the midterms. He's hoping that we see a pickup in economic activity. How many barrels does that take?
From the oil industry?
Yeah, no. If we're going to see if we see a faster economy in the States, is that positive for oil prices? Presumably, it must be. Is there a demand picture that comes with that accelerating economy?
Oh, absolutely. Yeah. Look, we actually think 2025, the global economy took a lot of body shots, right?
Yep.
And it was resilient. And this year, we think it's going to be much better. So you get more driving globally, you'll get more driving in the U.S., more goods being moved. Jet demand is sort of flattish right now, but we think that'll pick up. So all in, it'll be very positive for the demand side and petroleum refining. But if along the way prices stay elevated because of the geopolitical situation, you get both. You get the incentive to drill more and produce more oil, and you get good demand to refine it. And it actually ends up being a nice 1-2 positive punch for the U.S.
Okay, interesting in terms of how that changes the demand dynamics for oil then through the rest of this year. Thank you very much, Vikas. Really smart insights on an important day again for the oil and gas sector. Vikas Dwivedi, who is oil and gas strategist at Macquarie. Coming up, ESPN says the Super Bowl winning Seattle Seahawks may be up for sale. What is the team's current valuation? We're going to give the answer when we come back. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers, and it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just it's hard to call it because the technology trend and the investment is real.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Well, before the break, welcome back, by the way. We asked, what are the Super Bowl winning Seattle Seahawks valued at? The answer, $6.6 billion. That is according to online digital media platform Sportico. ESPN reporting that the NFL team will be up for sale. After the Super Bowl, Seahawks sale will likely be the biggest NFL deal ever, with the potential to surpass the purchase of the Washington Commanders in 2024 for about $6 billion. The headlines have been focused not just on the win, but also on Bad Bunny. Anna Edwards is a fan. Anna.
Thank you very much. Yes, I thought it was a Bad Bunny gig with some football on the side. Is that how it actually went down, maybe?
Certainly seems the half-time's always important. Everybody takes that seemingly very seriously.
They do, and the business of sport, that seems to be the headline here at Bloomberg. Right, let's talk about what's going on in Japan, because this has been an incredible weekend for Japanese politics. The Japanese Prime Minister, Sanae Takaichi, has secured an historic election triumph. Her win now positions her as the nation's strongest leader in the post-war era. Speaking on Fox News, US Treasury Secretary Scott Bessent said the US would now be stronger in Asia.
Japan, the prime minister called a snap election, the quickest snap election in Japanese history. And boy, has she had a big victory today. She's going to have 2/3 majority in the upper house. President Trump endorsed her last week. She is a great ally, great relationship with the president. And when Japan is strong, the U.S. is strong in Asia.
The US reaction there. Joining us now from Tokyo with the latest on Takaichi's win is Bloomberg Japan economy and government reporter for Bloomberg, Erika Yokoyama. Really good to have you, Erika. So the election win was expected, but the scale of it quite unexpected, perhaps. How does that change the political landscape?
Exactly. As you said, the scale was far larger than any forecast by local media, which was predicting roughly 300 seats. So the LDP secures 316 seats. As you said, this is the largest number for a single party in the post-war history, and it's also exceeded something called absolute stable majority threshold of 261 seats, allowing the party to control all 17 committee chairmanships and have enough votes across relevant panels to smoothly pass bills and budgets. This is totally different landscape from last week when the LDP managed a slim majority of 233 seats, even with coalition partner Ishin and some independent lawmakers. The LDP picked up many seats from the Centrist Reform Alliance, which is newly formed opposition party by Komeito, and Constitutional Democratic Party, which used to be the largest opposition party. So now Takaichi's ruling coalition finds it much easier to push forward with whatever she wants to do, from economic package policy or defense build-up, without much obstacle from other parties.
Erica, on that list then, what is going to be top of the list for this newly emboldened Japanese Prime Minister? What is she going to prioritise?
Sure. Yeah, the inflation has been a long-term concern, but before doing anything, she first of all has to get the budget for the year starting in April through the diet. That's priority. You know, the ruling coalition is still in the minority in the upper house, so some amendments there are possible actually, as we saw last year. But given now the LDP has a solid majority in more powerful lower house, this should be a manageable task, I guess. Then once that budget checkbox is the budget is done, she probably moves on to sales tax cut. She already pledged suspending 8% consumption tax on food for 2 years. She now needs to think about how she will finance 5 trillion yen required for the measure. Then there will be potential market turmoil because of that.
Erica, great stuff. Thanks for the update. Really appreciate it. Erica Yokoyama in Tokyo, updating us on the Japanese political story. One of the kind of risk events that we've been watching into this week. There are plenty more still to come. Keep an eye on what's happening in South Africa. You've got the Indaba conference taking place. Plenty of Fed speeches coming through as well today. International Energy Week is kicking off in London. You're going to see plenty of names coming through. NFIB, small business optimism. That feels like an important data point, given the kind of the rotation we see towards small and mid caps. Lots of data out as well. US jobs Wednesday delayed. UK GDP Thursday, Friday, we get US CPI, plus the Munich Security Conference as well. So that's going to be an interesting one to watch out for. Let's talk about kind of where we are with these markets, though. Big day Friday, kind of tough week last week, big day Friday, equities come back. Are we on a sounder footing, or was that just a short covering rally that still leaves us with potential for volatility? Scarlett Montgomery-Koenig from our markets team joining us, Michael Pasika, European equity strategist, joining us. What do you think, Mike?
It's a good question. Look, we had a huge washout in software stocks.
Yep.
You look at positioning now on that sector. It went from 18% last year, according to Goldman Prime Book, into 3%, which is a record low. So literally, it's been completely sold, especially on the hedge fund side. I think now the real money, long money, is also selling. But we are honestly, we had a proper sell-off on those, and not just in terms of volume, but also in terms of proper exposure from asset managers. So you could argue that we have seen a lot of the capitulation in there. Does that mean we need a rebound, or does it mean it's uninvestable and no one wants to touch it? Maybe. But I would say the bulk of the outflows has happened.
So that's a key dynamic, and it's interesting that earnings actually for software stocks in the S&P 500 are forecast to rise, yes, not drop. The rotation trade is also part of that as well. How convinced are you that is a sustained theme?
So the rotation trade has been ongoing for some time now. We've seen a rotation out of US equities into international equities, Europe, Asia, emerging markets, and also within the US market, there's been a very strong rotation into small caps, into other sectors. Last week, if you look at ETF flows, we had a record outflows from tech ETF into other sectors of the US market. So all the other sections of the market are getting inflows. And you can see it with the outperformance of the S&P equal weight compared to the S&P 500. This is very typical of a proper rotation going from one side to the other.
Yeah, absolutely. And we saw it in Europe with lots of people talking about dispersion. Realised dispersion in Europe was pretty high. So the volatility, there's drama in the narrative, but it's not shown at the overall index level. Skylar, what did you take away from last week and that dynamic that we were just hearing about from Michael?
Yeah, I mean, I think you need to be more considerate when you're picking stocks, and that's something that's come across the board, right? But generally what you see is that when you have these diversions between earnings and equity performance, they don't last for very long, because at some point you derate and you become cheap enough that people still want to buy that. And so I think, eventually you'll get there with software. I do wonder more long term, though, because we had this massive divergence between US and European equity performance versus actual earnings, whether or not that corrects, because that implies a bigger move, and whether or not the US begins to outperform again as those earnings have come in quite strongly.
Is it getting harder to buy the dip?
I think it is. It definitely is, because people are cautious around the idea that some of these things are overpositioned. Maybe now that we've had to clear it, it becomes less hard. But I think it also becomes harder because you're worried about how you hedge that, right? We've seen that precious metals aren't helping you as much as they used to. People are worried about government bonds more generally, about yields rising on higher term premium. Just there's greater risk within the system. And you have all these headlines going across you that just make it harder to see what it is going forward, especially because some of the moves aren't fundamentally driven.
Skylar, I wanted to ask you about what's going on in UK politics, because we have not a huge amount of movement in cable, but the dollar's on the move, so there's that. But in the euro against the pound, it did start a couple of hours ago, but we have this gradual weakening of the pound against the euro. Bond markets a little calmer than they could have been given the politics in front of us. Things look hectic in UK politics. We don't know where this is going to land, but what do you make of the movement in FX this morning?
Yeah, I mean, I think it's because we've had a couple of these kind of shaky events within politics in the last few months, and so there's a higher bar for reaction. What I would say, though, is we were doing so well on the pound. As in post-budget, fundamentals were looking stronger. Growth had become perkier, inflation had peaked, so you could get those cuts. And that means that there's not a risk premium priced in anymore. So you had the gap between rate differentials and Euro GBP closed quite significantly, and that political risk isn't going away. There's a by-election at the end of February, there's local elections in May, and it's just downside risk from there. So you should probably price a bigger premium.
Michael, do I hide out in UK stocks, though? Because if the pound goes down, doesn't that mechanically help the FTSE 100?
It does help it. The thing is, investors are not interested in UK stocks.
No.
They don't want to buy.
Just
UK
another reason
stocks.
not to buy.
No, actually, that's not true.
We find some voices who are quite.
The Frenchman says with a sense of glee.
Yeah, we do have some guests, and they're not all British.
The Frenchman would say that the CAC 40 is doing way worse than the FTSE 100. So I'm okay with that. It's fine. No, there's a lot of good stocks in the UK. It's still a lot cheaper than a lot of other markets. So there is some interesting flows there, but every time there's something going on with the UK government, people just want to stay away. Oh, this is UK stocks, so I'm staying away.
Yeah, we've seen that before. Michael, Scarlett, thank you very much indeed. That wraps up the show. Plenty more still to come. We've got the European Commissioner for Competition coming up very shortly on the pulse. Look forward to that. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The gamble pays off. Japan's prime minister secures a supermajority in parliament, making her the country's strongest ever leader in the post-war era. The UK prime minister's leadership hangs in the balance despite sacrificing his right-hand man over the controversial appointment of Peter Mandelson. Plus, China calls on its banks to rein in their holding of US treasuries, citing concerns over concentration risks and market volatility. Now let's get straight to those markets to check the volatility that we're seeing from within and without. Look, treasuries, but also the dollar dipping because of China warning on U.S. bonds. We'll spend a bit of time on that. They say it's not because of geopolitics or the credit worthiness of the U.S. They say it's a matter of diversification. Still, it is having an impact, and yields are rising across the curve, led by the longer end with the 10-year rate up about 3 basis points to 4.23%. I'm also looking at sterling because of what we're seeing with Keir Starmer under pressure, and then a couple of other things that we're looking out for. Look, gold 5,026. We have a couple of analyst notes, for example, from Goldman Sachs, looking at volatility ahead. Now, let's also look at the European markets map. That could give us a good indication of whether it's following what the U.S. was doing yesterday. You can see the IBEX and the FTSE MIB over in Italy gaining a touch, the FTSE gaining 0.2%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, a pretty bold gamble by the Japanese Prime Minister has paid off in spectacular fashion, with Sanae Takahashi securing the biggest ever parliamentary majority for any post-war leader in Japan. It's an extraordinary reversal of fortunes for the Liberal Democrat Party, which lost control of both houses of parliament just 7 months ago. Well, joining us now is Alice French, Bloomberg's Japan stocks reporter. Alice, thank you so much for joining us. And we're all glued to the screens yesterday. When it comes to domestic fiscal policy, what is Takahashi likely to do with this big win, and how fast will she do it?
Morning. Yes, I mean, what a showing for Takaichi. I think she really kind of beat a lot of people's expectations with that huge majority. And of course, you know, we know that that she will be pushing ahead with these fiscal expansionary policies. She's been focusing on things like AI. Defense is a big topic for her, and I think really the sky is the limit here in terms of, you know, she has such a huge majority in Parliament. She will no longer have to listen to those opposition parties in terms of their calls for tax cuts and things like that. Now, having said that, in part of, you know, as part of her election campaign, she was she had been promising that she's going to cut the tax on food temporarily. Now, that had caused some kind of worries in the bond market in the lead up to this election. You know, we know that she is actually about to start speaking here in Tokyo, and so the market will be looking for signs of sort of fiscal responsibility from her, right?
Yeah, and she actually has started a couple of minutes ago, and that's exactly true. Markets want to know what she's going to do fiscally. I mean, there's also some constitutional reform that's back on the table. But what are the markets now factoring in?
Yeah, I mean, the reaction today has been interesting, right? We saw the Nikkei and the Topix, those stock benchmarks, really rallying today. You know, the Nikkei up around 4% up, a new high crossing that 57,000 mark at one point. And this is all kind of expectations that she's going to be pumping more money into those key industries, whether it be AI, quantum computing, defense, construction, infrastructure as well, set to benefit. But of course, the outlook for sort of bonds and the yen slightly less clear. As I said before, you know, she has sort of been part of triggering bond sell-offs in the past. The yen has also been weakening, you know, close to that kind of 158, 159 to the dollar level, which is sort of the danger zone for intervention. And we know that sort of in the days leading up to the election, she had spoken about the benefits of the weak yen for exporters here. And so I think, you know, the bonds and the yen are really going to be reflecting that caution. I think today the initial reaction has just been, look, we have a stable government, you know, back in power. She has this really strong mandate. She can push forward with those spending plans. Now I think what's going to matter is how will she actually fund all this? How many tax cuts are actually going to come into play? Will there have to be extra bond issuance? And I think that the bond market and the yen is going to be stricter on that side than the stock market.
Alice, thank you so much. Alice French there, Bloomberg's Japan stocks reporter. Again, the Japanese prime minister, after her big majority win, actually started speaking a couple of minutes ago. She's saying she got strong backing from the public to pursue her policies. We'll look out for any detail coming out of Tokyo. Now, Bloomberg understands that the Chinese regulators have advised financial institutions to rein in their holding of U.S. treasuries over concerns of concentration and market volatility. Well, with us now, Sylvia Westall, Bloomberg's managing editor for FX and rates in EMEA and the US, and Eric Lonergan, head of discretionary macro at Calibrate Partners. Eric, Sylvia, thank you both for joining us. Eric, let's start off with you. I know you have an interesting play on actually German bonds as a way to hedge on AI. But actually, I mean, is this the start of a sell-off in US assets?
I think no. I mean, I think, you know, if you think of what drives U.S. bond markets, and you've seen that over the last weeks and months, is a combination of things. It's predominantly U.S. domestic interest rate expectations. I think, you know, if China is to impact the exchange rate by telling its institutions to sell U.S. assets. We've seen the renminbi's been strengthening pretty persistently against the dollar. I think Americans would be very happy for that to continue. I mean, whether China can cope with the stronger currency, you know, is another question. There's still a shortfall of domestic demand. There's still domestic deflation. You know, it is still predominantly an export-led economy. So structurally, that hasn't really changed. If you said to, you know, to America, or you looked at it as in terms of the two major geographies, and you said the Chinese currency is going to go up against the dollar, nobody's really bothered. The big call for U.S. bonds is what happens to U.S. interest rates.
Right. Of course, as always. But we have, Sylvia, I mean, we've tried to understand whether there was a kind of underlying current of U.S. assets being sold off because of the politics. So even if in the shorter term it's not influencing treasuries as much as Kevin Warsh, are we seeing the foundations of something shifting?
Well, I think the timing is interesting because we have seen this sort of shift away or diversification from other countries. You have India and Brazil. We have had China buying less. But I think in the overall picture, we did see treasuries dip on the news, although there is kind of the markets digesting everything that's happening with Japan as well. I would say that, you know, there are a few sort of to-be-sures here. The first is that when you look at the latest data for overseas holdings of treasuries from November, they were at their highest on record. So people are, you know, foreign countries are holding US assets. It might just be different countries. You had sort of Norway and Canada and Saudi Arabia offsetting some of those others. And overall, it was a really good year for treasuries last year. It was a good year to hold treasuries. They did well, you know, compared to their peers. So I think there is sort of a longer-term picture here that it builds into, and there's the timing of it. But overall, there are other factors kind of feeding into this.
Yeah. I guess it's a gold play.
In what sense?
I mean, if you see a shift from central banks away from U.S. assets, then they buy gold, which is why we've seen the rise, notwithstanding the massive fall that we saw last week.
100%. I mean, the only problem with the gold hypothesis is this kind of, you know, the debasement theory is usually that you've got an inflation problem. However, the evidence is actually that inflation's coming down. I mean, I think what's happening really with gold to me is speculative, and then you have kind of you backfill a narrative about central bank behaviour. But broadly speaking, it's just a trend, and as we we've seen it's become a highly speculative trend reflected in the elevated volatility.
So, Eric, I'm quite intrigued. German bonds, the best AI hedge. So if you feel like there's an AI bubble, buy German bonds.
Well, I think we are in an AI bubble, but one's got to be very clear what you mean by that. I mean, to me, a bubble, this does not mean AI stocks are overvalued or the stock market is overvalued. What it really means is that asset prices are hijacking social activity. Right, and so a bubble is a social psychological phenomenon. I mean, it changes behavior. And everybody's talking about AI.
That actually a bubble is what you get fired for not owning.
I mean, there's some truth in that, but what I mean is stock prices are changing behavior. And what you're seeing is, because we haven't seen this before, you get extraordinary volatility in asset prices. You get a very significant compression in people's time horizons. Everybody becomes myopic. So if you look at asset price behavior, rising prices and rising volatility in stock markets, that is typical, really, of a bubble-like environment. And I think that's the environment that you are in. And I think, I think, for me running a macro hedge fund, I want to have exposure to AI because I think there is going to be extraordinary price volatility in the next 12, 18 months.
But you can be in a bubble that never bursts. So when are you expecting for something to come down?
Yeah, well, I think you will get ferocious volatility within it, right? So what you've already seen this year, so suddenly Korean stocks, no one's interested in them in the middle of last year. Then all of a sudden people think, oh, wow, actually there's AI exposure. They go up 70% in 6 months. You saw that with Google in the second half of last year. You're seeing the reverse of that with software, which is profound fear. So all of a sudden people go, oh, there hasn't been a change to earnings forecast, but we don't know if these businesses are going to survive. Within the debris of the software sector, there will be huge opportunities, right? To me, the bond market, I think one of the really big calls is the other dimension of an equity bubble. And the most interesting phase is when it starts to impact the economy. And the big call now is, what does it mean for interest rates? And this is where Kevin Warsh is key, because he is...
Always.
He's the Greenspan, right? He thinks this means not just higher growth rate, but lower interest rates. And that will completely de-anchor valuations. But that has profound implications for the bond market. I think European bonds, particularly as you go 10s, look extremely attractive. You've got a very steep curve. You've got a lot of term premium. You've got a central bank that's more powerful than any country in Europe. So talk about central bank independence. Arguably the ECB is kind of last man standing.
Let's also talk about the UK. So the UK, we're seeing so much pressure, actually, on Keir Starmer. His future seems to be in the balance, although there's no clear way of Labour actually, changing him if he doesn't step down. What kind of impact can we see on markets?
Sure. So we saw kind of some of the pressure into gilts on February the 5th. So last week when these sort of this idea started swirling. Often you find that the gilt market moves quite fast and then the politics catches up a little bit. So we saw that there. So I think, the thing that the bond market's really looking for is this idea of these fiscal plans that the UK has, and they're very much tied to sort of Starmer-Reeves doing that together. The expectation would be that if Starmer were to go, probably she would too. And what does that mean for that kind of plan there? So who would come next? Would they stick to those fiscal rules that have been sort of so important in that balance and that kind of understanding there between the bond market and politics? And overall, I mean, the one that's very clear is the pound. Very bearish bets on the pound from hedge funds. It's been down. You've had the dovish BOE. So overall, we're going to come into a period of, more pound weakness and to come. So I think, question marks there for the bond market. And then the pound is really kind of down from here.
And Sylvia, your take on Japan, because we're still hearing actually from the Prime Minister. I mean, the big question is fiscal.
Exactly. Well, I mean, I think Takaishi did, did discuss and brought about this idea of bringing in fiscal responsibility. And for now, again, we haven't seen a huge move on Japanese government bonds right now. I think perhaps people are taking that in their stride. There's lots going on. I guess, we've seen some auctions. They kind of had up and downs. They've had some kind of good Japanese bond auctions. The question mark is about whether there'll be more issuance to come. I think it's been very much a market that's been sort of quite reactive and seeing where things are going. But right now, for now, they're giving her some time to put her programme in place.
Eric, going back to the Fed, what do you expect Kevin Warsh to actually do? Because, I mean, does he have to get market credibility first and foremost? And does he change? I mean, it's my understanding that actually he will change the way he views the U.S. economy through the lens of AI.
I think you're absolutely right. Both of those points are key. I mean, this is there's no other job like this in the world, right, where trillions of dollars of capital are moving on every word that you speak. What's far more important than doing what you're told by the White House is getting it right. And if the market either senses you have to establish market credibility, there have been episodes in market events whenever the Fed chairman has transitioned. But I think you're absolutely right. I think what he will first of all do is change the narrative. And this is where kind of the availability bias will play a role. If you get Fed staff to do a whole load of research into AI, you will convince the FOMC that it matters more than they believed beforehand, right? And so I think that is going to become center stage of the debate, and that, will precede violent asset price volatility. I mean, if we really start to believe that this means lower interest rates and higher terminal growth rate, how do you value the stock market? That is when you get the really, really severe price volatility.
With spillovers to countries like the UK, that although the Bank of England will push back, they're still linked to what the Fed does.
Yeah, well, the UK is fascinating for all the reasons that you've given. I mean, I'm actually not worried about medium-term fiscal policy because I actually think there's a huge political consensus that's terrified by the gilt market. So I think even post-Starmer, I suspect you'll get tight fiscal policy in the UK or prudent fiscal policy. You will get volatility in between. But the other thing that nobody talks about in the UK is the UK has the biggest share of professional services in employment. I mean, it's got a huge legal sector, it's got a huge accounting sector, it's got huge consulting, it's got financial services. So in terms of the private sector exposure to AI, when policy has pushed up the cost of labor. I mean, so the incentive for the private sector to replace labor with technology is very elevated. So I think, the UK is in a really, really interesting juncture where part of the distribution is big decline in interest rates and very considerable asset price volatility.
Thank you both for joining us. Bloomberg Sylvia Westall and Eric Lonergan, head of discretionary macro at Calibrate Partners. Coming up, the EU has issued a warning to Meta over its policies around AI assistance on WhatsApp. We'll be speaking to the European Competition Commissioner, Teresa Ribera, next. This is Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, we have quite a lot going on. Let's look at a market check to give you exactly the latest. A lot of focus, of course, on the fact that China has urged banks to curb U.S. Treasuries exposure. This not because they say they worry about U.S. creditworthiness, but because of market risk. Now, Meta has been hit by an EU warning over policies that block the use of rival AI assistants on WhatsApp. Well, Oliver Crook, Bloomberg's chief Europe correspondent, Parliament, is with me here in London. Before we go to the Munich Security Conference, let's also get more on the story with Teresa Ribera, the European Competition Commissioner, who joins us from Brussels. Thank you, EVP, for joining us. There's quite a lot going on when it comes to tech and when it comes to Europe. We'll talk about Meta in a second, but what kind of how are you expected to be received by the US, given everything that President Trump has said about Europe slamming tech?
Well, I think that it is very obvious that we need to defend and to implement, to enforce our rules, to defend the market, a well-functioning market, a competitive market, where there can be an option for players to provide their offers and for consumers to decide which option they prefer. So the abuse of a dominant position in a given market that prevents any other alternative for final users is not good news for anyone. And it is not good news in Europe. It is not good news in the United States. And in this case, we are worried because we sense that this may be the case when forbidding the access of other providers of AI instruments that use WhatsApp. So this is the message that we wanted to send to Meta. Why we do not start thinking of an interim measure preventing this stop of available options.
Yeah. Commissioner, when you're saying that Meta risks a temporary European Union ban, how do you think the US will react to it?
I think that for anyone being at the forefront of any institution, we respect the enforcement of the law. So I don't know how it may be read by any government, but my sense is that this is not connected to politics, but connected to well-functioning markets and protection of consumers.
I'm not sure the Trump administration will view it necessarily in exactly the same way, but I want to ask you a more broad question about AI and regulation. Obviously, this is a technology that will disrupt the world in a number of different ways. It's a new sort of area of functioning. Are we going to see more cases like what we're seeing against Meta, against other technology firms? And what kind of concerns are you seeing in terms of concentration and antitrust in the world of AI more broadly?
We are not looking into the origin or the headquarters of any given company. In this announcement that we have made today, these interim measures, Italy has already taken a similar approach. We are opening a procedure so that if Meta does not agree, they can defend, they can take whatever information they bring to the table to respond to our question, and it is not a final decision. I think that AI is changing the world. We all, consumers, citizens, providers of public services, providers of private services, industrials, rely very much on the quick development of digital services and AI. And I think that it is good that there can be many players that could challenge the traditional incumbents. So it's good to be successful, and it is also important to ensure that those looking into the future are not prevented to develop their services because of those that have succeeded in the past. Great to compete, great to have these open markets for everybody.
And in another area that's not quite as new as AI, but still relatively new, is this world of streaming. And we now have this sort of potential acquisition by Netflix of Warner Brothers. This is something that certainly will attract some scrutiny from you. In a sort of preliminary fashion, what kind of concentration risk do you see from those deals? Do you see one of the two offers as more risky? And have you had any contact with any of the CEOs involved?
No, we haven't got any contact, and of course it is quite clear that this is something which is not quite clear yet what it is going to happen. So we follow what it is going on, and we will be paying attention to whatever operation, consolidation, acquisition may take place. For the time being, it is not clear. So the bids are there, the discussions are there. We will have an eye on what it could mean for the European markets, as it is the case in the United States. But there is no operation to be assessed yet now. Not yet, sorry.
Commissioner, could you talk to us also a little bit about Google? So what's your vision for how Google should operate in the EU? And could you ever see a Google that's actually different in the EU than it is to the US?
I think that Google is quite a relevant player both in the United States and the European Union. And I think that in certain markets, in certain services, they have a very relevant position. In others, they are not the front runners. There are others that have taken a higher share of the market. And I think that it is quite important to remind ourselves that we came up with a regulation to introduce predictability on what it is the expectations in terms of the obligations and the rights in an upfront manner, so that any gatekeeper, anyone having a relevant position in a given market could know upfront what it could mean to ensure that users were protected.
Since the last time you spoke to Bloomberg, has your thinking about Google's ad tech changed at all?
Sorry, that I didn't get your question.
What's next for Google? Is there anything in terms of ad tech or something else that you don't like when you look at Google?
Oh, yes. Sorry, I hadn't heard that. No, I think that that is where we are right now. And I know that Google is making efforts and having conversations with the services, so to ensure that this very important flourishing business case in terms of advertising through the different technological platforms are not restricted or is being biased by any given preference towards Google's decisions, toward Google's priorities or preferences. And the efforts are ongoing. So we have heard, we have paid attention to the decisions being made in the United States, including by the courts, and I think that it is good that we go along similar lines in the different jurisdictions, but the process is not yet over. So we will be coming up once we have a clear understanding on how far we can ensure that the final solution is equal, inclusive, and does not discriminate competitors.
And so we've dealt a lot with the sort of U.S. side of things. You're also looking at things on the China side of things, subsidies into, for example, wind energy. This is an investigation that you have now launched. If you could give us a little bit more in terms of what you're looking at specifically from China. And this is a criticism, illegal subsidies from China, that we see not just sort of leveled against the wind industry, but across many other industries from a number of people in Europe. Do you expect to have more investigations in order to prevent that sort of dumping into the European market at this very critical moment for European competitiveness?
Yes, this is something that came up last week. We have been working on that for a while already, and we want to clarify and to ensure that we will pay attention to prevent any illegal subsidy that could undermine the level playing field in the European market. Of course, wind is a very powerful way to produce electricity, and it has a huge interesting and modern industrial value chain behind, and we are proud of what it has been done in Europe, complying with high standards both in social and environmental rules and innovation and so on and so on. If anyone wants to enter into the European market, we are more than happy, but it is important to be transparent and not to dump on prices.
Commissioner, as always, thank you so much for your time. Teresa Ribera, the European Competition Commissioner. We'll be back. We'll have plenty more. This is The Pulse.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question. I mean,
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The gamble pays off. Japan's prime minister secures a supermajority in parliament, making her the country's strongest ever leader in the post-war era. The UK prime minister's leadership hangs in the balance despite sacrificing his right-hand man over the controversial appointment of Peter Mandelson. Plus, China calls on its banks to rein in their holdings of US treasuries, citing concerns over concentration risks and market volatility. So the UK Prime Minister Keir Starmer's future hangs in the balance after Morgan McSweeney quits as his chief of staff. That's after a backlash over Peter Mandelson's appointment as UK ambassador to Washington.
Morgan McSweeney's resignation, it's just the beginning, because over the next few weeks, what is going to be released via the Intelligence and Security Committee is the depth of messages and emails that have gone on in and around Number 10 in the run-up to the appointment of Peter Mandelson and subsequently, and also his involvement at the heart of this Labour government in the run-up to the election and afterwards. And I think as those come out, if the Prime Minister is still Prime Minister at that time, that will effectively finish him off.
Well, that was Richard Tice, of course, Deputy Leader of Reform UK. Now, for more on all of this, we're joined by our UK government reporter, Joe Mays. Joe, thank you for joining us. You've been following this right from the start. Can Starmer last the week? How will the Prime Minister actually try to shore up his position?
Yeah, it's looking very difficult for him. I mean, tonight he's going to address Labour MPs at the Parliamentary Labour Party's weekly meeting, and that will be a pretty crunch moment where he has to convince them that he is still the right person to be in this job, that he has the authority to stay in this job, something that has been quite significantly undermined by the whole Mandelson episode, and the fact that the person who advised on the appointment of Peter Mandelson, Morgan McSweeney, he's resigned, but the person who actually did the appointing has not, and that's the Prime Minister. So there are clearly, knives out for him amongst Labour MPs. Indeed, some in the cabinet might be on watch to be potentially telling him he should go. So, the walls are kind of closing in around Keir Starmer here, and he's got a real job in his hands to fight back.
But Joe, I mean, I've been told a couple of times that actually Labour are not as aggressive as the Tories, and they actually don't have a mechanism to make sure that the PM stands down. So how does this work? Do they wait until there's also this special election later this month, and if he does really badly, then they'll force him out?
I mean, if you're one of the people who wants to be Prime Minister, perhaps someone like an Angela Rayner or a Wes Streeting, you are looking ahead to those moments. Like you mentioned, February 26th, there's special election in Gorton and Denton where Labour is expected to lose. Plus, you have local elections in May where Labour is again expected to suffer heavy losses. And you would have thought that those two events probably would definitely finish Starmer off in terms of enough Labour MPs would want to see a change, and that might be the optimum moment to strike as a rival and try and push him out. And the mechanism is you get 80 Labour MPs to formally nominate you to the Labour governing body, and that would trigger a contest. Now, Starmer might himself just resign of his own accord before that moment. There are different ways it could happen. But yes, there's a reason why here Starmer could remain as like a lame duck prime minister until those events happen. But either way, it's looking very, very bad for him.
Joe, as always, thanks so much, and also fantastic reporting from you and the team. Joe Mays there, our UK government reporter. Now, let's see what impact the crisis is having on markets. We're joined by Ven Ram, cross-asset strategist at Bloomberg MLive. Ven, as always, thank you. What's having a bigger impact on the pound? Is it politics or the Bank of England's dovish stance?
Morning, Francine. At the moment, it's definitely all about politics. I mean, we have seen the pound come off about 2% from its peak, just seen a couple of weeks ago, and it looks like it's going to fall another 2 to 3% if these rumors about pressure on Keir Starmer persist, and it looks like he may be ousted from office. I think that, you know, what will add to the tailwind against the pound is the fact that, you know, the Bank of England is willing to cut rates. We saw the Bank of England deliver the most dovish policy outcome in a long time. It was the most dovish statement that we got. So I think that, you know, both are going to collude, both factors are going to collude and keep the pound lower for longer.
So could there be more pressure on the pound if the next leader of Labour is from the left of the party?
I think so, because, you know, if we get the impression that, you know, this political stalemate is going to, you know, work at cross purposes for the pound, I think it will weigh on UK assets as well, and definitely we have already seen the reaction in long-ended gilts where the yields are rising. So that is a definite sign that there is a risk premium being embedded into gilts and indeed into UK assets. If you look at Euro GBP, that's pushing up as well to the highest this year. So I think that, you know, if there is a sense that, you know, the next Labour Prime Minister could be someone who is fiscally less conservative and more willing to spend, I think that, you know, that will put the pressure, that will heap up the pressure on the pound.
Then what are you looking out for in the next couple of weeks? I mean, again, if there is some kind of leadership contest or if he gets put down, what's worrying the markets more? Is it fiscal? Is it, you know, is it that the fiscal has an impact on the Bank of England afterwards?
Well, I think in the short term, it's definitely the implications for fiscal that will override what happens with the Bank of England, because the Bank of England has a reaction function that is also predicated on politics. So if there is heightened political uncertainty, they have the wiggle room to defer their decision that may hurt the pound, which i.e. hold off on an interest rate cut. But I think that in the short term, to the extent that there is greater political uncertainty, you will see the 10-year and the 30-year yields bobbing higher. And definitely the bigger asset, the bigger security that will take the hit is the 30-year yield, which we have seen repeatedly in the past couple of years. It's come under pressure because investors are risk averse to holding longer dated gilts in the face of lack of fiscal discipline in the UK.
Ven, thanks so much. Ven Ram there, MLive's cross-asset strategist. Now, oil prices falling as tensions in the Middle East ease after Iran and the U.S. engaged in indirect talks on Friday in Oman. Iran said it agreed with the U.S. to continue these discussions to de-escalate tensions and avert a military confrontation. Now, for more, let's talk to Paul Wallace, Bloomberg's Middle East managing editor. Paul, thank you for joining us. What did the two sides have to say about the outcome of the talks?
Francine, they were both broadly positive about them, both the Iranians and the Americans, and they agreed to hold more talks, which we think will happen late this week, perhaps on Thursday, again in Muscat, the capital of Oman. I think that was the best possible outcome for those who do want a diplomatic deal between the U.S. and Iran, and for U.S. strikes on Iran to be averted. They weren't going to reach a deal in a single day. The issues they're dealing with are too complicated for that. But the fact they basically agreed to talk again, like I said, probably this week, was a positive sign in that sense. And I think that's why we've seen oil prices fall off a bit.
Well, we know that the Israeli Prime Minister Benjamin Netanyahu will visit Washington this Wednesday to meet with President Trump. So how much pressure is he putting on the White House to broaden the scope of these talks beyond Tehran's nuclear program?
Well, I think this is a very interesting visit to Washington from Prime Minister Netanyahu, because it wasn't in his schedule last week. At least we didn't know about it. The Americans still haven't announced it publicly. So it seems to have been, hashed out quite last minute. It seems as if Netanyahu was the one that wanted this. I think there's clearly some concern among the Israelis about a deal per se. They say the Iranians are simply not trustworthy, and that any deal they sign with the Americans, won't be worth the paper it's written on. They're also nervous about any deal that excludes issues such as Iran's support for proxy militias around the Middle East and its ballistic missile programs. Those ballistic missiles are very much a threat to Israel, and they've been fired upon Israel both last year during the 12-day war in June and in 2024. So that is something Israel wants to see discussed. There's certainly some Israeli commentators and officials in government want, they would like something that pushes for regime change in Iran. Whether they'll get that or not is of course unclear, and it'll be up to Donald Trump to decide. But there's certainly still a good chance of U.S. strikes on Iran at some stage, even as these talks between them and between the Americans and Iran seem to make more headway. They could still break down, and in that event, I think, the chances of strikes will be quite high.
Paul, thank you so much. Paul Wallace there, Bloomberg's Middle East managing editor. Now, UniCredit says it plans to return about 50 billion euros to investors over the next 5 years. It follows a 10% rise in fourth quarter profit that beat estimates. The bank has also forecast net revenue to grow at an annual rate of 5%, hitting 13 billion euros by 2028. We'll be speaking to the chief executive, Andrea Orcel, on this program at 9 a.m. London time tomorrow. Now, some of the world's biggest mining industry executives and government ministers are in Cape Town for the annual African Mining Indaba. The event is the continent's biggest such investment conference, with discussion this year focused on critical minerals and their role in Africa's development. Well, Jennifer Zabazaja, Bloomberg's chief Africa correspondent, is also there. Jen, good morning. So how have global tensions over critical minerals changed conversation at this year's Mining Indaba?
Good morning, Fred. I mean, if you take a look at where geopolitical discussions are right now in the conversations that we're having here, they really are the backdrop going into these discussions over the next few days. If you start with the conversations that had been had just a few years ago when I first started coming to Mining Indaba, it was one about extraction and exploration. Now there is really a focus on shared prosperity throughout the whole value chain. So focusing in not just on upstream and exporting raw minerals, but also this focus on how you can capture downstream value, not just for a lot of the developed world and their own idea of critical minerals, but also what does that mean for Africa? So earlier in the morning, I was speaking with the Africa Finance Corporation President and CEO Samaila Zubairu, who was talking about the opportunity that exists right now, just given a lot of the reframing and the shifting of narratives and alliances globally. And potentially this is the opportunity for African African mineral producers to actually step in and have a seat at the table and talk about how can this work integrated regionally throughout the whole entire continent. So a lot of the discussion today and throughout over the next few days is focused then on what are the needs then for a lot of the developed world, what in fact can some of these governments capture as export revenue, but then also how can they focus in on what this looks like for them domestically and also regionally, and how can they use their own mineral resources to develop and industrialize themselves. One of the key focuses, Fran, is this idea that critical minerals potentially looks different in different parts of the world, and potentially instead of saying critical minerals as a blanket term, it should instead be strategic minerals, in fact.
Jen, how do Africa's critical minerals compare with China's? And again, what role can they play in the development of Africa's continent?
Right. Well, Fran, if you take a look at some of the numbers, I was actually just looking at them here. Africa actually hosts $29 trillion in mine site mineral value, but actually they're actually only capturing 8.6 trillion is actually underdeveloped and undeveloped. And a lot of that speaks to really the opportunity that exists here just because of the fragmentation and the lack of data that has existed in the past. But still the opportunity to be a part of the global value chain and the need for
जी हाँ कर सकते हैं, होल्ड कर सकते हैं उसे रखना। आप कैंडल अगर क्लोज होती है एक के नीचे एक, एसएल उसी बेसिस पर रखना। काफ़ी देर से है मार्केट सेम लेवल पे, अभी तक मूव कर जाना चाहिए था। इंडियन मार्केट क्लोज भी होने वाला है 15 मिनट में, तो पॉसिबिलिटी है थोड़ा वॉल्यूम वहाँ से शिफ्ट हो। तो अभी तो सपोर्ट पर ही है, जब तक सपोर्ट पे है कोई इशू नहीं है। 290.5 के नीचे अगर 15 मिनट की कैंडल एक के नीचे क्लोज होती है तो अभी इसमें ब्रेकडाउन माना जाएगा। तब तक ये सपोर्ट पर ही है। लेट्स सी कितने देर और चलता है ये। लॉजिकली तो इसको निकल जाना चाहिए अभी तक। ऊपर भी देखोगे तो ऐसा कोई मेजर रेजिस्टेंस पास में नहीं है। एक मेजर रेजिस्टेंस है, दैट इज अराउंड 317। जाता है तो बढ़िया है, नहीं तो बीच में एक लेवल हो सकता है रेजिस्टेंस की तरह क्रिएट हो, दैट इज अराउंड 300 to 301। ट्रेल कर सकते हैं अभी भी नेचुरल गैस को। ऑप्शन बायर ध्यान रखना, मोमेंटम नहीं हुआ तो प्रीमियम कुछ खास पड़ेगा नहीं ऑप्शन का। याद रखना 290.5 के नीचे 15 मिनट की कैंडल अगर क्लोज होती है एक के नीचे एक दो, तो फिर ये ब्रेक डाउन हो जाएगा। क्रूड ऑयल में भी एक ट्रेड देखते हैं, यहाँ पर एक सेलिंग ही बनेगी, मुझे बाइंग तो लग नहीं रही है अभी इसमें कुछ खास। अपने मुझे लग रहा है रेंज बना दी है क्रूड ने अब कैंडल अगर क्रूड ऑयल में क्लोज होती है प्रीवियस कैंडल के नीचे तो एक सेलिंग की अपॉर्चुनिटी बनेगी यहाँ पर, अगर ये कैंडल प्रॉपरली क्लोज हुई। वैसे तो रेंज ही है अभी भी, नीचे जाना है प्रॉपरली थोड़ा सा लेवल के नीचे, तो डेलो के नीचे ब्रेकडाउन इंपल्सरी है 5685 के नीचे प्रॉपर ब्रेकडाउन होना जरूरी है, तभी नीचे गिरेगा, नहीं तो या तो रेंज ही बना रह सकता है कंटिन्यूअसली। नीचे एक सपोर्ट अच्छा है मुझे लग रहा है, वहां अगर आता है तो बाइंग अच्छी बनेगी वापस से 5540 वाला जो लेवल है। गैस भी देखोगे ऑलमोस्ट 7 to 8 आवर्स हो चुके हैं सपोर्ट एरिया पे। देखो जितने देर यहाँ पर रुका रहेगा उतना ही बायर्स भी वीक होते चले जाएंगे। सपोर्ट जरूर है, पहली बार नहीं आ रहा है, दूसरी बार आ रहा है यहाँ पे। एक बार पहले भी सपोर्ट ले चुका है 3rd of February के अप्रॉक्सीमेटली। मॉर्निंग पे सपोर्ट पे था, बाइंग की कोशिश करी, शायद डीप लेवल से बाइंग होके आई है, होल्ड ही नहीं हो रहा है। 1 आवर टाइम फ्रेम पे भी चेक करोगे तो ज़्यादा ही वर्ल्ड कंसोलिडेशन है इस जोन पे। Look at this candle again, open equal to high at support 291.7, high 291.7। ठीक है, बाय ट्राई तो कर रहे हैं बट सेलर भी कुछ ज़्यादा ही प्रेशर है। मॉर्निंग पे एक तो वैसे ही गैप डाउन ओपन हुआ, 2 लोअर सर्किट लगे, दूसरा लोअर सर्किट ओपन हुआ एंड देन मार्केट जस्ट होल्ड दैट लेवल। Still 9% down from last closing price। क्रूड ऑयल में देखोगे कैंडल नहीं हुई क्लोज, लास्ट कैंडल के नीचे क्लोजिंग चाहिए थी, वापस रिकवर कर गया, मतलब रेंज के अंदर ही है। लास्ट जो कैंडल थी 5715 लो था उसका, उसके नीचे क्लोजिंग चाहिए थी। ये कैंडल गई जरूर, क्लोजिंग होते होते वापस ऊपर ही आ गई है, तो नहीं कर सकते वापस सेल। अभी भी नीचे जो पॉइंट ऑफ इंटरेस्ट है ये इंटैक्ट है, दिस लेवल इज स्टिल इंटैक्ट।
The UK stands apart as a place to do business, not because of one advantage, but many working together. Over £10 trillion in capital, 4 of the world's top universities, a 10-year industrial strategy in action. It's stability with dynamism, global reach with local depth. It all adds up to greater growth. Find out more at business.gov.uk/growth.
News when you want it with Bloomberg News Now. I'm Caroline Hepker.
And I'm Stephen Carroll.
Keir Starmer's advisers are bracing this morning for cabinet ministers to call on the UK Prime Minister to step down. According to officials in Downing Street who spoke to Bloomberg, ministers could threaten to resign if the Prime Minister ignores private appeals to step aside. The increasingly precarious state of Starmer's premiership follows the resignation of his Chief of Staff yesterday. Morgan McSweeney said that he took full responsibility for advising that Peter Mandelson should be appointed as the UK's ambassador to the US. That's despite Mandelson's known ties to the convicted paedophile financier Jeffrey Epstein. Labour MP Catherine Atkinson says she still supports the Prime Minister.
I don't think you come from the humble working class background that he had, become the Director of Public Prosecutions and the Prime Minister by being someone who is weak. I don't think that he will be pushed around. I think that he is focused on the job, and I think that he isn't going anywhere.
Despite those words from Catherine Atkinson, one advisor to a cabinet minister told Bloomberg it's now 50-50 whether Starmer lasts the week. That prospect is a focus for UK bond markets this morning. Gilts have dropped at the open, currently up by 3 basis points at 4.54%.
Bloomberg has learned that Chinese regulators have advised financial institutions to rein in their holdings of US Treasuries, citing concerns over concentration risks and market volatility. The guidance, which was communicated verbally to some of the biggest Chinese banks in recent weeks, reflects growing wariness among officials that large holdings of US government debt may expose banks to sharp swings. The move was framed around diversifying market risk rather than anything to do with geopolitical manoeuvring or a fundamental loss of confidence in US creditworthiness. The directive doesn't apply to China's state holdings of US Treasuries.
Now, Japan's Prime Minister Sanae Takaichi secured a historic election triumph, marking her as the most powerful leader in the country's post-war era. Takaichi's Liberal Democratic Party won a 2/3 supermajority in Sunday's lower house election, according to the public broadcaster NHK. William Cho from the Hudson Institute says it's a personal mandate for Takaichi.
Her very large supermajority victory ensures that there's at least stability and consistency in her economic policy going forward, and you're not going to see these constant wavering policies.
So that was William Cho. He added that the resounding win means large amounts of funding for structural changes to Japan's economy, but it might rattle bond markets. Takaichi has been speaking in Japan, saying that she begins the heavy responsibility to strengthen Japan, having won 352 seats as the ruling bloc.
Shares in UniCredit are up 5.3% this morning after the bank announced plans to return around €50 billion to investors over the next 5 years. The Milan-based bank will pay out 80% of profits through a mix of cash dividends and share buybacks. The news comes as the lender reported a 10% increase in fourth quarter profit to just under €2.2 billion, beating expectations. UniCredit says it's targeting around €11 billion in net profit this year, rising to €13 billion by 2028.
Iran's President Masoud Pezeshkian described Friday's nuclear talks with the US as a step forward. In an online post, the leader said dialogue has always been our strategy, but added that the regime would not be intimidated. US President Donald Trump has in recent weeks moved large amounts of military power to the region and threatened strikes. Trump called Friday's talks very good and said that another meeting was set for early this week.
The Seattle Seahawks have won the Super Bowl, beating the New England Patriots 29-13. Here's the moment they clinched their second Lombardi trophy, heard on Westwood One.
The clock is ticking, 2-1, and that's it. And the Seattle Seahawks have won Super Bowl 60 in pretty dominating fashion. 29-13, they win their second Vince Lombardi trophy.
And Seattle's running back Kenneth Walker was named Super Bowl MVP. The victory comes in Seattle's first Super Bowl appearance since the 2014 season, when they lost to the Patriots 28-24. Meanwhile, Grammy-winning Puerto Rican artist Bad Bunny headlined a visually stunning halftime performance on NBC that featured performances by Lady Gaga and Ricky Martin.
God bless America! Sea Chile, Argentina, Uruguay, Paraguay, Bolivia, Peru, Ecuador, Brasil, Colombia, Venezuela.
The performance appeared to give only subtle nod to political tensions, with the rapper holding a football inscribed with the phrase "Together we are America." Writing on social media, President Trump said the Spanish language performance was an affront to the greatness of America.
That's news when you want it with Bloomberg News Now. I'm Caroline Hepker.
I'm Stephen Carroll, and this is Bloomberg.
As a place to do business, the UK stands apart. Not because of a single advantage, but a uniquely powerful combination of many. As one of the world's leading financial centres, the UK puts over 10 trillion.
गाइस नेचुरल गैस फिर से ओपन इक्वल टू हाई, लास्ट कैंडल भी ओपन इक्वल टू हाई थी, ये कैंडल भी ओपन इक्वल टू हाई है। काफी देर से रुका हुआ है, ऑलमोस्ट ब्रेकडाउन के लेवल पर ही है नाउ। नेचुरल गैस एसएल का ध्यान रखना है, स्ट्रिक्ट एसएल रखना, जाएगा तो होल्ड नहीं करना है, ब्रेकडाउन करना है तो हो जाएगा। ऑलमोस्ट पूरा ही साइडवे चला गया मॉर्निंग से लेकर अभी तक नेचुरल गैस।
we are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
5:30 a.m. in New York City, 10:30 a.m. here in London. Good morning, I'm Lizzie Burden in for Vonnie Quinn with your Bloomberg Brief. Let's set you up for the day. The dollar slips and yields rise across the curve after China urged its banks to trim their Treasury holdings. Meanwhile, the yen's also on the move, strengthening against the dollar following Prime Minister Takaichi's landslide victory. And all of that ahead of a busy week in data, with a delayed US jobs report and a fresh inflation print on the docket. A very good morning if you're just joining us. Happy Monday. And those gains that we saw on Wall Street on Friday carried into a risk-on mood in the Asian and European sessions. But sadly, as you can see, not into the US futures picture. The mood rather more dour stateside. And if we flip over to the cross-asset picture, it is also a massive week for the bond market. A slew, as I say, of US economic data on the docket, not to mention the politics. Sanai Takaichi knocking it out of the park in Japan. The UK's Keir Starmer, though, hanging on for his political life. And as you can see here, we already have Treasury yields up across the curve, led by the long end, after China urged banks to curb their exposure to US government bonds. But let's dive into some of the single stocks that we're watching. Here's Abir Abu Omar.
Hi, Lizzie. Pretty staggering drop in Hims and Hers in the pre-market, down 15%. Now it's spared some of those losses, but this is essentially on the back of the news that came out over the weekend that Hims and Hers is no longer going to be pursuing the sale of its copycat Wegovy pill. And obviously, you know, on the flip side of this, we had Novo Nordisk this morning at the European Open, the biggest gainer by points. It was up more than 8% in the morning as Hims and Hers said that it was no longer pursuing that, and also on the back of the FDA saying that it will crack down on copycat pills. The Eli Lilly story, another story in healthcare, but it's on the back of a different deal, $320 million that it will put in with a Chinese biotech company to create or to develop cancer research pills. Now, when you flip the board, we've got Kroger, and as you mentioned earlier, Lizzie, Kroger is up 1.2% in the pre-market today. That's on the back of a new CEO announcement, ex-Walmart executive. And then finally, we have ST Micro, that's on the back of news that came out, teaming up with Amazon to essentially, the deal that came out with Amazon was essentially a multi-year, multi-billion-dollar deal where Amazon received warrants to acquire as many as 24.8 million ordinary ST Micro shares, and ST Micro will be providing semiconductors and tech to AWS. Lizzie?
Great stuff. Thank you so much. Now, let's get back to Japan. The yen gaining against the dollar after Prime Minister Takaichi's historic election win. We've got the perfect guest to discuss this. It's Jane Foley, of course, head of FX strategy at Rabobank. Morning, Jane.
Good morning.
So the yen actually strengthening this morning. Do you think that's going to last?
You know, I would agree with your previous Bloomberg journalist who said that we need to be careful here because, yes, we could have this re-emergence of weakness, but we've also got to really absorb the fact that there's lots of nuances here. This may not be quite so straightforward. Now, the first thing that we must sort of acknowledge is the market started off with this Takaichi trade, which is essentially this expectation that she was a fiscal dove, that she would spend lots of money, that they were worried even in case some of that wasn't funded, for instance, and also that she would pressure the Bank of Japan not to hike interest rates. Now, the latter has faded. The Bank of Japan has hiked interest rates at the end of last year. And actually, the Prime Minister has offered various reassurances about the fiscal position. So, for instance, when the Cabinet approved the budget, she said, look, it's not going to result in a lot of issuance of JGBs because the tax take is going to be stronger this year. And there's also added to that these other post-election nuances, which means that, you know, if we look at the election campaign, we know that the main opposition party was even more fiscally dovish than she was. And it's quite likely that some of the pledges, maybe with respect to the tax cut on food, for instance, was really in response to what the opposition was saying. But now that she's won the election, maybe she won't have to be as dovish as the market implies that she would.
And maybe she won't have to make it all happen as fast. Well, maybe she doesn't need to upset the market.
That's the other thing. She is very conscious about the bond market. And also, you know, within the LDP, there are a number of fiscal hawks. Notwithstanding, you know, the views of Ishiba, the previous Prime Minister, you know, she will have to sort of clear some of these points with them. So she's got the bond market on her shoulder. She's got some of the fiscal hawks on her shoulder. And she doesn't really have to sort of speak to the opposition in the same way that she had to. So I wonder if maybe we're not going to get these big shocks to the JGB market. But the other thing is that if there is more growth in Japan as a result of these policies, well, it's quite likely that the Bank of Japan may have to accelerate the pace of interest rate hikes. We might get perhaps one more, maybe then the market's pricing in, and that is something that could also soothe the yen. So this could go in a variety of different ways. I don't think it's as straightforward as perhaps the market assumed it would be, you know, when she won that leadership election back in October.
OK, so what's bigger for the Treasury market then? You've got Japanese politics, a load of US data coming out this week, delayed as it is because of the government shutdown, and then this Bloomberg scoop this morning that the Chinese officials are saying trim your Treasury holdings to banks in China.
Well, to be fair, they have been trimming them for a while anyway. You know, we know that. They're no longer, you know, the biggest owner of treasuries. Japan is. And if we look at that data that came out a couple of weeks ago with respect to the holdings of treasuries, and this is for November, this is the latest data we have, what we know is that actually holdings of treasuries rose to a record high. And the buyers there, or the ones that increased their holdings, were the Japanese, they were the UK, Canada even, Belgium. Now, China did reduce those holdings. So assuming that it's only China perhaps reducing the holdings and there's still appetite for treasuries from other parts of the world, well, that should be some solace for the US treasuries. But of course they're going to be anxious about this sort of news.
And when it comes to that data, our economists say that it could show weak hiring and spending plus high inflation. Is that too pessimistic? If you got that situation, how would it leave the market?
Well, if we look at some of the activity data in the US, it really hasn't been that bad. You know, if we look at retail sales, for instance, if we look at consumption patterns, and we know, you know, from Trump's point of view, that that's not necessarily a broad-based recovery. We know that most of the strength in consumption, for instance, is amongst higher earners. We know that lower-income people are feeling the cost of living pressure. Now, that may not be coming out in the whole data, but they still have votes. So that is a concern, you know, from the election campaign for the Republicans ahead in the midterms. But actually, the activity data hasn't been so bad. Now, if we do have higher inflation, well, you know, the Fed has been saying, look, it could be just transient this year. You know, we'll have to wait and see. But, you know, the market is still anticipating, with a political edge on the Fed, that we'll still get 2, maybe 3 interest rate cuts this year. And I'm wondering if this data on its own will really change that view. So perhaps this data won't have the sort of impact that it might otherwise have.
OK, really interesting. Now, this is not the sort of environment that you want uncertainty in UK politics, right? We've been discussing with Rosa Prince, Morgan McSweeney's resignation, Keir Starmer's chief of staff, or former chief of staff, of course. How much of a drop in sterling could we see if Starmer quits this week?
It depends who could take over. So, for instance, the market won't like it if the next leader of the Labour Party and therefore the next Prime Minister of the UK will come from the left wing of the Labour Party. If it comes from the more sort of Blair-esque part of the Labour Party, the market could show some relief. So again, it depends who that is going to be. So there's a lot to play for, I think, within the UK.
But of course, Keir Starmer presented himself as left-wing when he was trying to lead the party, and then, lo and behold, he ends up being a centrist. Do we just have to assume that of the likes of Andy Burnham when he says, I don't want to be in hock to the bond market?
Well, you know, I think the market would be wary about Burnham. I think they think he is going to be left. I think the market will be wary about... I mean, obviously, he probably can't stand in this Parliament anyway because he's not an MP, but going yet. But you know, the market will just generally be wary of the left wing, less so perhaps of Streeting. But then again, you could say, well, look, if you look at the Chancellor, what she has tried to do, for instance, if we look at welfare reform, has been rebuffed because of the amount of left-wing MPs within the Labour Party. So even if we were to get someone who wasn't from the left wing, you've got to try and work out, well, would they just come up with the same sort of problems because of the dominance of the left wing or the number of left-wing MPs anyway? So yes, we need the stability. It's not clear that even if we had a new Labour leader, that we would necessarily get that.
OK. Jane, thank you so much. That's Jane Foley of Rabobank. Now, to some of the top stories trending on the terminal this morning. Apollo is teaming up with London-based Schroders to develop funds for wealth and pension clients. The firms will offer new investment products to wealthy investors in the UK. A first vehicle is set to be rolled out later this year. Elsewhere, Treasury Secretary Scott Bessent cited Chinese traders as a reason behind last week's wild swings in the gold market. Bessent was responding to a question about a record-breaking rally in precious metals on Fox News on Sunday.
The gold move, things have gotten a little unruly in China. They're having to tighten margin requirements. So the gold looks to me kind of like a classical speculative blow-off.
And in sports, Seattle Seahawks beat New England Patriots 29-13 to win the Super Bowl 60. This is the Seahawks' second Super Bowl win. Kenneth Walker became the first running back to be named MVP since Terrell Davis in 1998. Puerto Rican artist Bad Bunny made history as the first Latino and Spanish-speaking artist to headline the Super Bowl halftime show as a solo act. Well, coming up live from Cape Town at the African Mining Indaba, Ivanhoe Mines founder Robert Friedland joins us on the discussions around supplying the US with critical minerals. That conversation next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
up in our zone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
नेचुरल गैस में फिर से ओपन इक्वल टू हाई कैंडल बनी है. क्रूड ऑयल थोड़ा सा रेंज के बाहर निकल गया, which is a good sign. One thing is very different. मेरे पास नेचुरल गैस के सेम MCX का सेम मंथ का कॉन्ट्रैक्ट का फ्यूचर चार्ट अलग अलग शो कर रहा है अलग अलग ब्राउजर में. How this is possible? Anyone else seeing the same natural gas MCX का चार्ट मैंने लगा रखा है ट्रेडिंग व्यू में. यहाँ अलग ही है, दूसरे ब्राउजर में अलग ही चल रहा है. क्रूड ऑयल को देखोगे अच्छा मूव कर गया अपसाइड की ओर अब। नेचुरल गैस अगेन ओपन इक्वल टू हाई, ये कैंडल फिर से ओपन इक्वल टू हाई है 289.3, हाई 289.3। काफी ट्राई कर रहा है सपोर्ट को ब्रेक करने का, कर नहीं पा रहा है नेचुरल गैस। बाय स्टिल होल्डिंग दिस सपोर्ट। ब्रेक हुआ तो मुझे लग रहा है मोमेंटम काफी बड़ा आ सकता है। हाँ, फेक ब्रेकडाउन ना हो। मॉर्निंग से रुका हुआ ऑलमोस्ट 4:30 हो गया ना। 7.5 घंटे, वाह, 7.5 घंटे से सपोर्ट पर ही है। कंटिन्यूसली ओपन इक्वल टू हाई मॉर्निंग से क्रिएट हो रहे हैं, बट अभी तक ब्रेक नहीं हुआ है। अपने एसएल को स्ट्रिक्ट रखना है इसमें, ठीक है। एसएल जाएगा तो निकल जाना, होल्ड नहीं कर सकते वापस। ठीक। थोड़ा अगर और नीचे जाता है तो फिर थर्ड लोअर सर्किट लग जाएगा ऑलमोस्ट 11.99% पे 10% हो गया 1% और गिरा तो एक और लोअर सर्किट थर्ड लोअर सर्किट कि नेचुरल गैस गाइस साइडवेज ही है। पोर्ट एरिया पे आज मंडे है, लग रहा है सुपर साइडवेज होगा। ऊपर जा रहा है ना नीचे आ रहा है। नेचुरल गैस almost 9 hours at the support and is still holding continuously open equal to high है, लास्ट कैंडल ओपन इक्वल टू लो है, कई टाइम के बाद ओपन इक्वल टू लो कैंडल बनी है इसमें। आई थिंक वॉल्यूम ही नहीं है लाइक बाइंग में। अभी मुझे लग रहा है शायद गैप डाउन करा के कहीं ना कहीं प्रॉफिट बुकिंग करने पर अगर आ गया, देखो यहाँ पर ट्रैपिंग बहुत बड़ी हो सकती है। एक पॉसिबिलिटी है शॉर्ट सेलर्स स्क्वीज की, जिन लोगों ने यहाँ पर शॉर्ट करके अगर बैठे होंगे डेफिनेटली कई सारे लोग, अगर स्क्वीज हुआ तो बड़ा मूव कर सकता है अपसाइड की। और अगर शॉर्ट सेलर्स भी यहाँ पर से अगर निकल जाते हैं, जब तक बने हुए मुझे लगता नहीं प्राइसेस जाने देंगे इस लेवल के ऊपर। कहीं ना कहीं इस लेवल के हाई के ऊपर अब इन लोगों ने अपने एसएल माउंट करके रखे होंगे। इससे बड़ा एसएल तो मुझे लगता नहीं है वो लेंगे, क्योंकि जिस तरह से यहाँ पर इतने देर से कंसोलिडेशन कर रहा है, परसों से शॉर्ट करके बैठे होंगे अगर जो लोग, उनको अच्छा प्रॉफिट हो गया होगा। आज अगर किसी ने फ्रेश शॉर्ट बनाया है हाई लेवल पे, वो शॉर्ट सेलर भी निकल गए। देखो एक तो है बायर बाय कर रहे हैं सपोर्ट पे, दूसरा है सेलर सिर्फ शॉर्ट कर रहे हैं प्राइस को, चाहे वो फ्यूचर में हो या फिर ऑप्शन में हो। तो अगर स्क्वीज हुआ तो मोमेंटम बड़ा हो सकता है। स्टॉक था जीएमई, गेम स्टॉप कॉर्पोरेशन, उसके साथ भी कुछ ऐसा ही हुआ था। ऑल टाइम लो पे शॉर्ट पोजीशन बना के बैठा था एक हेज फंड, मार्विन कैपिटल सॉरी, एंड रिटेल इन्वेस्टर बाय करना बैठ गए। इतनी बाइंग हो गई। जब शॉर्ट कवरिंग आई, प्राइस एक दिन में 50% का जंप हुआ सिंगल इंट्राडे। दैट penny stock turns into a multi-millionaire buying trade between, I think, December uh, December 2019 to 2021 starting. Yeah. बाकी देखो क्रूड ऑयल में देखोगे ऊपर 5940 वाला लेवल बड़ा इंपॉर्टेंट लग रहा है रेजिस्टेंस के लिए। ये जोन काफ़ी स्ट्रांग है, मुझे लग रहा है सेलिंग के लिए अगर वापस आता है इस एरिया पे तो सेलिंग अच्छी हो सकती है अराउंड इस जोन। के ऊपर भी एक रेजिस्टेंस 6680 साथ साथ ही हैं दोनों, बट मुझे लग रहा है लोअर एंड स्ट्रांग ही है। एक बार मुझे लग रहा है और टेस्ट होगा, शायद एक बार हो चुका है ऑलरेडी, सेकेंड टाइम मोस्ट प्रॉब्ली एक पेंडिंग रहेगा वापस। ठीक है, बाकी देखो नेचुरल गैस में अगर चाहो तो अपना एसएल आप कॉस्ट टू कॉस्ट पे भी रख सकते हो, क्योंकि अब कहा नहीं जा सकता किस साइड जाएगा। इतना कंसोलिडेशन भी मैं एक्सपेक्ट नहीं करता हूँ किसी लेवल पे हो जाए तो, एज अ फ्यूचर भी अगर आप ट्रेड कर रहे हो या फिर ऑप्शन सेल किया हुआ है तब भी। सो बेस्ट तो यही है, या तो एसएल कॉस्ट पे रख लो, नहीं तो एसएल छोटा ही रखना आप क्रूड ऑयल नेचुरल गैस में, माफ करना। ठीक है, अब किसी एक साइड मुझे लग रहा है बड़ा मूव होने के लिए काफ़ी अच्छा जोन बन चुका है अब ये, आइदर डाउन साइड पे ब्रेक हो या फिर अप साइड पे अगर निकलता है, स्पेस दोनों ही साइड बड़ा होना चाहिए मोमेंटम। हाँ, बस एक फेक ब्रेकडाउन ना हो, दैट इज़ अ डिफरेंट थिंग। अगर ब्रेकडाउन होता है प्रॉपरली रीटेस्ट करेगा तो सेल भी कर देंगे। तो या तो अपना एसएल कॉस्ट पे रख लो या फिर छोटा ही एसएल रखना जितना लगाया हुआ है 2.5 पॉइंट फ्यूचर में, उससे बड़ा एसएल मत रखना अब इन नेचुरल गैस। सडनली बड़ी कैंडल बनेगी तो ऐसा ना हो प्राइस सडन मोमेंटम में चला जाए। कि क्रूड ऑयल मैं इस पॉइंट ऑफ इंटरेस्ट का मैंने मॉर्निंग पे बताया था, यहाँ पे ऑलरेडी 2-3 बार बाइंग आ चुकी थी। आई थोड़ी कि निकल जाएगा नीचे लोअर एंड पे, बट इसने थर्ड या फोर्थ टाइम भी होल्ड करके रखा है इस सपोर्ट एरिया को आज। इसका मतलब ये भी है ये स्ट्रॉन्ग। तो देखते हैं थोड़ा सा अगर वापस पुल बैक देता है तो एक वापस से बाइंग का प्लान रखेंगे अगर आता है डाउन साइड पे, बिकॉज ऊपर भी रेजिस्टेंस काफ़ी दूर ही है, या तो कोई फ्रेश रेजिस्टेंस बनाएगा। अदरवाइज ये पॉइंट ऑफ इंटरेस्ट और जो रेंज ब्रेक हुई है दैट नाउ एक्ट लाइक एज अ सपोर्ट। ठीक है, मॉर्निंग पे मैंने वैसे ही बताया था, मुझे एक्सपेक्ट लग रहा था कि ब्रेक करेगा, नहीं किया बाय द वे, होल्ड है अभी भी वो सपोर्ट जोन। ठीक है, बट एक चीज़ अभी देख लेना, यहाँ पर ये आई थिंक फोर्थ या फिफ्थ टाइम इस लेवल में बाइंग आई है, और अगर ये हायर हाई नहीं बनाता तो ये एक लोअर हाई में कन्वर्ट हो जाएगा। लग रहा था इसके नीचे अगर ब्रेक होता है इस पॉइंट ऑफ इंटरेस्ट के नीचे क्रूड ऑयल तो 5005 60-70 का एक लेवल था, वो अभी भी स्ट्रॉन्ग ही है सपोर्ट, वहाँ पर प्राइस आएगा वापस से. That is also not happening. I thought इस लेवल पे आता तो थोड़ा बाई कर दे. Iran proposed uranium deal. Iran atomic chief Islami says Tehran could dilute its highly enriched uranium in exchange for all sanctions being lifted. Natural gas again open equal to high candle. तो अपने इसमें एसएल कॉस्ट पे रख लो अब नेचुरल गैस में, जिन लोगों ने अगर बाई करके अभी बैठे हुए हैं, पुट यूर एसएल एट कॉस्ट टू कॉस्ट, या फिर इससे बड़ा एसएल मत लेना, फिर रिपीट कर रहा हूँ, ठीक है। बहुत ज़्यादा वॉलेटाइल है विथ साइडवेज, ज़्यादा रिस्क नहीं ले सकते अब, वैसे ही रिस्की ट्रेड हो गया। मोमेंटम पॉसिबल है किसी ना किसी एक साइड पे, 50-50% है, दोनों साइड जा सकता है। इवन दो सपोर्ट है बट सपोर्ट भी इतना कंसोलिडेशन कर रहा है तो किस साइड के बायर सेलर निकलते हैं, डिपेंड अपॉन देम नाउ। लिक्विडिटी थी इसलिए प्राइस रुका, ड्रेन हो गई है ये भी कह सकते हैं वापस से। हाई लिक्विडिटी होती तो प्राइस आके सीधा थोड़ी देर होल्ड करके सीधा निकल जाता अप साइड की ओर। काफ़ी देर रुका रहा, इन द सेंस ऑफ बायर तो थे बट सेलर भी उसी प्रोपोर्शन में बैठे हुए हैं अभी भी। सिक्स 30 न्यूयॉर्क सेशन मोस्टली शायद अब थोड़ा वॉल्यूम क्रिएट करे, लंदन सेशन से कुछ भी वॉल्यूम नहीं है नेचुरल गैस में। क्रूड में ठीक ठाक वॉल्यूम है लंदन सेशन के बाद। आफ्टर 130 देखोगे ये 130 की कैंडल है, 130 के बाद मोमेंटम हो चुका है जितना होना है।
first move. Cut back on your implicit dollar longs and then scale back. Every incremental dollar going into a domestic, meaning like a European or Japanese market, and not in the U.S. market, favors those markets.
How much is this really being driven, though, by a concern about being debased AF? And how much is this actually driven by the fact that this is a bull market and there is growth in a lot of places? And frankly, there's a catch-up act being played in certain emerging markets, particularly with technology. I mean, how do you decipher which is which?
Well, I think in some cases, when you look at the developed markets and you look at the breakdown of why they've been able to outperform, it's a combination of currency and PEs expanding, right? So expectations are being, are picking up in those markets. If you look at something like emerging markets in aggregate, and of course there's a wide range there, that story is actually quite fundamental. And so you see basically earnings growth describing 100% of the strength in those equity markets. And so in many ways, emerging markets, which are long forgotten by the developed world or major allocator, that looks like the most attractive place to be, and we're starting to see capital flow into those positions.
Bob, when it comes to the Fed, does Kevin Warsh make sense if this administration wants to be debased AF?
Well, I think the end of Trump's Truth Social post about him was most telling. Not the one about the fact that he was good looking, but the part that he said that he can be relied on.
Thanks for clarifying. That he can be relied on.
That he can be relied on, and even this sort of talk about the Treasury Fed coordination that has been highlighted over the last couple of days. The question is, what does that coordination look like? Back in the 50s, it was about independence. The question now is it about independence or it's about coordination to ensure low rates and cheap Treasury financing in the future? And so you have a highly political person. His language, his rhetoric has made it very clear he's favorable to administration policies and willing to be easy, even in the face of relatively strong conditions. And that's probably what we're going to see.
So you're not concerned that Kevin Warsh, or you don't think he's a hawk?
Well, I think he is a political figure, and he's demonstrated, and I think that's one of the challenges with him. I argued that maybe we should have somebody who has some economics or real markets experience running the Fed. Instead, we got a politically connected lawyer again. And so I think that the challenge is what we get here is we get someone who is tied to the administration, who's going to be doing the bidding. He's basically made that clear. His rhetoric has been very clear back through time in terms of his soft money rhetoric aligning very well with previous Republican administrations. And so I don't see why you would think that he would break out of that mold ahead. Until the next election. Is that what you're implying? If there's a change in 28? Well, I think it's pretty clear how he's behaved in the past. Actually, Anna Wong from the Bloomberg team has done a really good job highlighting how his language has changed in different periods depending upon who's in the office. And so I think it's one of the rare cases where we have years, decades of track record to see what his rhetoric is relative to what conditions are. And he's proved himself to be a political actor in making policy.
So let's talk about a hypothetical. Let's say Torsten Slok is right, and that later this year, the economy is running so hot that people start to think maybe a rate hike would be necessary. Kevin Warsh, you're saying, if he is a political actor, would not necessarily take action. What happens? How does this work if people are waiting until 2028 for that rate hike to happen? Right. So it's an environment, easy street monetary policy is an environment that's favorable to gold and stocks in that environment, and is challenging for bonds. And so what you'd see is you could easily see monetary policy on the short end that's too easy relative to conditions, and the long end is going to punish the market related to that. So trades, even right now, when you look at what's going on with the yield curve is not that steep relative to the strength in the economy, relative to the upside surprises we've seen, relative to where we are in the cycle, and coming out of a significant easing already. And so I think trades that favor, easy street stocks versus bonds, gold, and short dollar positions are all going to win in that sort of environment. 210's at 73. How much steeper are you looking for that curve to get? Well, remember, typically in growth rebounds coming out of easing environments, you see the curve steepen to hundreds of basis points.
And so while we're squinting at whether it's at 73 and the nearby high and stuff like that, like from a macro perspective, the yield curve is very flat right now. And you have an administration that is very keen on delivering easy policy relative to conditions.
Just quickly, what do you think is going to drive foreign exchange, the front end or the longer end of the curve?
I think it's much more about how the foreign investors see the over easy monetary policy that's being delivered. And so it's all about that hedging on expectations that easy money is going to happen.
Bob, thoughtful stuff, lots to think about. A very provoking framework to think about the financial markets.
Yeah,
Evocative.
Although interesting to me that the Sell America trade is not necessarily driven by antipathy toward statements coming out of the White House, but rather having to do with easy money coming out of the Federal Reserve. This all comes down to how the Federal Reserve acts if there is a Torsten Slok-like scenario down the line, which is a reacceleration and a Federal Reserve that maybe ought to be, in the market's eyes, talking about a rate hike, but might politically be disincentivized to do so.
You'd have to think that Chair Walsh is going to let that rip if we do get that rapid acceleration into year end.
Which goes to the question of, is it going to be the Walsh Fed or is it going to be the everybody Fed? Chime in and let's see what we get.
Hey, Bob, thank you. Thanks for dropping by.
Yeah.
Bob Elliott of Unlimited Funds there. Your equity market is doing OK. It's negative this morning by about 0.1% on the S&P. With an update on stories worldwide with your Bloomberg Brief, here's Yahira. Hey, Yahira.
Hi, John. Wegovy maker Novo Nordisk sharing it is suing Hims & Hers Health for making knockoffs of its obesity medicines. The lawsuit alleges Hims is breaching its U.S. patent on semaglutide. Shares of Novo Nordisk are rallying in the early trade, while Hims & Hers are extending declines, down 17.5%. Meanwhile, House Minority Leader Hakeem Jeffries saying Democrats will not pass a Department of Homeland Security funding deal without getting a full reform of immigration and customs enforcement, known as ICE. The demands include prohibiting officers from entering private property without a judicial warrant and requiring agents to wear body cameras and ID badges. Lawmakers have until Friday to reach a deal. And Kroger is reportedly naming former Walmart executive Greg Foran as the supermarket chain's next CEO. Sources telling us here at Bloomberg, Foran would be the grocer's first CEO brought in from outside the company. The announcement is expected to come as early as today, as the nation's largest grocer looks to carve a new path after the unexpected exit of its former CEO. That's your Bloomberg Brief. John.
Hey, Yahira, thank you. More from Yahira later this hour. Up next on the program, turning up the heat on the Senate.
When Kevin Warsh was up to be a governor of the Fed, he got 100 votes. So I would say, why don't we get the hearings underway and see where Janine Pirro's investigation goes?
Up next on the program, we'll catch up with Henrietta Trays of Veda Partners, live from New York City this morning. Good morning.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
The
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Coming into the week, believe it or not, the equal weight S&P at all-time highs after a rally of 2% last week. Same story on the Russell, 2% move, even with the volatility in big tech. Nasdaq futures this morning, negative by 1/3%, down just 1/10 on the S&P. Small caps softer by 0.1%. That's the story in stocks. Here's the story in the bond market. A story out of China. Our colleagues at Bloomberg reporting that China's telling Chinese banks to curb their exposure to US Treasuries. The move? Not even 2 basis points. The 10-year 422.59. And maybe that speaks more to what developed in Japan over the weekend. A massive blowout win for Takaichi.
Yeah, and really highlighting how her mandate to really make fiscal changes is significant and resounding, which raises questions why there isn't a more predictable reaction in markets, which is sell the yen, you're seeing the opposite, or potentially sell JGBs en masse. You're seeing a bit of an increase in terms of yields there, but not necessarily some wholesale exodus, which goes to the question, what's more important? Fiscal dominance or growth? And right now, people are saying maybe the growth side of things, in addition to more discipline, will really drive some strength there.
Japanese equities record highs overnight. Japanese equities rallying by close to 4%. Let's bring it back home under surveillance this morning, turning up the heat on the Senate.
I would point out that when Kevin Warsh was up to be a governor of the Fed, he got 100 votes, and that was led by his home state senator, Chuck Schumer. So, and Senator Tillis has come out and said he thinks that Kevin Warsh is a very strong candidate. So I would say, why don't we get the hearings underway and see where Jeanine Pirro's investigation goes.
So here's the latest this morning. The Trump administration ramping up the pressure on the Senate to be in confirmation hearings for the president's Fed chair pick. The Republican Senator Tom Tillis vowing to block any nominations until the criminal probe into Jay Powell is complete. Tyler Kendall joins us now for more. Tyler, welcome to the program. What will the Senate make of that suggestion from the Treasury Secretary?
Well, John, at this point, I'm not quite sure if it's really going to make that much of a difference, because at this point, Senator Tom Tillis is holding firm that he's going to block the nomination until the legal matter is resolved. And the Treasury Secretary here is appearing to suggest that the Senate confirmation hearing should happen in tandem with the DOJ's investigation, because this is a process that is going to take some time, right? Warsh needs to sit down privately with individual senators before his testimony. And I was on Capitol Hill last week, and I have to say, no one on the Senate Banking Committee could give me a timeline for when those meetings are going to be set or when that confirmation hearing date is going to be set. And while we still have time, of course, before Powell's term is up, if this standoff extends beyond May 15th, there are unresolved legal questions about what exactly will happen next year. Because while the Treasury Secretary is right, there is broad support among Republicans when it comes to Kevin Warsh's nomination. There is not broad support for the Department of Justice's investigation into Jerome Powell. In fact, we're seeing a mounting number of those on the Senate Banking Committee raise doubt that there is anything even to investigate when it comes to Jerome Powell's testimony before this very committee. Multiple of them told me last week that they do not think that Jerome Powell had any criminal intent in his testimony to them last year. Now, John, there's a few different dates and things that we could keep on the radar, but I will say I am closely watching for when we get to the deadline for the Federal Reserve to comply with the grand jury subpoenas that were issued. There are still some big questions about this investigation, including whether or not compliance is happening. But once we get that date, that could give us a little bit more of clarity or a timeline to look for about whether or not the DOJ is satisfied with the information they're receiving and whether they will ramp this up or tone it down.
A chorus of Senate Republicans pushing back over the last week. Tyler, thank you down in Washington. For more, Henrietta Trey's of Aveda Partners writes the following. Senator Tillis can and will hold up the nomination process, and he has the implicit but silent support of Republicans in positions of leadership. Henrietta joins us now for more. Henrietta, welcome to the programme. Play this out with us. What if we're in exactly the same place that we are now, in May, in a few months' time? What happens at the top of the Federal Reserve?
Yeah, I mean, that's a little bit of my concern here is I'm not sure why the administration is being so hard-headed about this. You really want for there to be a fresh slate at the Federal Reserve. And I think one of the biggest issues, and I hear this from clients all the time on the road, is that if you get Warsh confirmed through the Senate, through the Banking Committee, and then he goes to the Senate floor, and as Secretary Bessent suggested, he has been able to get unanimous consent from the members in the past. Jay Powell wants for this candidate to get robust bipartisan support. That's the goal. 80, 90 votes in the U.S. Senate, and that is achievable. And at that point, then you can have Jay Powell feel potentially comfortable stepping aside, clearing more room, and giving the president really what he wants. But instead, we're having this really contentious back and forth, and it's created this groundswell of questioning around whether or not Jay Powell would actually get off the board after his term as chair is up. And that's something that could be resolved, honestly, by some of these votes on the floor for Warsh and his confirmation.
But Henrietta, to John's point, what actually does happen logistically if we do not have Kevin Warsh nominated and sailing through the Senate at that point? Does the Federal Reserve current chair, Jay Powell, stay as the chairman? Or does the president get to put someone else as an acting Fed chair, which some individuals say that that is a legal path forward?
Yeah, that's definitely what the White House is pursuing. That option creates a real pressure point that allows him to have his nominee there without having to go through the United States Senate. And that's I think when I have these conversations, those are the parlor games that are playing out. What we've seen from this administration is that they can try to stress test the legal argument. They will. So I think we should count on that being the route that they take from here.
Are you seeing anything in the Senate, especially with Senator Thom Tillis, that he's willing to maybe back down?
No, I'm not. And I've been really close with Senator Tillis's office for years now. The senator has taken a very strong stand. And I stand by what I wrote over the weekend to clients, which is Senator Tillis is doing the Lord's work for a lot of members who feel exactly the same way. They do not like what they have seen from the White House on Jay Powell. They do not like the pressure campaign on the Federal Reserve, whether it be with Lisa Cook or even back to the BLS firing of Erica McIntyre. But they don't like this extreme aggression from the White House. And so Tillis might be the face of all this. He doesn't have to run again for re-election. But the other members behind the scenes, including the chairman of the Banking Committee, Tim Scott, do not like what they're seeing out of the White House.
Henrietta, there's a larger point here, and I think it's an important one. How much is there a groundswell of pushback to President Trump that could make itself much clearer, even in the Republican Party, after the midterm elections? Do you feel that starting to build, or is this just sort of a one-off issue where the Federal Reserve's independence is sort of a different kind of topic?
I think that both of those are true. The Federal Reserve is very much a different kind of topic, and members know that the Fed chair is an incredibly important, needs to be, overwhelmingly accepted. Very unlike a Supreme Court justice, for example, who you can get in with 50 votes and J.D. Vance breaking the tide. Nobody wants that for the Federal Reserve. So that's the first piece. The second piece actually has two layers. As we get beyond the primary election cycle and into the general, where a Republican will have to run against a Democratic challenger, especially in this cycle, where the president is materially underwater on handling of the U.S. economy, of prices, inflation, jobs, and immigration now, those Republican candidates have to start deciding whether they want to run very closely tethered to the president or if they want to pull away and try to win a general. That's going to happen even before we get to the post-midterm period and get into the 2028 cycle of who's going to be the front runner for the Republican candidacy. Is it going to be a J.D. Vance style candidate that will keep the MAGA mantle, or are we drifting into a Todd Young, Josh Hawley, and maybe a middle ground foreign policy focused Marco Rubio? Those questions are all coming our way, and they start when we get into the general election of this year, not just the primary season we're in right now.
Starting to see just a bit of pushback, aren't we? Henrietta, thank you. Henrietta Trey's there, of Aveda Partners. So the chairman's last meeting is at the end of April, and we've got some time before we get there. He steps down in May. Possibly. I've got no idea. But you can start to envision a situation where this mess is not sorted out by the time we get to the Fed's April meeting.
And we don't really have a sense of what the clear path is ahead. I mean, if you do get a Fed chair that presides over presumably his last meeting in April, and then there is no Fed chair. Does he just stay on, or does it become the Waller Fed in the meantime as one of the governors take the helm? Ultimately, the lack of clarity here is going to become messy for markets as we get closer to this event.
I wonder if it becomes so messy for markets that you have Senator Tillis back down, or the White House putting pressure on the DOJ and saying, all right, you need to wrap this up because we need to move this train along.
It only gets messy for markets if markets actually want something from the Federal Reserve. And I don't think we're there just yet. If the data continues to worsen, then we're in a very, very different spot with regards to the Federal Reserve. But at the moment, if the Fed was to have a meeting tomorrow, I think that meeting would still be a little bit meh for a lot of market participants.
Depends if Warsh's commentary changes the picture in terms of what he plans to do, if we get a sense of who this Kevin Warsh really is.
That could change with a little bit of payrolls data on Wednesday and CPI on Friday. Richard Clarida joins us next.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Equity futures this morning down by 0.1% on the S&P following a super volatile week last week, which closed with the biggest one-day gain since May on the S&P 500. The regional banks are the story for me, though, up every single session through last week, Monday through Friday. The regional bank stocks, record highs, and up 7% last week. Will this economy hold up and justify the rally in the bond market? 2-year and 10-year yields lower on the week just marginally. The 2-year at 349.75. A tug of war between ISM manufacturing, services, and some weaker than expected labour market data. And we'll get some extra data later this week, which will breathe some life into the debate of the past few days.
We get finally the non-farm payrolls report for the month of January, as well as some of the benchmark revisions to the quarterly household survey, which is going to be really interesting in order to get a sense of the broader 2025 picture. We've gotten weaker employment data, and it hasn't really meant much for the reacceleration. So what do we do if we get data that shows weakness or that shows strength? Can we infer anything about the momentum that we're seeing under the hood in some ISM services and, frankly, in a lot of the earnings as well?
10-year bond yields this morning up just 2 basis points, just about unchanged at 4.23. Let's count you down to the opening bell. 2 hours away with some single names, some morning movers. Danny has more. Hey, Danny.
Hey, John. It's the drama between Hims & Hers and Novo Nordisk. First, Hims & Hers comes out with a cheaper GLP-1 pill, around $50, and then Novo Nordisk sues them, and then the FDA says that they're investigating and going to ban those copycat medicines. Well, over the weekend, Hims & Hers saying they will not be selling those pills. Hims & Hers taking a beating on that, down almost 20%. Novo Nordisk, those ADRs in the U.S. rally some 5.5%. Meanwhile, Kroger's has confirmed that it will have a new CEO. Greg Foran, coming from Walmart, largely credited with turning around the U.S. business at Walmart, making it more friendly, making it more bright. The previous CEO of Kroger was ousted because of an investigation into personal conduct, so those shares up 5.2%. Finally, ST Micro, the semiconductor company, reaching an agreement with Amazon, will be supplying it with semiconductors. STM has seen largely behind on the AI data infrastructure race, so this is a boost to get it there. Also, this allows Amazon about 7 years where they can buy STM stock. So again, shares moving on that news up more than 6.5% in the pre-market, John.
Hey, Danny, thank you. Thanks for the update. More from Danny in the next hour. On our radar this morning, Chinese regulators advising banks to curb their holdings of U.S. treasuries. Officials framing the move around diversifying market risk rather than geopolitical maneuvering or loss of confidence in American credit. Elsewhere, the Goldman Sachs trading desk sounding the alarm, saying the U.S. stock sell-off is not yet over. The team warning of more trades from trend-following algorithmic funds. They say a renewed decline could trigger $33 billion in selling later this week. And finally, President Donald Trump taking ownership of the current U.S. economy after months of blaming the Biden administration.
The one thing that they don't say anymore is affordability, because I fixed the problem that they created.
You said you inherited a mess from President Biden when it comes to the economy. But at what point is it on you? At what point are we in the Trump economy?
Oh, I'd say we're there now. I'm very proud of it.
The president predicting an economic boom this year, saying in a recent cabinet meeting growth could reach, quote, numbers that have never been hit before.
This goes in counter to a number of different polls where people aren't necessarily feeling it, and they feel fairly negative on average toward some of the developments. It raises a question. And this, just bear with me. If you're a conspiracy theorist, sometimes President Trump comes out with things ahead of data releases because he's seen the data. Does this mean that the data is going to actually be better on Wednesday? Or is this signifying more stimulus down the pike, especially if we don't have that kind of boost? In other words, how much of a commitment is this to trying to make this a good economy this year, regardless of anything that develops?
I think the president is just trying to market what he's doing, given the fact that this is the Super Bowl, of course, interview that he knows millions of Americans are going to have their eyes on. What I do think is interesting, though, is that they are taking ownership. I was looking back at our March interview with Howard Lutnick, where this entire phrase came to be. We were questioning him about the data, and I think he turned around to you, Jonathan, and said, you're looking at Biden data. That is not Trump's data. And at this point, now this administration, we are more than a year in to Trump's second term. They are now owning this data, and they have to.
There are many lessons from the Biden administration. Number one, don't gaslight the public. They'll see right through it, and you'll get punished at the polls when the voting comes around. And I think the administration is very, very aware of where this economy actually is and the way people feel. Otherwise, you wouldn't have seen this pivot at the back end of last year coming into this year and leaning into some very populist ideas ahead of the midterms.
So what's next? If people still feel this way, right, how much are we going to get proposals to try to offset what people are still feeling? Because people aren't feeling like this is the best economy in the world.
Well, Friday night, it might have been missed by a lot of individuals because it came out late, but there was a directive from this White House about beef imports. Now, this is going to hurt farmers and cattle ranchers. They are upset. They need those high beef prices because of what is going on right now in reduction we have in cattle, but they are letting more Argentinian beef in And do you know why that is? It's because beef is at record prices, and this continuously shows up in polls. Higher groceries, it's a problem.
Inflation data coming this Friday. Jobs data, of course, this Wednesday. Let's turn to the Federal Reserve. The US Treasury Secretary Scott Bessent sharing his expectations for a Kevin Walsh-led central bank.
It was pretty clear to me. I wrote a 7,000-word essay in the International Economy magazine. I called it gain of function monetary policy.
That's right.
Saying that the Fed had gotten kind of out of control. And I think that Kevin Walsh is going to be very independent, but mindful that the Fed is accountable to the American people.
The former Fed Vice Chair and Global Economic Advisor at PIMCO, Richard Clarida, writing, Walsh has argued for a new Treasury-Fed accord that could provide a framework for the Fed working in tandem with the Treasury to shrink the size of the balance sheet. Rich joins us now for more. Rich, good morning.
Good morning.
Want to give you some more time to explain how you're thinking about an incoming Chair Walsh and what might change at the institution you worked at for so long?
Well, thank you for that. Look, Kevin Walsh I've known for a dozen years. He's accomplished. He's respected. He has a paper trail, and he's been quite specific in his assessment and in many cases criticism of Fed practice, really along three dimensions. The balance sheet he thinks is too big. The Fed has gotten into credit allocation and mortgages. He's been critical of forward guidance information the Fed provides about future rates. And he's been critical that the Fed has not really anchored its policy in policy rules. And so over time, not on day one, but over time, Jonathan, we could see the Fed adjusting policy along all three of those dimensions, including the balance sheet.
Well, let's start with communication and then turn to the balance sheet. The post-GFC Federal Reserve and the communication apparatus, I'm sure there were certain things that you were frustrated with yourself when you were at the Federal Reserve. What would you like to see change, and what do you think ultimately Kevin Walsh will change?
I think there are a couple of things I would highlight. First of all, it's very possible to run a successful monetary policy without any forward guidance. Paul Volcker did it for 8 years, and Alan Greenspan did it for 17 years. Forward guidance providing information about future rates really became into focus at the Fed in the global financial crisis. Rates were at zero, and the markets kept pricing in rate hikes. And so the Bernanke Fed said, we're not hiking rates. And so I think it is legitimate for the Fed to have a conversation and discussion about the costs as well as benefits of forward guidance. It could be about the dots. I think it's more than just the dots. So I think that's probably a direction they'll move, but it's not going to change overnight.
So I'm just thinking, is this basically going to spike the dots? And you're saying, well, that's a big part of it. I mean, do you expect there to be some sort of limit on how much other Fed members can speak, right? So there's this question of how much the Fed has been dominated by the person at the top.
Yeah.
It has always been the Bernanke Fed, or what we got with respect to Fed Chair Powell and the Powell Fed. Yeah. Is this going to be the Walsh Fed, or is there going to be a different dynamic given some of the dissents that we're likely to get?
I think it will be the Walsh Fed. I think it's helpful that Kevin knows the institution. I think that will be important in terms of shaping it in his direction. But it will take time. As you point out, it's a good question. The chair has the power of persuasion, but at the end of the day, he or she only has one vote. Congress set up the Fed to require that interest rate decisions, hike or lower rates, require an affirmative vote of a committee, and the committee has 12 members. Now, in the time we've all been following the Fed, the chair almost always gets his or her way. But if you go further back, we've had situations where the chair has been outvoted on both discount rate and federal funds rate changes. I'm not predicting that, but what I am saying is Kevin Walsh will have to work with the committee and will have to bring the committee along with him if he wants to make the changes that he says he wants to make.
Does the committee include Treasury Secretary Scott Bessent? And I ask this because we're talking about a potential accord between the Federal Reserve and the Treasury. We also have heard Treasury Secretary Bessent talking about Fed policy, what he expects them to do with the balance sheet, which raises this issue of whether, as Krishna Guha says, he has a soft veto over what Kevin Walsh would do. I mean, what's your sense of what this looks like?
Well, it's a complex issue, but let me distill it. The Fed balance sheet and profitability is ultimately consolidated with the Treasury. And so ultimately, the stock of Treasuries outstanding is going to reflect the issuance that Scott Bessent oversees and the Fed's programs of quantitative easing. And I think it is appropriate to have a discussion with the Fed and the Treasury over time about the way to balance off the objectives of the securities outstanding, without, of course, impinging on the Fed's ability to set monetary policy. It's possible to do that. The Fed could run monetary policy with a much shorter duration portfolio, as was the case before the global financial crisis. And also, remember, if you go back to the early days after the global financial crisis, the Fed was actually talking about selling securities and very quickly getting back to a small balance sheet. And so these are complex issues. It's not going to change overnight, but I think they are legitimate areas to have a conversation.
They're not going to change overnight, and the Treasury Secretary made that clear in his interview over the weekend. He said, I wouldn't expect them to do anything quickly on the balance sheet. So what kind of timeline are we actually looking at?
Well, given that the Fed's been talking about this off and on for 15 years, it may be a very long timeline. And in particular, the Fed has made the decision, which could be changed, that it does not want to sell any securities. And so when the Fed is shrinking its balance sheet through so-called QT, it's not selling anything. It's just letting existing securities roll off. Other central banks do sell assets. The Bank of England regularly sells gilts into the gilt market. The Fed itself has talked about selling mortgage-backed securities. And so these are all ideas that have sort of been in the conversation at the Fed for a while, but it's not going to happen overnight.
The Trump administration says they want to take politics out of the Fed. We just heard from Bob Elliott. He was saying how Kevin Warsh isn't hawkish or dovish. He's a political animal. I don't know if you saw over the weekend, but there was a chart really going all over Twitter where you could see his rhetoric changing depending on if it was a Democrat or Republican in the White House, especially depending on if he was maybe in the running to be Fed chair, how dovish he became. What do you make of that, given how long you've known him?
I didn't see that chart. What I would say is the Fed under Jay Powell in the last year and a half has been cutting rates, and the dots, those infamous dots in December, showed that a majority of the committee thought at least one rate cut this year would be appropriate. And so I don't necessarily infer anything other than Warsh sees the economy as the Fed did, at least in December. I do seem to remember Kevin not being entirely complimentary of the Powell-Clarida Fed either during my time there. So I don't think it's entirely driven by any of those considerations.
Rich, can we finish on Torsten Slok of Apollo? He put out this over the weekend. I'd love your reaction to it. He said the U.S. economy is about to take off. Later this year, the conversation in markets will change from talking about Fed cuts to instead talking about the Fed having to hike. What's your reaction to hearing that?
I think I've said on this show, I think there is an upside case for the economy this year. The tech CapEx boom is real. There will be those big, beautiful bill tax cuts that people are getting. Foreign companies are building plant and equipment in the U.S. Whether or not Powell was asked that question, perhaps by Mike McGee at the press conference recently about rate hikes, and he more or less said that's not something that we're thinking about right now. But it gets to the forward guidance issue that we discussed a moment ago. It may well become part of the conversation if we get an economic boom this year, especially if inflation doesn't return back towards the target. And at that point, the forward guidance, the skepticism about forward guidance that some have indicated, including Kevin Warsh, may come to a test.
Rich, it's good to see you. Always great to catch up. Thank you, sir. Richard Clarida there, the former Fed Vice Chair and now back, of course, over at PIMCO. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Joining us now, here's Yahara. Hey, Yahara.
Hi, John. In Japan, Prime Minister Sanae Takaichi secured a historic election win, her Liberal Democratic Party winning a two-thirds supermajority in the lower house, which positions her as the nation's strongest leader in decades. In remarks, Takaichi vowed to build trust with financial markets amid concerns over how she'll pay for a planned tax cut. Meanwhile, here, a federal judge ordering the Trump administration to unfreeze funding for the Gateway Rail Tunnel project after construction shut down due to a lack of funds. This came after the White House offered to restore funding if Senator Chuck Schumer pushed to rename Dulles Airport and New York Penn Station after the president. And if you didn't stay up late enough, the Seattle Seahawks are Super Bowl champions after a dominant performance over the New England Patriots. Seattle held New England scoreless until the fourth quarter, finishing the game with 6 sacks, 2 interceptions, and a fumble recovery. Running back Kenneth Walker was named MVP after rushing for 135 yards. It's the second title in Seattle franchise history. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. Up next on the program, questioning the AI trade.
There's not just questions about valuations, but it's actually the models. Can they actually deliver? Which part of the market could they cannibalize themselves, etc.? So increasingly for investors who once upon a time could see this as a one-way trade, this is really about dispersion.
Up next, we'll catch up with John Belton of Gabelli Funds from New York City. You're watching Bloomberg TV.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Let's start with the scores. Equity futures negative by 0.1% on the S&P. On the Nasdaq 100 down by a third. Massive volatility for tech stocks last week. Huge numbers as well. $650 billion of capex intentions announced by some of these guys. And a big one coming from Alphabet. Google. Alphabet this morning kicking off a 7-part dollar bond sale. That is going to be closely watched after announcing $185 billion of capex. just last week.
Yeah, how does the market handle this? We already dealt with Oracle's bond sale. It cleared. How does the market handle a 100-year bond sale from Google, which evidently there is a pound-denominated tranche that's 100 years long? I mean, how much do we get people bidding into 15-year Alphabet debt at a time when they clearly need the money? It used to be they didn't need the money. Now they're selling bonds because they actually need it for some of their CapEx ambitions.
When credit and credit issue, this big issuance, comes through, sometimes it kicks around the Treasury market, and you're seeing that this morning. Yields up by an extra basis point, 424 on 10s. That's a lot of supply to absorb, and something we'll closely watch through today's session.
And who's going to buy it, and how are they going to finance it, and how much are they financing it on the longer end of the Treasury curve, given the fact that some of these tech behemoths have leaned on long-duration bond issuance. I mean, think about this. Long-duration bond issuance to buy NVIDIA chips that are going to go out of date in 3 years. I mean, it just sort of highlights the situation. It's like a sieve.
US Treasury issuing debt later this week as well, 10 and 30-year bond issues. So lots of supply coming this week, going into CPI on Friday and payrolls on Wednesday. Under surveillance this morning, questioning the AI trade.
In Q3, Q4 of last year, the narrative around tech and AI was really about questioning of valuations, about bubble, the CapEx spend. And now you're seeing it shift even further, so that there's not just questions about valuations, but it's actually the models. Can they actually deliver? Which part of the market? Could they cannibalize themselves, etc.? So increasingly for investors who once upon a time could see this as a one-way trade, this is really about dispersion.
So here's the latest this morning. Waking up following a massive week of volatility. NASDAQ 100 wiping out $700 billion in market value. John Belton of Gabelli Funds writing valuations have had a healthy reset. Longer term, the reality is that, as always, there will be winners and losers. John joins us now for more. John, welcome to the programme, sir. Can we live in a world where CapEx is both a waste of money and AI is ridiculously disruptive?
I don't think so. I think that's why you're seeing these types of CapEx numbers, because this technology is very clearly transformative. It's already got a couple major commercial use cases. I think so far we've seen digital advertising, digital commerce, cloud computing, and now it seems like software development are three massive use cases that are already proven. Many more to come, but I think that's why you're seeing these huge CapEx numbers.
John, last week in the price action, as you know, a lot of people were preoccupied with the pain, the disruption. What about the benefits? Where are you focused on the benefits?
Well, again, I think I'd go back to the comment I just made, where clearly digital advertising, the big giants in digital advertising, specifically Alphabet and Meta, clear beneficiaries. These are several $100 billion ad businesses that are re-accelerating at that kind of scale. That's kind of amazing to think about. So I think that's beneficiary number one. And the way they're using AI to support these businesses. So it's not just about delivering the right ads in front of the right people and defining those audiences. It's about automatically generating ads and making the process easier for their advertisers. So I think there's still so much to be done in that area. And then I think cloud computing is the next, and that's obviously a broad term, but you're seeing these cloud businesses from the likes of Amazon, Alphabet, Microsoft, and Oracle similarly re-accelerate at $100+ billion scale. So I think those are the early beneficiaries seem pretty concentrated in those areas, and I think we'll see how that unfolds going forward.
John, if you buy, and I think a lot of people do, that AI is going to change the world and be incredibly profitable for companies that are able to adopt it, that's one thing. It's another thing to say that the multiples that we currently have on some of these tech stocks are justified based on the fact that they're no longer asset-light companies. They are increasingly incurring debt. Google is selling debt now with 40-year maturities in the United States, according to this latest prospectus. And suddenly they're burning through cash and not able to buy back their shares. How much does that make you have to re-rate some of the valuations on these stocks, regardless of the view forward on AI?
Yeah, I would just clarify a couple things you said. So first of all, none of these companies are burning cash right now, right? I think Oracle would be the one exception among the big cloud companies. But, Meta, Google, Amazon, Microsoft, these are still positive free cash flow companies. They're still, 30+% operating margin companies. So I don't think, yes, they are in an investment cycle. That is true. But burning cash, I think, overstates, the extent to which they're spending. And then I think you look at these balance sheets, these are all by and large net cash balance sheets. So I think issuing debt, that's just a matter of capital structure optimization. That's just a prudent way of optimizing the mix of funding for these businesses. So these companies have no balance sheet issues. They have no cash flow issues. And in terms of valuation, I think we'll stick with the Mag 6, being Alphabet, Amazon, Microsoft, Meta, NVIDIA, and I forget who else I'm forgetting right now, but I think at least 3 of those companies are trading at a below market price earnings ratio, and valuation is not an investment thesis in and of itself, but I really don't see valuation or balance sheet health or cash flow as a big risk right now. I think the risk is more so, are these earnings estimates for the next couple of years going to prove too lofty, and are they going to be able to deliver on the technological progress that AI does offer?
Hey, John, this was super well framed, and we appreciate your time. Thank you, sir. John Boughton there of Gabelli Funds with an important point on Alphabet at the end. Alphabet tapping the US high-grade bond market, looking to issue a 7-part bond sale through today.
Yeah, including a 40-year piece that's priced 1.2 percentage points above Treasury. So if you want to know why long-term Treasuries are selling off in response to this, it's because evidently Google is a competitor to the U.S. government, 4-year dollars, and maybe some people would prefer to put it with Google. We shall see. This is going to take place today.
The Oracle debt was taken down really well in the last week, so another test for the debt market from a company with a much more healthier balance sheet, Alphabet. Coming up on the programme, Jill Carey-Hall of Bank of America, Frank Lee of HSBC, Luke Tilley of Wilmington Trust, Austin Kwon of Wells Fargo. The third hour of Bloomberg Surveillance up next.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
There are lots of cross currents. This isn't just about software. This isn't just about AI.
Everybody says there's insatiable demand for AI. I'm not sure we're quite seeing that yet.
There is a lot of companies that are going to benefit significantly from the AI build.
It does feel, though, that we're starting to approach maybe the end of that sell-off.
This is such a generational transformation. We're going to live in this bumpy ride.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. Your scores look like this. Equity futures down not even 0.1% on the S&P 500. The Nasdaq down by 0.2. A week that is stacked with economic data, including retail sales tomorrow, payrolls Wednesday, claims Thursday, and then CPI coming up on Friday.
This is going to be the data that we've been waiting for. Whether it gives us clarity is another question, but it really was emphasized last week how important it is for the U.S. economy to remain strong, for the overall index to not fall out of bed. Because even though we saw huge drawdowns in some of the tech stocks, we saw a basically flat market because of the strength in the cyclicals. Can this continue? It really hinges on the real economy.
Down just 0.1% on the week on the S&P, which is crazy to think about, within 1 percentage point of all-time highs.
And what's going on in terms of the data that everyone is looking forward to? The scope could not be wide. -10 to upwards of 100,000 are right now, when you look at our street economists estimating 69K. But the more important for this data is it's going to be clean after a massive government shutdown. And then right after that, we're going to get CPI. So putting this all together, I think is what the market's going to be focused on.
Plenty of people out there still really bullish on the U.S. economy, the rate cuts we've already had, the tax refunds we're about to see, and this. $650 billion of capex coming from 4 companies, and this is what's happening in the debt market. Equity side of things up by 0.6%. Alphabet on the debt side, a 7-part dollar bond sale announced by the Google parent company just moments ago.
It is going to be, I can't emphasize enough how important it is to watch how this debt is received in the market. As you were mentioning, John, Oracle sold its bond offering, and it was cleared in flying colors through markets. Investors definitely were welcoming the bonds. Do we get the same dynamic from Google? Google has a better balance sheet. Google has a better story to tell even than Oracle does. Do they get the kind of spreads that they're looking for? And if they do, does that say green light to all of those CapEx spending plans because the capital markets will finance that?
They're funding a lot of that through cash flow anyway. These are cash machines, some of these companies, but there is a lot of paper that's going to be issued this year. The Treasury, corporate America, and we're going to get some big IPOs as well. That's in the mix when we have this conversation too. Anthropic being one, maybe OpenAI, SpaceX another. These are some of the biggest IPOs this country has ever seen, and everything feels like it's coming all at once.
And it raises the question of how much capital markets will tolerate some of the hopes and dreams of the big tech names and, frankly, the whole broader space. Right now, they are showing some nerves. And that, I think, is the reason why people are saying watch each consecutive debt sale. If there is one that does not clear, watch that to trickle out in magnified form throughout all of markets. This really is important to watch.
We've got a lot of supply to absorb this week, including issuance from the Treasury, 10s and 30s, 3s as well, I think, through the week. Yields a little bit higher this morning, up by 3 basis points on 10s at the very long end of the curve on a 30-year maturity. Yields up by 4 basis points to 4.89. Coming up this hour, we'll catch up with Jill Carey-Hall of Bank of America with stocks edging lower, frankly, of HSBC, as Nvidia is silencing the latest AI concerns, and Luke Tilley of Wilmington Trust previewing a big week of economic data. We begin this hour with stocks wavering following a volatile stretch for big tech. Jill Carey-Hall of Bank of America Securities writing, given the risks, investors may be best served looking for inexpensive opportunities that have overly discounted the risk or that are AI beneficiaries. Jill joins us now for more. Jill, good morning.
Good morning.
It's good to see you. Where does that take you? Where do you land?
Well, I think, with respect to software within the Russell 2000, where, overall we've obviously seen a big correction in the broader software industry. And I think the sentiment is obviously still uncertain there, but still, given how much it's sold off, certainly some opportunities. I think, within the Russell 2000, though, where potentially some bigger opportunities could be are areas that, are still inexpensive. And, given the ISM print that we saw last week, this is something that has been highly correlated not only to corporate earnings, but to relative performance of small caps relative to large caps. And I think, that manufacturing recovery can help sort of cement investors' confidence in the earnings recovery and benefit some parts of small caps that, are historically more sensitive to the ISM.
For us, that's what's changed coming into 2026, that the small cap story through the Russell has been less about rates and much more about the economy. Are you seeing the more cyclical parts of the market more broadly pick up in anticipation of a pickup in economic growth?
Well, I think we've generally seen, a broadening out of, even within the Russell of what's been working so far this year. And, I think within small caps, there are areas like financials and energy that are still, even though the Russell 2000 is now trading a bit above its historic average valuation multiple, those are areas that are still cheap. Financials in particular is still ranking very well in our work. And these are areas that historically, when the ISM has crossed above 50, these have been areas that have historically outperformed.
Is this entirely driven at this point about the economy? And is it fair to say that any kind of rate cutting cycle has already been fully priced in to this particular sector?
Well, I think, it's important that we still get rate cuts this year. Our economists are expecting to, and the Russell 2000 has been extremely sensitive to Fed expectations. So I think the fact that, we've been discounting Fed cuts, and if we get those Fed cuts, that'll be enough to support the Russell. But if we start to get cuts priced out or even expectations of hikes, then that becomes a lot more challenging because the index has been so highly correlated with the Fed and data that feeds into Fed expectations.
It's not just small caps, it's all of the cyclicals that have really been outperforming. And some people can say, as Max Kettner did earlier today of HSBC, this is going to continue and it's going to keep driving optimism in the overall index. Jim Reed, as John was mentioning earlier, talks about how this is very similar to 2000, where you saw that rapid broadening out in the first 6 months of 2000 and then the rest is history. Why are you confident that this is going to be more of the Max Kettner version of things, where this is sustainable, even if you get those potholes in some of the big tech names?
Mm-hmm. Yeah, I mean, even within the S&P 500, even though earnings growth will still be driven largely by tech this year, we and consensus are expecting that you see, a deceleration of earnings for the Mag 7, the big names, versus a pickup for the rest of the market. So, within the S&P 500, we're more bullish on the equal-weighted S&P 500 than the cap-weighted index. And then, even down in small and mid caps, that's where the big earnings recovery is expected to be after we were in this prolonged earnings recession, manufacturing downturn. So I think, we were in a period where that earnings recovery kept getting pushed out, especially for the small and mid cap segment. So I think if we continue to get data like the ISM we just got, that helps cement investors' confidence in this earnings recovery and more cyclical recovery. And the fact that corporate guidance has actually been pretty supportive, I think gives us and can give investors a little bit more confidence this time around. Usually at the beginning of the year, guidance is very weak. Corporates have incentive to be conservative, but it's actually been much stronger than it usually is in January and February. So that's been an encouraging data point as well.
One reason why there has been also optimism is because capital markets have been wide open. It's being tested right now. The capital markets collectively, based on all the activity that's expected, John laid it out earlier, and we're now getting debt sales that are only escalating to finance some of the CapEx ambitions of the big tech names in particular, but more broadly. How important is it for all of these sales to go well in order to keep some of the optimism in the rotation and just frankly the growth trade in the United States?
Mm-hmm. Yeah, I mean, I think, some of the ones that you mentioned will be important to watch. And I think just, the hyperscalers, if they are becoming more, levered in general, these stocks have become so capital intensive, in many cases more so than even the oil majors. And, typically big CapEx spenders historically tend to underperform. So, what we've seen in recent years has been an anomaly versus what typically happens. So I think there's a lot more focus on, that aspect of things. And I think in general, with the M&A and IPO backdrop, that's going to be, impactful to watch. Everyone had kind of been expecting that we could see a pickup this year if economic growth and conditions remain supportive. I think it's not necessarily for something like small caps, will the outlook for the Russell 2000 hinge on M&A or IPO backdrop? Not necessarily. We haven't necessarily seen that historically. Surprisingly, the Russell's actually underperformed more frequently than it's outperformed in years where we've seen heavy M&A activity. But I do think, for certain sectors, especially if we see an M&A pickup in financials, regional banks, that can help sentiment there. Tech and healthcare. Healthcare has been an area where we did see a lot of M&A activity, but case for that to continue. IPOs have been, an area that's been a bit more challenging for small caps because a lot of companies have been staying private longer, going public larger. So, I think the opportunity set for small caps has become a bit more narrow, and the growth backdrop for small caps is not necessarily what it once was, in the 90s, early 2000s.
Joe, you put a lot of emphasis on the ISM manufacturing, but how much of that was because of what we saw with basically the inventories being drawn down?
Well, I think overall, if indicators like the ISM and just the demand backdrop, I think if we continue to see reshoring of U.S. manufacturing, anything that leads to a continued prolonged CapEx cycle in the U.S., small cap sales growth is highly correlated with U.S. CapEx growth. So, I think that overall, any of the indicators that suggest that story is continuing should be kind of a positive multi-year story for domestic small and mid-cap companies. So, I think we'll continue to watch those indicators, but the fact that we finally came out of this, manufacturing downturn and potentially that continues, is something that had been one of the bear cases for small caps this year if that doesn't occur.
Is there any tension between what's happening with small caps and what's happening with staples at the moment on the S&P?
With consumer staples?
The fact that they're up 14% year to date.
Yeah, staples is an interesting one. I mean, within our large cap work, we had recently upgraded consumer staples in our year ahead. It's obviously been kind of this bombed out sector. And, now potentially you're starting to see kind of guidance, second derivative turn in terms of revisions. Even within small caps, it's been ranking better. I mean, if you see pockets of tariff relief that benefits staples. And so I'd say that's one sector. Even when I looked at the ISM, that's been kind of the one defensive sector, even within small caps, that actually tended to do well after the ISM crossed above 50. So that's one that, even though some of our preferences have been for more of the cyclical sectors, that is one more defensive sector that we do see potential for recovery. And if there's a focus on affordability, for low-income consumers who have struggled, potentially we see those tailwinds there.
One to watch. Jill, thank you.
Thank
you.
you.
Always, thank you. Jill Carey-Hall there of Bank of America. Speaking of recoveries, the S&P 500 no longer negative on the session. We're just about unchanged on the S&P. Let's give you an update on stories worldwide this morning with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Hi, John. We're seeing Alphabet shares edging lower after the tech giant announced a $7-part dollar bond sale. It's the latest in what's been a borrowing spree by companies at the forefront of the AI investment boom. Sources telling us here at Bloomberg, Alphabet is also offering debts in pound sterling and Swiss franc denominated bond. And Bank of France Governor Francois Villeroy is stepping down from his post. Villeroy is set to leave office on June 1st, more than a year before his mandate ends. The central banker saying his decision to leave was personal, and he plans to take over as head of a foundation. And moving on to golf, which was surprisingly more exciting than the Super Bowl. Chris Gotterup won the Phoenix Open this weekend, defeating Hideki Matsuyama in a playoff. Matsuyama entered the final hole with a one-shot lead, but struggled off the tee box as Gotterup drilled a long birdie, securing the victory. This is Gotterup's second win on the PGA Tour this season. That's your Bloomberg Brief. John?
This I did actually watch, of course.
I can tell. Look at your face.
No, I'm laughing because I just felt like it was just me and maybe five other people.
I don't think so. I'm pretty sure that Yahira also, and I think a lot of other people as well. People looking for excitement.
I was wondering how this got into the news, and I was like, oh, of course, it's probably the only thing John watched this weekend.
I didn't make this happen. It's just, it was pretty funny. Because if this had carried on, I still would have watched this instead of the start of the Super Bowl.
Oh, I know that. But you know what the truth is?
Just supporting Jim Nantz over at CBS.
But I think that actually wouldn't be the only one. I mean, I was watching figure skating, so there you go.
Up next on the programme, the Morning Calls Plus, Frank Lee of HSBC as NVIDIA is silencing the latest AI concerns. That conversation just around the corner from New York City this morning. Good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I think it's important with the software names to take a step back and think about the technicals because they are very, very oversold. I think the big question is, can software regain its leadership coming out of this bounce? I think that's a lot more in question just simply because there's all these doubts of things that effectively software companies can't disprove at this point because it's AI risks that could be out 1, 2, 3, 4 years in the future.
That's part of the difficulty right now. That was Cameron Dawson of New Edge Wealth, joined us a little bit earlier on this morning. If you're just tuning in, welcome to the programme. Equity futures on the S&P 500, just about negative. No drama, though. We're down about 0.1%. Drama-filled week last week on the Nasdaq 100, the worst week of the year so far. This morning, down another 0.1%. That's the price action. Let's get you some morning calls. First up, Medius downgrading Microsoft to hold, expecting free cash flow to dip in the near term. Elsewhere, JP Morgan raising its price target on Cisco to 95, citing accelerating revenue growth. And finally, D.A. Davidson upgrading Oracle to a buy, saying it will benefit from OpenAI exceeding expectations this year. That stock's bouncing back. It's up by 5%. In focus last week after a big debt issue from that company, taken down really well. Speaking of debt issues, we will get one from Alphabet, the Google parent company, kicking off a 7-part U.S. bond sale through this morning.
Yeah, including a 40-year tranche. This follows, as you mentioned, the $25 billion sale of Oracle debt that went quite well. This is expected as part of at least $40 billion of investment-grade bond issuance in the United States so far this week. A very heavy slate ahead. And really, it raises a question of how differently each of these issuers will be treated. In other words, are there going to be winners and losers when it comes to these sectors and how easy it is to clear the bar for debt investors who are seemingly okay with the debt issuance that they're coming out with because they still are cash cows and they aren't necessarily negative profiles, even if equity markets are concerned.
One of the winners should be Nvidia. As the headline crosses the Bloomberg that they're looking to raise $15 billion over at Alphabet, one of the winners should be the chip players. They're going to be spending a fortune on CapEx. Who wins? This is what was odd about last week. As these CapEx intentions rolled out and the fact that we were seeing Broadcom and Nvidia up until Friday trade really soft on the week, it was just really difficult to get my head around. Aren't they going to be spending money on the chips these guys produce?
It seems like people finally got around to asking that question and answering it and saying, yeah, because on Friday we saw some of that rebound. Does it continue? Because ultimately, a lot of this CapEx is going to go to buying the latest generation of chips and, frankly, not even buying them, solidifying their order books for future deliveries. So definitely a lot of people thinking the same thing that you are.
Frankly, if HSBC has a buy rating, 320 price target on shares of NVIDIA, I'm pleased to say that Frank Lee joins us now for more. Frank, welcome to the programme. Last week was curious. We had this drip feed of massive numbers coming from big tech, and yet some of the major chip players were trading soft through the week. Could you make sense of that, Frank?
Sure. I think what you've seen over the last couple of months, though, that there's already been a little bit of an AI diffusion trade. So, NVIDIA and Broadcom have been underperforming overall for the last few months, as I think as the market has shifted to things such as the memory shortage with the ongoing price hikes. That's offering better near-term earnings momentum as prices keep going up almost every month. We're also seeing, I think, a bit more focus on AI networking. So you're seeing names like Coherent and Lumentum. They're seeing very strong earnings beats and guidances, very similar to the way people started looking at the ASIC story. So I think that's part of the reason is there just seems to be, more growth in other areas relative to the big blue chip semi names that started off this AI cycle.
So, Frank, that raises the question just how these names will perform when these big IPOs materialize later this year. Anthropic, OpenAI, what's going to happen to the story of yesteryear?
Yeah, so I think, what we need to see really, if you look at the CapEx spend of these big hyperscalers, what was interesting was that the initial reaction was some muted because even though we saw $150 billion of incremental CapEx since the beginning of the year for 2026, yeah, I think there's some debate about how much of it is going into the actual GPU and the ASIC chips, because one thing that we've also seen is memory has seen a significant, almost, once in a generation upturn. So that is driving a lot of revenue revision on the memory names. So if you look at how much memory revenues have been revised for 2026, it's also been about 150 billion. So it's almost a one-to-one match, meaning that the incremental CapEx we saw seems to be going some of it to the memory space, and how much is left over for the, for more upside to the memory, to the actual chip guys like Broadcom and NVIDIA. I think that was a question the market was contemplating earlier.
So what's the answer, Frank? I mean, do you think that ultimately this is going to go more to the Qualcomms of the world or even the Samsungs, or do you think that ultimately there's a lot more to flow up to the top of the chain?
I think what you need to see is two things. I think the velocity of these price hikes on the memory side, as it starts to kind of level off, that will be good for the original AI chip guys, because then I think we'll see this increased spending come back to the original chip makers. And secondly, I think that also suggests that perhaps this $150 billion, upward revision in CapEx is not enough for this year. We may see actually further revisions throughout the year, and that's part of the fundraising that we're seeing from these hyperscalers. Because remember, if you look at 2025, we started off the beginning of the year with higher than expected CapEx, and it kept getting raised throughout the year. And so we're starting off this year in a similar spot where, again, these numbers have beat the market expectations for this year's CapEx, but it could continue to go higher throughout the year.
Frank, why is it so important for the likes of NVIDIA to have strong investments in the likes of OpenAI? And I ask this at a time when there is a lot of concern about circular financing and how much there needs to be essentially vendor financing, right? The likes of NVIDIA giving a company money to then buy its chips. I mean, what's the rationale behind this?
Well, I think NVIDIA's dependency on the original hyperscalers driving their overall revenues, that narrative isn't quite as the same as it was 2 years ago, because we've seen these hyperscalers looking to develop their own chips, or the ASIC chip that's driving Broadcom with Google and TPU. So NVIDIA needs to really increase their TAM opportunities outside of the core CSPs, and that's enterprise, that's sovereign, and empowering that is our companies like OpenAI. I mean, Stargate is basically a sovereign project. So I think that's why it's more important that NVIDIA needs to find a way to expand its original market beyond the hyperscalers.
Frank, just pulling you away a little bit from hardware, forgive me, but I do think that it's associated with the conversation you're ultimately having. Isn't Gemini and Alphabet and the money they're throwing at this market right now to win just crushing the OpenAI story?
I think it's it's been a back and forth over the last couple of months. I think the narrative has shifted in favor of Google, not only because of Gemini, but Google has done a lot on a hardware side, both on the chips as well as the networking, that's closed the gap. But at the same time, we do expect there will be another upgrade model for OpenAI coming out in the next few months. And so we'll see whether that momentum can start swinging the other way. So I think it's still a little too early to say definitively who's going to be the long-term winner. I think at the moment, everyone's expanding and still very much in the game.
Frank, forgive me for going back to an earlier question, but I do want to get your ideas on what this might mean for semis. This OpenAI IPO, how much of a market event that will be for the whole ecosystem?
Well, I think it's very important because OpenAI sort of kicked off that whole narrative of this much bigger TAM with a number of gigawatts and how that's going to drive, much more revenue. We've done some work looking at if the 18 gigawatt expansion for OpenAI materializes as expected, that could potentially double NVIDIA's data center revenue by almost 100% from where we are this year. I mean, they're going to probably approach 350 billion in revenue just on data centers. The magnitude and scale of these gigawatt announcements could almost double the revenue from where we are this year.
Interesting. Frank, thank you, sir. Thanks for being open and honest with us. Frank Lee there of HSBC on NVIDIA and the whole ecosystem. If you're just joining us, a few headlines I want to get through this morning. So this was from Alphabet a little bit earlier. So they're going to raise about $15 billion from a 7-part US debt sale. This follows Oracle in the past few weeks or so. They issued about $25 billion, and that was taken down pretty well. Bear in mind that Alphabet has a super strong balance sheet relative to, say, an Oracle. So I'm not anticipating massive concerns there, but we'll track the numbers anyway. This came from the NEC director moments ago. And this, I think, is material from Kevin Hassett. We should expect slightly lower jobs numbers, and lower jobs numbers shouldn't trigger panic. What's that headline about going into payrolls on Wednesday?
It seems like we're not going to get a good number, and two-year yields are rolling over as a result of this. They're lower, not by a significant amount, just by about 2 basis points, but it highlights people are taking this as forward guidance on what we should expect on Wednesday's non-farm payrolls.
Coming up on the programme, we'll catch up with Lou Tilley of Wilmington Trust, previewing a big week of economic data.
Technology is embedded in every aspect of our lives. and laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Stocks are down by about 0.1% on the S&P, and the Nasdaq we're down by 0.2%. In the bond market, curious story emerging in the last hour or so. Yields were up at the long end of the curve. 10-year bond yields higher by about 3 or 4 basis points at one point. A couple of reasons for that. A story out of China that Chinese banks were urged to curb exposure to US treasuries, the massive performance out of Japan, the fact that Japanese bond yields on a 10-year maturity rose just a little bit. And then we also had a 7-part dollar bond sale from Alphabet, $15 billion debt sale coming from Alphabet a little bit later this morning. All reasons for high yields. And then this happened moments ago. Kevin Hassett, the NEC director, with a strong steer going into Wednesday's payrolls report, saying that we should expect slightly lower jobs numbers, and those lower jobs numbers shouldn't trigger panic. Those headlines crossing just moments ago. And for all the reasons for high yields this morning, yields reverse course. Lower, particularly at the front end of the curve. We're down by about a basis point or two to 348.
So you say giving a steer, and that is certainly how the market is treating it. It would be highly unusual for someone who got a forward look on the data that doesn't come out until Wednesday at 8:30 a.m. Eastern to deliver that in sort of a wink, wink, nod, nod. So it raises this question, what exactly is he talking about in terms of what he's expecting? Is it based on his own analysis? And then furthermore, how much is this going to drive some skepticism in equities as we're seeing right now? Because ultimately, it speaks to the real economy that needs to keep chugging along in order for the overall index to remain at a higher level.
Well, I can't speak to exactly what Kevin Hassett is seeing. Is this his own analysis, or did he actually see the jobs report? What I do know is that the White House does get the jobs report ahead of the release. It's a little bit awkward now because we're supposed to have it on Friday. It was Wednesday. He could have gotten it last night or seen it this morning, and then that is potentially where some of the remarks and what.
Okay guys, ये नेचुरल गैस में कॉस्ट टू कॉस्ट में जिन लोगों ने रखा था एसएल जा चुका है, ठीक है, होल्ड मत करना, अब फेक ब्रेकडाउन होगा तो देखेंगे। इसमें चला गया कॉस्ट टू कॉस्ट का एसएल इन नेचुरल गैस, काफ़ी देर रुका रहा, लगता है इसी रेंज पर रहेगा। लास्ट दोनों कैंडल ओपन इक्वल टू हाई हैं, प्रीवियस कैंडल भी ओपन इक्वल टू हाई थी, ये कैंडल भी ओपन इक्वल टू हाई है। लेट्स सी क्या मूव करता है अब ये प्राइस, निकल जाना उसमें से, ठीक है। कॉस्ट टू कॉस्ट में लोगों ने रखा था एसएल कॉस्ट टू कॉस्ट पे एग्जिट हो चुका है, बाकी जो लोग अगर लेवल पे रुके हुए दैट इज आल्सो गॉन। नीड टू सी क्या ये रीटेस्ट करेगा या फिर गिरता रहता है, फेक ब्रेकडाउन होगा तो वापस री एंट्री कर लेंगे, बट अभी डायरेक्टली नहीं कर सकते। 8 PM यूएस मार्केट ओपन होगा, वी विल सी दैट। क्रूड ऑयल में भी देखोगे ओपन इक्वल टू हाई है, दोनों ही जगह ओपन इक्वल टू हाई कैंडल बनी है। तो कोई न्यूज़ है, दोनों ही जगह ओपन इक्वल टू हाई बना के प्राइस ने गैप डाउन किया है। स्पेशली क्रूड में देखोगे 630 न्यूयॉर्क सेशन ओपन गैप डाउन, प्राइस मूव्ड। हाँ ठीक है। क्रूड ऑयल में देखना पड़ेगा कितना फॉल करता है। ये प्रीवियस पॉइंट ऑफ इंटरेस्ट मॉर्निंग वाला ही है। पे ये रुकता है या फिर नहीं रुकता है। ठीक है, मॉर्निंग का ही पॉइंट ऑफ इंटरेस्ट है, मल्टीपल टाइम टेस्ट हो चुका है, मॉर्निंग पे नहीं लिया था, फिर से ओपन इक्वल टू हाई बना के गिर रहा है नीचे। ये लोअर सर्किट लगा था, ओपन हो गया शायद। थर्ड लोअर सर्किट फॉर द डे लगाया, लगने वाला है 10.90%। 11% पे लग जाता है सर, 11 या 12% के आसपास। प्राइस अगर ये नेचुरल गैस का फॉल करता है तो 276 274 तक फिर जाना चाहिए इसको, लोअर एंड पे। ये एक एरिया दिख रहा है, एरिया ऑफ सपोर्ट नेक्स्ट। लग रहा है कैंडल नीचे क्लोज होती है तो भाई ब्रेकडाउन में फिर रीटेस्ट करेंगे। अगर ये सक्सेसफुली थोड़ा सा ब्रेकडाउन पे नीचे और क्लोज करती है कैंडल 15 मिनट की। कैंडल क्लोज हो गई है, ब्रेकडाउन हो गया नेचुरल गैस का। एक्सपेक्ट करेंगे अब थोड़ा सा फॉल करे टिल 274 के अप्रॉक्सीमेटली, इतना तो फॉल होना चाहिए। ठीक है, हल्का सा पुल बैक सेलिंग प्लान करेंगे वापस। यहाँ से काफ़ी देर का कंसोलिडेशन ब्रेक हुआ है, स्ट्रॉन्ग सपोर्ट था काफ़ी देर मॉर्निंग से, देखोगे अभी ब्रेक हुआ है ऑलमोस्ट 9 to 9 ही लगा लो। घंटे से रेजिस्टेंस पे रुका हुआ, सपोर्ट पे रुका हुआ था। नाउ एक्सपेक्टिंग अप सेलिंग ऑन दिस जोन। थोड़ा सा बेरिस हो गया मेरे अकॉर्डिंग इंट्राडे में अभी। ठीक है, जो बाकी बाइंग में थे वो निकल जाना, उनका तो हो गया। ट्रेलिंग एसएल था या फिर नॉर्मल एसएल था, दोनों ही जा चुके हैं। नेक्स्ट सपोर्ट अब सीधा 274 के अराउंड है। क्रूड में भी ये पॉइंट ऑफ इंटरेस्ट अभी भी इंटैक्ट ही है जब तक ब्रेक नहीं करता। हो गया इस लेवल से क्रूड ऑयल में मल्टीपल टाइम बाइंग आ गई है। अब तो फर्स्ट टाइम बाइंग हाई बना है, दूसरी बार हायर हाई, थर्ड टाइम लोअर हाई, फोर्थ टाइम एक और लोअर हाई। ये 6 टाइम थी मॉर्निंग पे बाइंग जो आई थी यहाँ पर 5675 से 5700 पे। 6 टाइम थी, इस बार भी लोअर हाई ही बना है। अभी ब्रेक नहीं हुआ जब तक ये 5658 के नीचे क्लोजिंग नहीं देता, तब तक ब्रेक डाउन भी नहीं कंसिडर कर सकते इसको लॉजिकली। मुझे लग रहा है शायद ब्रेक होना चाहिए वैसे क्रूड ऑयल में ब्रेक हुआ नहीं है ध्यान रखना है पॉइंट ऑफ इंटरेस्ट स्टिल होल्डिंग क्रूड ऑयल भी देखो 5680 के नीचे ही कहीं क्लोजिंग देगा तभी इसको बेयरिश मानेंगे। 5680 के नीचे एक के बाद एक अगर दो कैंडल क्लोज करता है तब ये पॉइंट ऑफ इंटरेस्ट ब्रेक माना जाएगा। इंटैक्ट ही है ये, तो जब तक ब्रेक नहीं करता तब तक हो सकता है फेक ब्रेकडाउन दे दे, बट यहाँ पर तो सेल मत करना। 5680 के नीचे अगर प्रॉपरली ब्रेकडाउन होता है तब इसके नीचे फिर 5520 का एक लेवल है। बाकी ऊपर भी मुझे थोड़ा सा लग रहा है मुश्किल ही है जाना अनटिल अनलेस कोई न्यूज़ नहीं आती। ये जो स्विंग हाई बना है दैट नाउ स्ट्रॉन्ग रेजिस्टेंस। ये स्विंग जो बना है अब ये भी एक रेजिस्टेंस बन गया है, तो थोड़ा सा साइडवेज लग रहा है अब इस रेंज में। या तो ऊपर ब्रेकआउट कर दे 5825 के ऊपर या फिर नीचे ब्रेकडाउन करे 5680 के नीचे, मतलब एक के ऊपर एक दो कैंडल। नेचुरल गैस में है रीटेस्ट ही है, इसमें भी अगर 290 के ऊपर एक दो कैंडल क्लोज होती हैं तो इट मींस ये फेक ब्रेकडाउन कहलाएगा, रीटेस्ट कैंसिल जाएगा उस केस में। तो अदरवाइज ये ब्रेकडाउन तो कर चुका है, दैट इज अ रीटेस्ट इन नेचुरल गैस। क्रूड मुझे अब थोड़ा सा इसी रेंज में लग रहा है साइडवेज।
We are watching that closely to see where the gauge is for the break-even number.
I hear so much about this Sell America trade that supposedly is on, the debasement trade, and yet it doesn't really seem to be coming through, right? We're still at under 422 on the 10-year yield.
Right, and that tells you everything you need to know, the price action itself. But also we look at the tick data, or we look at the indirect bids at the auctions, none of it's flashing any worries. And to be honest, China's been reducing its treasury holdings for some time. And this looks more like some sort of regulatory risk management exercise than an actual message to the American administration about geopolitics or the trade negotiations going on right now. So I don't take too much worry in it. And finally, just China really wants lending to go to the consumer, to boost the domestic economy. They're very worried that they put this policy backdrop in place and yet nothing is happening. It's pushing on a string still.
All right, Michael, thanks so much for joining us. Bloomberg's macro strategist, Michael Ball. You can check out his work and the work of his team by typing MLIV-GO on your Bloomberg terminal. In terms of futures, after the bounce back that we got on Friday, a little bit of a sell-off here today, and I stress little bit. The Dow, S&P futures, down 0.25%. NASDAQ futures down about 0.4%. Let me go ahead and look up, because we don't have the Dow Jones Industrial Average for you here, and we'll start playing that throughout the day, because of the 50,000 mark that we overcame on Friday. Right now, Dow futures down 0.2%.
Dow did well, equal weight did well. It's the old school rest of the index coming back. Coming up on the show, Apollo sets a lending record in a push to rival Wall Street. We're going to get the details for you as those shares move higher by nearly 4%. That's coming up next. Stay with us on Open Interest.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Let's get now to high interest. Look what's making headlines around the world. China's President Xi Jinping faces a choice after Japan's new Prime Minister, Sanae Takaichi, won an historic landslide victory. Beijing can keep economic pressure on Tokyo over her Taiwan comments or seek a reset. Takaichi has implied that a Chinese invasion of Taiwan could prompt Japan to deploy its military. And while the new prime minister says she wants stable ties, she also said she won't back down on security, raising stakes for China, Japan, and the U.S. Tuition for New York City private schools has now crossed the $70,000 mark at several of the elite schools here in the city. The median tuition is up nearly 5%, far outpacing inflation, driven by higher teacher salaries and operating costs, while millions are being offered in financial aid. Even high-earning families say the sticker shock is growing. And Ferrari has revealed the interior of its first electric car, co-designed with former Apple design chief Johnny Ive. It is called the Ferrari Luce. It rejects giant screens and autonomy hype, favoring tactile switches, physical controls, and driver-focused experience. Ferrari says more details, including the exterior, are coming later this year.
In your review, what do you think?
I mean, it looks pretty good, but it does look pretty iPad-ish. And I mean, I'm open-minded because it's a Ferrari. It's going to be amazing. But I prefer a manual transmission, a naturally aspirated motor,
Yeah, I was
No
going to say, if
ABS.
someone brought you this car and was like, here you go, Matt, I'm sure you would not say no.
Be very happy. I'm glad they have an analog clock there.
Yes. Yes, bring back analog clocks. Matt, elsewhere, another story we're tracking today. Apollo has set a record in its business of making loans. The company originated $97 billion in the fourth quarter. It's pushing to become the largest underwriter on Wall Street. Let's get more with Silas Brown, Bloomberg senior private credit reporter. Silas, this comes back. I remember there's this FT story on private credit, and they quoted someone from Apollo saying, we're becoming a bank and it sucks. I feel like that's also what this earnings kind of tilts its hat to.
Yeah, I mean, look, I think Apollo is often lumped in with other private credit or private capital providers, but actually the way that they originate their assets, I mean, due to the nature of Athene and other insurance providers that they own, is somewhat different, and actually it means that they have a lot more capacity to lend to more investment-grade portions of the sector, and I think. I mean, not knowing precisely where their lending records have come from, I would assume that a lot of it comes from these kind of large ticket private investment grades deals that they've been doing more and more.
So Apollo also announced a deal with Schroders. Not all American investors will know, but obviously legendary in London. Doing something that a lot of these big firms are getting into a business a lot of these big firms are trying to crack into, and that is, I guess, high net worth individual or family office wealth management. How do you think this is being received?
Yeah, look, I mean, I think it's somewhat of a classic partnership. I mean, there are several. Apollo has done others as well, like LNG and Blackstone and KKR and Capital Group. I mean, I guess the kind of general thought process behind it is that there are these big beasts like Schroders and LNG that have these networks of wealthy clients, but also pension relationships and things like that. And then there are these kind of great origination beasts. Like Apollo and KKR. And so that's kind of, I guess, the thought process behind it. I think with the Schroders one, it seems to be quite an expansive relationship. They have tie-ups on the public side and the public and private fixed income portions, which is kind of bigger than other tie-ups that have come out.
So it's one of the things that Mark Rohn, the CEO of Apollo, just said on the earnings call, saying our software exposure in PE and Athene is near zero. If that's true, and I'm assuming it is because he said it, is that kind of remarkable? I thought software was a pretty loved asset class by private capital across the board, and for Apollo to come out of the wreckage last week saying we have basically nothing, is that unusual, or is that common among their big publicly listed peers?
Well, so not having listened to the great Mark Rohn speak in his earnings thing yet, I think I would say no. I mean, we did a story last week about private capital software exposure, and I think Apollo had taken a view early on, kind of earlier than some peers, about a sort of bearishness around software, particularly due to the rapid adoption of AI. And so I think if my memory serves me right, it's in the story, they cut some of their exposure from 20% to about 10% last year, and I think some of their leading kind of players like John Zito have been quite public about their bearishness on software. I think they are. I mean, there are others that I think are more bearish, but I don't think that's a broadly held view across private capital.
Silas, great to catch up with you as usual. Hope you have a fantastic week. Silas Brown there covers private assets for us out of London. Coming up, Keith Lerner of Truist sees market leadership broadening in the U.S. and abroad. He joins us to talk about that next. This is Bloomberg Open Interest.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up to the minute news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Goldman's trading desk has warned that stocks face more selling this week from trend following algorithmic funds, or CTAs, writing in a note, quote, the inability to transfer risk quickly lends itself to a choppier intraday tape and delays stabilization in overall price action. Buckle up. Joining us now is Truist CIO and Chief Market Strategist Keith Lerner. Keith, great to see you this morning. This piece on the terminal has been remarkably well read because I think everybody is digging through, I don't know, wreckage is extreme, but digging through the volatility of last week that ended us down only 0.1% and thinking, is there more to come? How are you thinking about last week and what it means going forward?
Yeah, well, Danny, great to start the week with you guys. I think last week, if you zoom out beyond the headlines, it was a really interesting week because below the surface, we had a very strong market and a very cyclical tilted market, meaning look what we had by the end of last week. We had small caps, and I'm looking at the S&P 600 at a fresh 52-week high, mid caps at a fresh 52-week high, the equal weight index at a fresh 52-week high, the international markets at 52-week highs. So you have this transfer from tech into the broader market. And that was really the story last week beyond the headlines and the sell-off that we're seeing in software.
I wonder if you expect the sell-off to continue or if that was it, Keith, because it was crazy volatile, but it looks like a lot of investors have bought the dip and brought us back to levels where we were before.
Yeah, you know, I would say, Matt, the key I would look for this week is on tech. We went right to that 200-day moving average and bounced off of it last week. I think that's a positive sign. So listen, I think it will be maybe a choppy week, but I think the underlying trend still deserves the benefit of the doubt. And again, the way the stocks are acting, they are buying into this economic uptick, which is also our base case.
All right, Keith, you're going to stay with us, and after we get to the open, that's Keith Lerner of Truist with your opening bell less than 5 minutes away. You are looking at an equity market that is down after recovering. Friday was the S&P's strongest day in 8 months. It rallied nearly 2%. You give a little bit of that back this morning, down 0.25%. Kevin Hassett warning that the jobs numbers might not be that strong this week is bad news again. Tech underperforms, down 0.4%. Equal weight, that hit a new record on Friday. The Dow crossed 50,000 for the first time ever. So to Keith's point, there has been a broadening out. We'll talk more about that when we come back. And we'll be back with your open after this commercial break.
cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are moments away from the start of trading on this. It's a Monday morning, and typically, especially after the Super Bowl, you'd be kind of bleary-eyed and sleepy, maybe a little hungover. But wake up, because Sydney Sweeney is ringing the opening bell at the New York Stock Exchange, along with American Eagle. Everybody wearing their denim there. The star of what's the new movie she's in? The Housemaid or something like that.
Oh, yeah.
It's an awful movie, but I love Sydney Sweeney, and not because she's so beautiful. She's really into cars. I think she was on Jim Farley's podcast. She has a Mustang and a Bronco. And she works on them herself, so that's why she needs the denim. Anyway, good reason to be happy today. Also, American Eagle stock, by the way, it's up 60% in the last 12 months. So they have been crushing it for a retailer. Zebra Therapeutics, another company that's really been on the comeback trail. If you look at the 5-year chart, they're still down 5 or 6%. But over the last year, they've gained 10% back. Over the last 2 years, 40%. Over the last 3 years, 60%. So they're really coming back over at Zebra.
It's just hard to compete when the rival opening bell's got Sydney Sweeney at it.
That's true.
I kind of feel bad for
That's
Zebra
true.
this morning. Not a lot of
I'm
people
pretty
are looking
excited
at
for all the traders on the floor of the New York Stock Exchange.
Oh my God, I fear for Sydney Sweeney. I hope she makes it through unscathed. Matt, I'm looking at shares of Novo Nordisk and Hims and Hers this morning. The drama continues. Novo Nordisk said that it was suing Hims and Hers for making a knockoff of its obesity medicine. Hims said that they have scrapped plans to sell a copyright version of the Wegovy pill because the regulators also got involved. So Hims really struggling this morning. Novo gets a pop of about 5 1/3%, Matt.
We're watching shares of Kroger as well after the grocery store chain named ex-Walmart executive Greg Foran as its next CEO after nearly a year-long search. I know that he has plans to try and make the stores cleaner and, I guess, lower prices. It all seems pretty obvious, but that's what they're looking to do.
Friendly.
And
that was
and
like
more
he made them
friendly.
more friendly and
right.
nice.
I mean, as a boy from the great state of Ohio, where we used to frequent the Kroger,
right?
It seemed pretty clean and very friendly.
Yeah,
obviously.
but doesn't Walmart have mandated happy greeters that smile when you come in? I don't know if Kroger goes that far.
Yeah, no, I never saw any greeters at Kroger, but I haven't been there in a while.
Yeah, neither
right?
have I.
There aren't any around here.
Yeah, good point. Yeah. So
Maybe they should move back to New York. Truist CIO and Chief Market Strategist Keith Lerner is back with us here. And Keith, we haven't mentioned much that the Dow Jones Industrial Average went over 50,000 on Friday. When I was a kid, that would have been like headline news, Wall Street Journal, front page. Does it not really matter that much anymore?
It still matters, but I think in some ways, kind of where we started our conversation, like the move up, this kind of broadening trade that we're seeing domestically and globally, has got lost somewhat because we're seeing like the S&P 500, which has such a concentration in tech, be relatively flat, where underneath the surface, you're seeing some really, good action for the overall market. So it still matters, but maybe a little bit less than when you and I were a bit younger and I had some black hair.
And I had hair at all.
I'm sure someone still out there has made a 50K Dow hat that everyone's prancing around wearing. Keith, away from the company news, the macro news has not been great. The jobs data we got last week was pretty lousy. We're going to get another jobs figure delayed on Wednesday. And Kevin Hassett of the NEC is out saying expect a jobs number that might disappoint. If we do continue to get jobs data that disappoints, is this an equity market that's going to sell off alongside a rally in bonds?
Yeah, well, I think initially, Danny, the way I'm thinking about it is the jobs data at this point is somewhat lagging. We know we have this kind of fiscal punch coming through or stimulus in this first quarter. And the market is clearly saying that it believes, look at transports making a fresh high along with the Dow Jones as well. So, I guess that is the risk. If you really start to see more of a meaningful slowdown in the economy and this perceived disconnect between GDP growth and labor really further expand. But I would say our base case is that we actually will start to see some stabilization in the labor side. And also, we are seeing some productivity gains as well. So I think that comes into the equation, the immigration, the AI stuff. So I think the jobs market by itself is just it's more nuanced today, and the market is clearly sending a signal of economic growth.
Well, it seems like it matters less and less, like the Dow, maybe. We had a great conversation with Rick Reeder about this on Friday, and he pointed out, like the people that are at risk in the jobs market just aren't as important to GDP growth. As you're mentioning as well, Keith, right? Because we've got high net worth individuals doing all the spending, the giant, hyperscalers doing all the capex. The government is pouring stimulus into this economy. So even if we get larger unemployment, it's not going to mean a slowdown in GDP. And frankly, the interest rate tool isn't as effective. How important is the Fed for this market?
In the near term, I don't think it's the main driver. I think corporate profits are the main driver. That's the North Star of this bull market that we've been speaking about over the last year. And what we're seeing is forward earning estimates for the S&P are at a record high. But what's important is we're seeing that broaden to small caps and mid caps. We're seeing strength there, but we're also seeing that international emerging markets just had a strong uptick. And Matt, maybe one comment on the job market as well. I know a lot of times we focus a lot on how much job growth there is from month to month. What's really important in our view is we have about 160 million people working in this country. And what's really key for the economy to move forward is that wage growth stays above inflation. And right now, that's still what we're seeing.
Keith, one of the more cyclical parts of this market that's had a really good run has been regional banks. They gained every single day last week, which in itself was a feat considering what the rest of the market did. It's now trading at a record high. There's consolidation, there's M&A. Would you be adding to this sector?
We're more neutral to the overall financial sector. And as you mentioned, some of these areas have had a big move in a short period of time. So I think we would be more likely looking at pullbacks as opposed to aggressively adding here. But I will say that it does fit into this global trade, also a steepening of the yield curve and the M&A that you mentioned. These are all things that typically would bode well for the regional banks. And that's why you're seeing that strong price action also.
In terms of, the big movers, the gold, the Bitcoin, I guess software ETFs, is there anything, Keith, that you think hasn't recovered yet that the market's overlooking, maybe we should buy?
Yeah, well, on gold, we actually downgraded gold last Thursday morning near the highs. And we think there's going to be some time element with gold after being about 40% above its 200-day moving average. So that's going to take some more time. We still think structural drivers are there. On the software side, Matt, I think it's going to be one of the things where almost like gold, but the other side where the rubber band keeps getting stretched, and you'll have a snapback. I don't think it's going to be leadership because it's something that's hard to disprove, even though the earning trends are relatively well. It's just getting a bit overdone. So at this point, I will say more broadly on tech, even though we have burned out our sector exposure, I would not give up on tech. Tech's multiple has moved down from about a 32 to about a 23 multiple. So a pretty sharp reset on fears in general, where the earning trends are still the strongest in the market. So I would say broadening, but don't forget about tech. I think there will be a point later this year where tech comes back in vogue.
Keith, I just wonder if something about last week, almost ending where we started, to be honest, is instructive, not necessarily in terms of the fundamentals of software or what's happening in the jobs market, but between correlations in this market. When you get volatility in things like gold and silver, and to Matt's point, what Bitcoin did, you add that in, and then its impact on equity markets. Does it show some sort of underlying sensitivity in this equity market that itself might cause more volatility?
Yeah, no doubt. I mean, some of these areas which they have different, you think profit trends are not even, earnings related, are looking the same. If you overlay a chart of software and Bitcoin, it looks like the same chart. So yes, I just think, and I think that's we're gonna kind of see this concentration of moves that kind of seem like, why are they moving together? But there's also some leverage plays, and we also know, even like on Reddit, we know that silver and gold were two of the hottest trending tickers, which 6 months ago that would have been crypto. So I do think that's a change in the market dynamic where things that seem uncorrelated become very correlated. But I would keep my eyes on those underlying earnings, which over time I think will be reflected in stock prices.
Keith, thank you so much for joining us this morning. It's great to kick off the week with you. That's Keith Lerner of Truist. Let's get a check on your equity market right now, almost 10 minutes into your trading day, and we are flat to slightly down. The breath isn't great. We're down 316 stocks are down for nearly 200 being up. To the upside, you have some of the big tech names. NVIDIA is doing well, Microsoft, Eli Lilly after a new deal to buy a biopharmaceutical company, Oracle. That's seeing its biggest intraday gain since December. Shares are up 8.5%. Not totally sure what's going on there. It did get a sell-side upgrade, so maybe that's helping to drive it. On the downside, you do have Apple. We were just talking with Caroline Hyde earlier in the show about how they're going to be debuting one of their new cheaper phones. Amazon, that continues to fall after announcing a huge amount of spend in their earnings last week. Shares down 2.4%. Micron, Intel. So not a great day for the chip makers. And you will see some of the damage, even though the chip makers aren't doing well. Infotech is still at the top of the pile because of that NVIDIA move. Energy, that also picks up, but most of these sectors are down this morning. Consumer discretionary, Amazon lives in this category, so that's why it's down 1.3%. GM is down a lot today. It's actually the worst performing consumer discretionary stock. I'm not totally sure why that is either, but utilities, real estate, staples also not doing well. So some of those safety sectors not providing a lot of safety this morning, Matt.
I'm looking at, by the way, at Oracle. I mean, it's come down by so much.
True.
Since it reached a high, like in September of last year, it's down still more than 50%. So any buy here is not going to get you back to where it was. Coming up, Novo Nordisk. Speaking of stocks that have come down drastically and are now on the move higher, fires back, suing hims and hers over obesity drug copycats. We'll explore what it means for patients next. This is Bloomberg Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries.
This is the money shaping the world. The Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
I'm Danny Berger, and this is Bloomberg Deals.
Every week, only on Bloomberg Television.
After the best day for the S&P of this year on Friday, we try to continue those gains. We're now unchanged on the S&P 500. NASDAQ falls 0.1%. Let's get you some top calls, the analyst action that we are watching this morning. First up, D.A. Davidson, they upgrade Oracle to buy, saying that OpenAI is likely to exceed investor expectations, and that's going to directly benefit Oracle. Oracle, a huge rally, maybe off the back of that, up 9 1/3%. Very jumpy market where small things seem to be moving equities a lot. Next up, Wolf Research, they upgrade Robinhood, saying that the app will see upside from the growth of prediction markets. The analysts say the stock looks more attractive after recent pullbacks, even with weaker crypto trading. Those shares up 4.4%. Next up, Roth Capital, they upgrade Roblox to a buy after its latest earnings. The analysts there say that they have a positive view of the business based on stronger than expected bookings guidance. Shares, Matt, up 8.7% this morning.
All right, so big gain there for Roblox. Novo Nordisk also looking at a big gain. It is suing Hims and Hers, accusing the telehealth firm of infringing its U.S. patent on the key ingredient in Ozempic and Wegovy. Meanwhile, Eli Lilly agreed to buy Orna Therapeutics for up to $2.4 billion in cash as the company expands its pipeline beyond its blockbuster obesity drug Zepbound. Joining us now is Bloomberg Health reporter Madison Mueller. So, Madison, a lot going on for you on this Monday morning. Let's talk first about Hims and Hers. I guess you could have seen this coming. Why were they so bold in making that move to begin with?
I mean, they were so bold because really up to this point, they've been able to get away with this. I mean, Hims has been selling compounded versions of Novo's weight loss drugs for the last 2 years, really without any repercussions. I mean, Novo, Lilly, they've spoken out about this compounding issue, but as for the FDA and U.S. regulators, they really haven't done much to crack down on this sort of copycat gray market. And so this was the bet that they've taken, that would just continue, that regulators wouldn't do anything about it, that Novo wouldn't take steps to sue them. And then we've sort of seen it all crashing down in the last week as a result.
What degree is it just crashing down for Hims and Hers versus the entire compounding pharmacy market? Because there's still a lot out there. Exactly. I mean, I don't know if theirs are compounding or not, but like Ro, for example, having Super Bowl ads, I'd assume some of their stuff is compounding pharmaceutical medicals.
They did do compounding at first, and then they pulled back on it. They sort of saw where this was headed, I think, a little bit earlier than Hims. And so Ro has been able to work with both Lilly and Novo to offer discounted versions of the brand name drugs on their platform. So they have a better relationship with them. But there are still, you're exactly right, there are still compounding pharmacies, there are still other telehealth companies, there are still med spas that are selling these compounded products. And it's been really hard for the FDA, or maybe they just haven't prioritized this quite enough because they have a lot of other things going on, that they really haven't done much to stop this market from proliferating.
I always look at a 5-year chart of stocks on the Bloomberg terminal, just because the comp function defaults to that. And I think it's a fair window to look at performance. Novo Nordisk has underperformed Eli Lilly by 413%. And that's really only started in the middle of 2024. Is there any way that they come back and catch up, or is Eli Lilly's tirzepatide, their Zepbound, really that much better than Wegovy or Ozempic?
It is better. I mean, the drug is better, plain and simple, and
better
that has
in terms
been a
of
huge advantage.
Losing more weight.
Yes, more effective, also potentially less side effects. So a lot of times if people are having a lot of side effects on Wegovy, their doctor will switch them to Zepbound. At the same time, Lilly has a deeper pipeline than Novo. So in terms of next generation therapies, they're ahead there too. Novo was really pinning its comeback hopes on this pill that Hims launched a copycat version of, a couple weeks after launch, and that's why it was such a big deal. Because Lilly has a pill that's coming in a couple of months, but Novo's had quite a bit of a head start. A few months head start makes a big difference. And so that is really important for them, and staying ahead in this pill market is going to be important, but we don't know if they'll be able to catch up.
By the way, as you know, I think like the pill doesn't make much sense. If you can do the shot only once a week, why would you want to take the pill every single day? And I struggle to use the term shot because it's not like a painful, it's not like a needle, right? Where the compounding pharmacies, you have to stick yourself with a syringe. This is, easy. I know that there are other companies working on drugs that last even longer, so you would only have to take it once every quarter.
Yeah.
How far away are we from that?
Yeah, we have a couple of different companies, Pfizer and Amgen, that are working on less frequent dosing. The interesting thing is that it sort of comes down to patient preference. I mean, when it comes to the pills, some people just don't like injections, which, like you said, it doesn't really, it's not a full like shot, like a vaccine that you're getting. It's different, it's a smaller needle, you don't really see it. But some people just prefer pills. Some people prefer less frequent dosing, but some people don't, because then you're maybe not as conscious about it. So that's something we've seen with diabetes, that people actually prefer maybe more frequent dosing, because then they're thinking about it, they're monitoring it, they're also thinking about what they're putting in their body, exercise, other things that go along with it. So it sort of just comes down to patient and doctor preference. But drug makers are sort of betting on the idea that having more options is not a bad thing, and having all of these different options in the market at the end of the day is going to benefit patients.
Never a dull moment in this space.
Exactly.
Madison, thank you so much for joining us. That's Bloomberg's Madison Moeller. Coming up, Kroger taps a former Wall Street executive to lead the grocer. That's coming up next. This is Bloomberg Open Interest.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherry-Ann in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on stocks right now, about 20 5 minutes into the session. You're going to see a lot of red here, but it's not so bad, right? S&P 500 down, but only 0.1% of 1%, 69.24, the level there. The NASDAQ also down by just about as much, still over 25,000 on the NASDAQ. You see the small caps falling further in Bitcoin, back down to under 70,000, so $69,345 a share. Take a look at NVIDIA right now up 3.5%, so that's holding us back from steeper losses. Oracle, as we've been talking about, up almost 10%, a 9% gain here on Oracle after an analyst upgrade. And of course, it had such a successful week last week. Hims and Hers is down. It's lost a quarter of its value now that it won't be able to, or now that it's pulled the pill version of its copycat Wegovy drug. Novo Nordisk bouncing back about 6%. You can see Apollo right now up 3% on earnings and a couple of announcements, one of which is with a team up, a partnership with Schroders, and then Kroger, which we're going to talk about right now, up 7% and change, Danny, on a new CEO.
So that new CEO, it's a retail veteran named Greg Foran. Let's discuss it because he comes from Walmart, and clearly the reaction is positive. Emily Cohn, she leads Bloomberg consumer coverage, joins us now. Emily, what do we know about Greg, and why would this be such a positive thing for Kroger?
Thanks, Annie. Yeah, Greg was once called the greatest retailer on the planet by Walmart's former CEO, Doug McMillon. He's known as an operator. He's known as someone who really gets grocery and retail. He is the person who was in charge of Walmart US during the mid-2010s when Walmart's really started to prioritize making the stores feel cleaner and friendlier, and the groceries got better. A lot of the things that Walmart is really benefiting from right now, as we see a lot of growth there, especially from higher income households who are shopping at Walmart.
Can he really do this at Kroger? Because Walmart is a different kind of store, right? I mean, we were talking today about the fact that Kroger is apparently the biggest grocery chain in America. And I thought, well, Walmart's bigger. And someone said, but that's not the same thing.
That was me.
Okay, there
Yeah,
you go.
I think you nailed it. When you think of Walmart, it's Walmart. Of course, they have their e-commerce business and their stores, but everything's Walmart. Kroger is a chain of many chains.
At Walmart, you can get a bicycle, you know, a bow and arrow.
Kroger owns Ralph's. They own a lot of different grocery chains across the country. I think running, you know, an umbrella of many businesses is probably a lot different than running one chain where everyone knows what Walmart is. It'll be interesting to see what he does.
Is there any outlook for more consolidation in this space post all the Albertson kerfuffle with new administration? Maybe easier to get some of that through? Right. Are we expecting anything?
Right. It's a good question. We know that Kroger was trying to do that with its acquisition of Albertsons. Obviously, that didn't work, and then they lost their CEO. But it does. You raise a good point. It does sort of indicate what this chain might be looking to do. I don't know what their plans are.
By the way, Kroger. You know, I grew up near Kroger because I'm from Columbus, Ohio, thankfully. But then I had to move here for work. And there's no Kroger here. I noticed there's also no Walmart. Is there something about New York City that these successful national chains just want to avoid?
It's true. I mean, I think both Kroger and Walmart really rely on large retail footprints, which is just nearly impossible here. The labor environment here in New York City is, of course, very different. But what you do see now, and I see it more and more, is that the doorsteps in my apartment building in New York City, you see Walmart delivery boxes. People can get Walmart deliveries as fast as they can get them from Amazon, and that's Walmart's new frontier. So maybe they don't need a big box in New York City, but they can deliver.
Right on. All right, Emily Cohn covers retail for us on the BN side. Coming up in the next hour, Kelly Coveley of Manning & Napier on risks to the labor market, and Edgewell CEO Rod Little following his company's latest earnings report.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Is CBS News on the Hour, your home for original reporting.
I'm Deborah Rodriguez. The Jeffrey Epstein scandal is front and center today on both sides of the Atlantic. First, to the UK. King Charles heckled at an appearance after British police announced they were examining claims the former Prince Andrew sent confidential trade reports to the convicted sex offender. The BBC's Nick Johnson.
Just ahead of Prince William's official visit to Saudi Arabia, the Kensington Palace spokesperson released a statement saying, "I can confirm the Prince and Princess have been deeply concerned by the continuing revelations. Their thoughts remain focused on the victims."
Now to Washington, where imprisoned Epstein associate Ghislaine Maxwell is expected to plead the Fifth when she appears virtually before lawmakers investigating the Epstein case. Some will be getting a closer look at the records today. Correspondent Scott McFarlane.
Under the law that required the Department of Justice to release Epstein case files, members of Congress can go into the Department of Justice headquarters to view the entirety of the records, including the millions of pages that were not publicly released and those that have been redacted. We know at least one U.S. House member, the ranking member of the House Judiciary Committee, says he'll be there when the doors open today.
That's Maryland Democrat Jamie Raskin. Prayers for Nancy Guthrie more than a week after she was kidnapped.
We pray for Nancy's rescue. We pray for her release. We pray that she would be brought safely home.
The Reverend John Tittle during Sunday services at Guthrie's church in Tucson. With a second ransom deadline coming up later today, investigators need all the help they can get. Correspondent Jonathan Vigliotti is in Tucson.
Billboards have been popping up in neighboring states with Nancy Guthrie's details and a phone number for the FBI. The FBI continues to call on the public for their help, 520-882-7463.
There won't be much learning going on today for some kids in Northern California.
Teachers in San Francisco are on strike for the first time in nearly half a century, closing public schools for about 50,000 students. Cassandra Curiel is president of the San Francisco Teachers Union.
What they've proposed has concessions and takebacks, which means that our students in our schools would receive cuts if we were to agree to what the district said.
The last teacher strike in San Francisco in 1979 lasted for nearly 7 weeks, making it one of the longest in state history. Jim Crisula, CBS News.
A day after his Super Bowl halftime performance on NBC,
God bless America!
Bad Bunny occupies the top 5 spots on the U.S. Spotify chart. Dow down 172 in early trading. This is CBS News. A new survey finds hiring is getting harder.
A national survey by staffing firm Robert Half of more than 2,000 hiring managers reveals the issues impacting hiring plans for the first half of this year.
Businesses are entering 2026 with widening skills gaps and more complex hiring conditions.
Robert Half's Paul Flaherty.
While business confidence remains strong, many companies are struggling to execute their strategies. They simply don't have the right capabilities in place.
AI is making assessing job skills more difficult. Stephen Kaufman, CBS News.
A 106-year-old outdoor sportswear pioneer filed for bankruptcy this morning. It marks the third time in a little more than 2 decades Eddie Bauer has filed for Chapter 11 protection. The company says it'll conduct a liquidation sale at its 180 stores in the U.S. and Canada. Deborah Rodriguez, CBS.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube. Head over to youtube.com and search Bloomberg Podcast. That's where you find us. We are also streaming on Bloomberg.com/videos. That's where all the Bloomberg Live video, radio, and TV is, as well as all the curated videos. So go check it out there. Coming up, we're going to check in with Brian Egger. He covers all the gaming industry for Bloomberg Intelligence, get his thoughts on how the big Super Bowl weekend went over in the world of gaming. Phil Orlando, Chief Equity Market Strategist at Federated Hermes. He's going to join us, give us his thoughts on these markets. Scott Levine, Bloomberg Intelligence Senior Energy Services Analyst on Transocean's agreement to buy Valaris in a stock deal valued about $5.8 billion. So a big deal there in the energy space. Kevin Krim, CEO of EDO, to discuss best performing ads and key takeaways from the Super Bowl. Sam Fazeli is going to join us, give us the latest on what's going on in the world of healthcare. So a lot going on there with some of these obesity drug makers and some of the legal issues going over that industry about some companies like Hims and Hers and that kind of stuff. So a lot going on in that space. We'll break it down with Sam Fazeli. Let's go to John Tucker for a Bloomberg Business Flash and get this thing going.
All right, guys, this Bloomberg Business Flash being brought to you by IBKR. Will the U.S. Consumer Confidence Index be above 101 in March 2026? Turn your view into a trade at ibkr.com/forecast. The last trading day is March 22nd. Stocks makes a little change ahead of a heavy week of economic data. So Wednesday, we're going to get the delayed jobs report, and then Friday, we get the inflation data. After 50,000 Friday, Dow Jones Industrial Average 122 points lower right now. That's down 0.25%. 49,988. S&P 500 8 points higher. That's up 0.1%. 6940 on the index. The tech-heavy Nasdaq 40 points higher. That's up about 0.2%. You have 9 of the 11 major industry groups in the S&P 500 actually lower right now. The big drag, consumer discretionary and technology, is in the lead. Some of the individual names on the move right now. Eli Lilly is buying closely held U.S. biotech Orna Therapeutics. The price tag there only $2.4 billion in cash, but it's the second deal in as many days. The company expanding its pipeline beyond its well-known blockbuster obesity drug Zepbound. Kroger plans to name Greg Foran as the supermarket chain's next chief executive officer. This, according to our sources, the nation's largest grocer looking to carve a new path after a failed mega deal and an unexpected exit of its former boss. Kroger shares right now 7.5% higher. And how's this for a fat thumb? South Korean crypto exchange Bythumb mistakenly distributed more. This is a mistake now. Distributed more than $40 billion worth of Bitcoin on Friday. They say they're going to reimburse customers who made losses when they sold their holdings in a panic during a brief but sharp sell-off on the platform. They had intended to award $424 to winners of the promotion. Wow. An employee keyed in a Bitcoin instead of the Korean currency. So, yeah, do they still have their job?
XBT versus BT
yeah,
KRW?
It happens. So
it's like a multi-fat finger.
They did identify the mistake within 20 minutes. Hey! Could you imagine? Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash.
Cancel button. Cancel.
Nah, too late. Paul and Scarlett.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio in New York City, streaming live on YouTube and on Bloomberg.com/videos. As John's just reporting, got red and green on the screen here. Let's see what stocks are on the move today. We can do that with Bloomberg's Alexander Semenova. Alex, what are you looking at today?
Hey guys, so we've been talking a lot about how companies are financing the big AI boom, especially given they're spending so much money on investing in this technology. We have some big news out of Alphabet today. It is looking to raise about $15 billion from a U.S. high-grade dollar bond sale. This is according to sources. This builds on a borrowing spree by companies that are at the center of the artificial intelligence investment boom. They've been spending a lot on cloud computing, data, chips, all these companies that we call hyperscalers. They're expected to spend more than $650 billion this year just to expand that infrastructure. And since last year, the group has been flooding the market with debt. So far, investors have been eagerly absorbing it, but it does raise concern that we are kind of getting into bubble territory. Just last week, Oracle also raised $25 billion from a bond that attracted a record $129 billion of its orders. And part of this issuance by Alphabet, it actually also plans to sell a very rare 100-year bond as part of this mega debt issue. This is the first such sale since the late 1990s. So there's a superlative for you.
Thank you. Lots of debt coming up from these big tech names. All right, what's next?
Yeah, another company that I'm looking at today is Hims and Hers. Those shares are down 27% right now. This is after Novo Nordisk said that it's suing the company for making knockoffs of its obesity medicines. This is even as Hims and Hers scrapped plans to sell their copycat version. Novo on Monday said that they are breaching their U.S. patent on semaglutide, which is the key ingredient in these anti-obesity drugs. And Novo Nordisk has been kind of cracking down on copycats, given the fact that it has had such a tough time with competition. It's really erased a lot of that big performance that it had when it first came out with the drug.
Tegna, which is the former TV station group owned by Gannett, which at one time was the largest newspaper operation in the country, What's going on with Tegna?
Yeah, those shares are up nearly 9%. This is after President Trump backed a proposed acquisition of the firm by the television broadcaster Nexstar Media Group. So a bit of a merger Monday going on here. Nexstar is also trading higher as well. Trump expressed his support for the deal in a post on Truth Social. So a lot of enthusiasm around this, given the support for the acquisition.
All right, good stuff. Thank you so much, Alexandra Semenova, with our Stock Movers Reports. And for more conversations like this, be sure to subscribe to our Stock Movers Reports, where you can listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, yesterday's Super Bowl game. I don't know if you're tired or not. If you watched the whole game,
Watched
did you?
it. Watched it. Yep.
It was kind of boring.
Yeah, I don't know. It was defensive play.
Yeah,
a lot of
boring.
scoring in the second half.
Okay. Well, I missed the second half because I was so bored by the first half. I did watch some of the commercials.
All right.
Yeah. Brian Egger, it was his job to make sure that he saw the whole game and to also analyze, what it means for the different companies. He is our senior gaming and lodging analyst. So, Brian, what was your big takeaway from the big game?
I think from a sportsbook perspective, it was probably mixed. The fact that a heavily favored team won, covered the point spread, on balance, that's not great for sportsbooks because the public generally bets heavily on the favored. The good news, I guess, from a sportsbook perspective is the game total point total 42 was below the over-under, which was low to begin with. I think the public, as I understand it, generally bet more heavily in the over. So those over bets didn't pay out. So in that sense, that was a benefit. And as you mentioned, a low-scoring game. I think there were 3 touchdowns all in the fourth quarter. Mm-hmm. So proposition bets that would have been linked to someone scoring a touchdown, generally speaking, not many would have paid off because there just weren't that many touchdowns. So that's the other, I guess, benefit to a sports book of a low-scoring game. So there was some mix, puts and takes.
How do the DraftKings of the world, how do they just give us a sense of the magnitude that's wagered on those sites on a big event like the Super Bowl?
Yeah, we don't have specific numbers on the Super Bowl specifically. We do get state numbers, but anecdotally, I mean, the Super Bowl and March Madness, which of course is spread over weeks.
Yep.
Those tend to be the 2 biggest overall wagering events in terms of volume wagered.
Okay, so there's DraftKings, there's FanDuel, and now there's also prediction markets, and those are operating everywhere.
Yeah.
What kind of numbers do we have from that, or at least what are they telling us?
Yeah, we spent a lot of time thinking about prediction markets, and it's a big legal point of contention because the states and the regulators and certainly the sportsbooks argue this is not
Gambling.
Non-sanctioned gambling. I think our take is that particularly in non-betting states where you don't have legal sports betting, California, Texas, the most populous, that's an obvious place where a Kalshi would make an incursion because right now there's no other option to speculate on a game outcome. The real thing we don't know about is what happens in betting states. We do see that the download activity of Kalshi and these prediction apps was quite high, higher than the sports books. On the other hand, the average daily use was higher for the sportsbook apps who have more cumulative downloads. So, with data we have provides kind of a mixed picture.
How many states now have the sportsbooks apps? Where are they legal?
Yeah, so like the mobile legalized sports betting is about 32, 33, something in the low to mid 30s, yeah.
And the other states, they've said we're not going to do it?
So, I mean, there's, of the states you mentioned that I guess you argue are holdouts, maybe there's 19 some odd states. The big opportunity from a money perspective is Texas, California, just based on population. There was a referendum that failed in California. Texas has to go through a multi-year process to get it done. One of our theses has been that with prediction markets effectively operating there anyway, it may be an impetus for those states to turn around and legalize sports betting.
Are Super Bowl boxes legal?
I don't know, because I did a bunch of them.
Brian, do we know?
Super Bowl boxes,
Yeah.
Just like at the Summit Elks, I did the box thing.
Yeah, I
filled in a box.
You obviously hear about boxes more, I guess, for March Madness, but
yes,
yeah, I'm.
I don't know.
Or
we won't tell anybody.
Yeah.
Yeah. Well, I mean, a lot of different, like my kids' youth hockey league, for instance, used to use it as a fundraiser.
Yep.
Right. Like whatever money you collect, half of it goes to the league, and then the rest of it gets distributed.
Well, that makes sense.
All right. So, Brian, stepping back here, 2026. What's the gaming call here? Is it going to be a good year for the casinos?
So I think Vegas, starting with Vegas, on a bit of a comeback from a very difficult second half last year. Vegas kind of slowed down. The low end of that market is somewhat weaker. people are more value conscious. Seems to have done a little bit better in the fourth quarter, going into the first quarter, first half. Regional markets are pretty stable.
Yep.
So it kind of varies. Macau has been kind of also coming back, particularly in terms of the mass business. Vegas went through a lot of turbulence in the second half of last year. It seems to be better positioned for this year.
All right, Brian, thanks so much. Appreciate it. Brian Egger, Senior Gaming and Lodging Analyst for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. Coming up, we're going to check on Phil Orlando, Chief Equity Market Strategist at Federated Hermes, get his thoughts on these markets. And Scott Levine, Bloomberg Intelligence Senior Energy Services Analyst, talk about an M&A trade there, Transocean to buy Valaris in a stock deal valued at $5.8 billion. So merger Monday. We got some deals hitting the tape here. Red and green on the screen here. The S&P's up 12 points. The Dow's down 79 points. The Nasdaq's up 98 points, or 0.4%. 10-year Treasury yielding around 4.21%. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg newsroom with this Bloomberg Business Flash. Right now, the major averages, I'm going to say they're mixed to little change. How about that? After 50,000 on Friday, we're above 50,000 on the Dow Jones Industrial Average. Still 33 points lower, so it's 50,078 on the Dow. S&P 500, 14 points higher. That's up 0.2%, 69.46 on the index. The NASDAQ Composite Index up 104 points. That's a rise of 0.5% right now. One of the stocks that's really taken on the chin today, Hims and Hers Health, that's down 24%. So Novo Nordisk says it's suing the telehealth company for making knockoffs of its obesity medicines, even as Hims did scrap plans to sell a copycat Wegovy pill. Eli Lilly looking to expand its drug pipeline beyond its blockbuster obesity drug Zepbound. So the company set its sights on a Massachusetts-based biotech. Lilly buying Orna Therapeutics for up to $2.4 billion. Orna is developing a new class of treatments. It allows the patient's own body to generate cell therapies that can treat underlying disease. A lot of excitement on the New York Stock Exchange this morning. Sydney Sweeney rang the opening bell for American Eagle. She's the brand ambassador for the retailer. And I have to turn to Celebrity Lodestone, Scarlet Food, to tell me who in God's name Sydney Sweeney is.
Oh, come on, John Tucker. You don't watch Euphoria? You didn't watch White Lotus?
No.
The answer is no to both.
Both of those people.
Sorry. But I did see that YouTube video on, the new math.
The new math?
Extrapolating things and, calculus. And
Yeah, maybe Sydney Sweeney makes an appearance on that video. I'm not sure.
No, I'm kind of a geekazoid. But that's why I have you here to
That's
explain who these people are.
Yeah, no, she's a big star.
Okay.
She is also, I think, she's been making the rounds on the awards circuit, but I don't think she got nominated, if I recall correctly.
Okay.
So, but she will one day.
A lot of
soon.
excitement this morning.
Absolutely. I can imagine. All right, let's take a look at these markets right now. Thank you, John Tucker. We have the Dow Industrials little change. I bring that up, Paul, because not so long ago, in fact, Friday, it made a record high, and it's still holding above 50,000.
My first day on Wall Street, June 16th, 1986, Dow was 1,850. Now it's 50,000.
Well, there you go. So let's bring in Phil Orlando. He is the Chief Equity Market Strategist and Head of Client Portfolio Management. And Phil, you write about how we've seen this solid January to start the new year, in part because of this broadening of the rally beyond the Mag 7 to small caps, to value stocks. The Dow, for instance, now at this record high, holding above 50,000, even as it struggles to add to those gains today. However, you also point out that this might be the calm before the storm. Why do you say that?
Good morning, Scarlett. First of all, thank you very much for having me back. So we've got a very constructive longer-term view on stocks. We've had positive years 3 years in a row. We think this will be the fourth year in a row, and we think the S&P 500 will be up at 7,800 by the end of this year, which would be roughly a 15% total return, give or take. But this year, 2026, will be very interesting for two reasons. Number one, there's going to be a leadership transition at the Federal Reserve. And number two, it is a midterm election year. And if you go back and study the market over the last 90 years or so, those two events have only come together in the same year a half a dozen times. This year will be the seventh time. And that created a lot of uncertainty and chop and volatility over the course of the year. Now, the market ended up getting its sea legs and rallying to new highs. Ultimately, fundamentals are what drive share prices higher or lower. And we think the year is going to end up fine. But we do think there could be a couple of air pockets here in the middle of the year, and investors need to be cognizant of that.
Earnings, we're about 60% of the way through the S&P 500 reporting earnings here. Phil, what's your takeaway, and what do you think this market needs to see from an earnings perspective this year?
You're quite right. We're almost two-thirds of the way through the earnings season. Revenues are up about 9% year over year. Earnings are up about 14% year over year. Those are solid numbers. The numbers are going to move higher over the course of the year. The numbers over the next couple of years are going to move higher yet still. We monitor the our own numbers and the consensus expectations, and the corporate earnings season is pretty good. Ultimately, earnings are going to reflect economic growth our GDP forecast here at Federated for calendar 26 is 3.3%. The blue chip consensus is only at 2.1%. So we're very optimistic about the consumer and corporate CapEx, an improvement in the housing market, less drag from trade. And for all those reasons, we think the economy is going to grow stronger, and ultimately that's going to reflect in better corporate earnings.
But are comps going to get more difficult in the meantime, because the economy has been holding up fairly well, and we know that consumers at least are being more discerning when it comes to their purchases?
No question. And the comps are going to get more difficult with the growth in the technology names that have largely been driving the market over the last 3 years or so. The areas that we like, this broadening out trade, small caps, value stocks, international stocks, those year-on-year comps were relatively much easier. So one of the reasons those stocks have been rallying in the back half of last year and the first part of this year is that they're giving us some good numbers, but the comps are relatively easy. We're seeing the Mag 7 names, the growth and technology names, struggle. Those stocks have done really, really well. The comps are tougher at a time when the revenue growth and the earnings growth of those companies are starting to decelerate. So the market is acting rationally in our view.
Phil, I'm looking at U.S. versus non-U.S. here. Boy, a lot of the non-U.S. markets really outperformed the U.S. last year and starting off this year. How do you think about U.S. versus rest of the world here?
Well, we've got an overweight in international, and within international, we think emerging markets the most attractive area. The dollar weakness, was certainly one of the reasons that was stronger last year. With the reason for that outperformance, that's a trend that we think is going to continue this year in terms of central bank policy, lower interest rates, et cetera. And to a significant degree, the way we've got our asset allocation recommendations set up, we continue to think that international and emerging markets are going to do really well.
All right, Phil, thanks so much. Appreciate it. As always, Phil Orlando, he's Chief Equity Market Strategist at Federated Hermes, joining us here on these markets, remains bullish here looking forward. It's Monday, which means we often get a lot of M&A activity, and we certainly did today in the energy space. Transocean, you remember them from the BP thing, Transocean to buy Valaris in a stock deal valued at $5.8 billion. Scott Levine joins us here. He covers the energy space for Bloomberg Intelligence. Scott, who's Transocean, who's Valaris, and why are they getting together here?
Yeah, so two of the bigger names in offshore drilling. Transocean has the largest backlog. Valaris has the largest fleet. Valaris's name may not be that familiar to a lot of folks here. It was actually a combination of two companies called Ensco and Rowan a few years ago. But they are two of the biggest offshore drillers. And I think that this deal really has both offensive and defensive motivations. Offshore drilling is in a little bit of a recovery mode, really kind of has been. Most of the drillers went bankrupt, actually, during the 2020-21 downturn. Transocean was really one of the only companies that did not go bankrupt. Valaris did. And so Transocean's kind of been saddled with all this debt as a result of not having their balance sheet wiped during a bankruptcy. And so that's been a limiting factor on their growth for quite some time. And this deal, which is an all-stock deal, will accelerate their deleveraging process and remove some of that burden from them and better enable them to capitalize on an upturn in offshore drilling. And the second thing that's important to note here is that it brings a jackup fleet. So a jackup fleet, jackups are basically shallow water rigs, okay, as opposed to the deep water drill ships or floaters. Mm-hmm. And Transocean had exclusively been a floater fleet. Jackups are more to the seabed. The seabed's lower in shallow water, and Valaris is one of the biggest players there. And so this gives Transocean exposure to the jackup or shallow water market, which has really undergone an interesting phase in that it was a bit of a downturn the last couple of years. The biggest jackup driller is Saudi Aramco. Mm-hmm. And a couple of years ago, Saudi Aramco made significant cuts to their drilling program. They essentially, Saudi Arabia abandoned plans to increase their oil production capacity to 13 million barrels a day. And what we've seen since then is a lot of jackup rigs being laid off effectively in 2024 and 2025.
Right.
Indications suggest those rigs will return this year, so that market is bottomed and maybe on the cusp of an upswing. So this deal will give Transocean the ability to participate in that recovery.
So in terms of why now, when it comes to the timing of this deal, the CEO of Transocean cited a multi-year drilling upcycle. Where are we in that cycle? Are we, first inning? Are we third inning?
It's kind of been an interesting upcycle. So we saw an inflection in 22 and 23, and 24 and 25, we've seen kind of a plateau to a slight pullback. Now, I do believe we're in a recovery and have been, and this has kind of been more of a mid-cycle pause associated rather than a downturn in offshore drilling. So I do think the recovery is intact, but I think the cadence has certainly slowed and in fact deteriorated. And offshore drillers like energy service companies have been off to the races this year. I think the oil price has held in better than expected. Some of that is due to some of the tensions in the Middle East, Iran, etc., Venezuela as well. So the punchline really is that we're still in, I think, a mid-cycle pause until maybe the second half of this year. And in terms of what inning we're in, I think we're probably like third, fourth inning, but it's been in kind of an unconventional recovery.
Will the regulators allow these two companies to get together?
Yeah, I think so, and it's a good question. These are the two of the largest players that are out there, and Rig's CEO expressed extreme confidence that that will be the case. It's a competitive market. There's a lot of fragmentation, smaller players in the market, and it's generally the quality of certain assets that determine which guys win which contracts. A lot of it depends on which rigs are capable of drilling for which projects. And so, no, I do think that this should get a relatively quick approval. Certainly, they're talking second half of this year. That's a much shorter timeline than the last major oil field services merger, which was Schlumberger ChampionX. That took over a year to a year and a half to approve and required significant divestitures. But offshore drilling is a different market.
All right, Kevin, thanks so much. I'm sorry, we got Scott Livian. Thank you very much. Appreciate that. As always, Scott Livian, he covers a lot of the energy services companies for Bloomberg Intelligence. Again, M&A trade, deepwater oil rig owner Transocean agreed to acquire rival Valaris in an all-stock deal valued at $5.8 billion. How about that? Keep an eye on that going forward. So big deals in the energy space. We're going to have more coming up. This is Bloomberg. Good morning.
गाइस ये नेचुरल गैस में देखो रीटेस्ट का ट्रेड भी ना मुझे कुछ अब खास लग नहीं रहा है. ठीक ठाक ब्रेकडाउन हुआ था अभी तक, तो रीटेस्ट भी होके नीचे आ जाना चाहिए था. मार्केट स्टिल लैगिंग एट दिस लेवल. ठीक है, एक सपोर्ट अच्छा था, ब्रेकडाउन किया, ऐसा लग रहा था रीटेस्ट करेगा. लुक एट दिस कैंडल अगेन ओपन इक्वल टू लो. एक तो मोमेंटम पूरा पुल बैक में आ गया, ऊपर से अब रुक भी नहीं रहा रीटेस्ट पे. मैं सजेस्ट करूंगा इस रीटेस्ट वाले ट्रेड से निकल जाओ आज. वैसी मंडे है, कहीं ये साइडवेज होके ऊपर ना निकल जाए वापस फेक ब्रेकडाउन दिखा के. ठीक है, ये ब्रेकडाउन तो हो गया है खैर, इस पे वापस बाई भी नहीं कर सकते. एसएल जा चुका है बाइंग का. एक सेलिंग का जो रीटेस्ट का ट्रेड लगाया है, इस सेलिंग के ट्रेड से एग्जिट कर जाओ. ठीक है, हो सकता है नीचे आ जाए, हो सकता है ऊपर चला जाए, बट अभी यहाँ पर अब कोई ट्रेड प्लान नहीं है. ठीक है, कॉस्ट टू कॉस्ट पर ही है ये अभी. ये कैंडल भी ओपन इक्वल टू लो बन गई है वापस से. 289 ओपन, लो 288.9 नहीं, ओपन इक्वल टू लो नहीं है. ठीक है, तो इस ट्रेड में वापस मत एंटर करना सेलिंग साइड पे. कोई रुका हुआ है तो कॉस्ट टू कॉस्ट पे ही है, निकल जाओ, या फिर कॉस्ट टू कॉस्ट पे एसएल रख लो. ठीक है, फिर से री एंट्री मत करना. ये ट्रेड यहीं एंड होता है. मॉर्निंग से देखोगे गैप डाउन, फिर लोअर सर्किट, एंड देन ये 10 पॉइंट की रेंज में घूम गया पूरा आज. चल जाना सेलिंग वाले ट्रेड में. नेचुरल गैस रीटेस्ट जो ट्रेड था, एग्जिट वहां से. चाहो तो एसएल कॉस्ट पर रख लो, दोबारा एंट्री मत करना. यूएस मार्केट भी देखोगे पॉजिटिव ही है अभी तीनों ही. एस&पी 500, डाउ जोन्स, नैस्डैक.
From having stayed up to watch the Super Bowl.
And then there are those people who never showed up today.
Really?
Shall I name names?
No,
I won't.
No need to get anyone in trouble here. They're working from home, John. Don't worry about it.
No,
it's all
they're
going to work
not.
out. All right. So when it comes to the big game, you know, I think it's safe to say, Paul, that the events on the field were less interesting than the commercials.
I don't know. I thought the game was okay.
I'm not into defensive games.
You know?
Yeah.
Okay, you want a lot of
maybe that's why.
Well, the fourth quarter was good for you. But
Yeah,
you were
no,
sick.
I had already long changed the channel, so Too bad. Anyway, Kevin Krim, it is his job to watch the entire Super Bowl because he tracks and monitors every commercial. Kevin Krim is CEO of Entertainment Data Oracle, EDO. He's also a friend of Bloomberg, having worked here before. Kevin, great to see you again.
Great to see you.
So you tracked all the ads, and what you pointed out to me just now is that AI ads were just everywhere. In fact, they dominated. There were more AI ads than beer ads.
Yeah, more than beer ads and automotive ads combined.
Wow.
More broadly, I mean, what we do at EDO is understand how ads impact people's behavior. We call it outcome measurement. So like Nielsen measures audiences, we measure the behavioral changes from every ad across all of linear and streaming TV.
How do you do that?
We're looking at massive panels of people who are in a privacy safe way are being tracked through their day. We're also a huge consumer of Google's anonymous data that comes out through what they call Google Trends. And we're aggregating all of that together and looking at, as ads air across streaming and linear, how does it change people's behavior in the minutes or weeks following an ad appearing. And we're looking at that against the baseline levels of behavior that we see all the time for these thousands and thousands of brands that we're tracking continuously. And so when you see an ad on a Super Bowl or just any old programming, we can see the lift in these behaviors like searching for the brand, going to the brand's website, using the brand's app. And why that's important is because it's a highly predictive set of behaviors that correlate nearly perfectly with changes in market share and sales. And it's something that hedge funds, I think, have been using for a long time. We brought it to media measurement.
So what does your predictive TV outcomes data show in terms of which advertiser really made an impact?
Well, it was a very interesting mix this year. I'd say thematically you had two things going on. It's almost two economies and a reflection of that. You had a bunch of brands and products demonstrating their capabilities to impact people's lives, either through AI or through healthcare related products. You saw GLP-1 drugs. You saw battles being fought between very heated rivals in their various sectors, whether it was Anthropic's Claude and OpenAI's ChatGPT, or Novo Nordisk and their Wegovy offering, and Hims and Hers, which we've heard in the news today, and Roe and these other providers. A lot of diagnostic tests as well being promoted. And what we saw was that consumers, if you tell them about what it can do for you, or more importantly, if you take an edgy shot against your competitor, you could score points, more points, frankly, than we were seeing on the field. And so that was one theme. And then on the other hand, if you don't have something innovative, tech-driven, you need to lean on the classic tried and true techniques that work in Super Bowls over the last decade. You needed humor, you needed nostalgia, you needed celebrities. And we saw some of those work as well.
At $10 million for a 30-second spot, is this money well spent? Do these advertisers feel like they get an ROI here?
It's if anything, the Super Bowl, because it's the last place you can reach 100 million plus people who are heavily engaged in the ad breaks, it is underpriced, if anything. Wow. EDO's data shows that to get the same impact as a 30-second spot in last year's Super Bowl, you would have had to have bought over 1,000 primetime 30-second spots. That's a good deal when it's priced at 8 to 10 million per 30 seconds. You'd have to spend a lot more than that to try to accumulate that kind of reach and that kind of engagement. And you simply can't do it in digital. You couldn't buy enough YouTube, TikTok, and Instagram Reels to come anywhere close to that kind of impact in any kind of reasonable time frame.
Okay, so I'm a Gen X and you are Gen X as well. So I feel really seen because there are a lot of commercials targeted at me. Backstreet Boys came right at me. Ben Affleck, kind of as a Matt Damon guy from Good Will Hunting, Jennifer Aniston, Jason Alexander, Ted Danson as Sam Malone. Like that was all speaking to me.
It was, and you're absolutely right. Move over boomers. We're now in the driver's seat of economic power, and marketers know that. And so the nostalgia was all about late 80s to early 2000s. Our sweet spot. And, you got some Gen Y and millennials events. There's a lot of habitual viewing, a lot of turn the channel on and leave it on. And so cable still will have a strong place in this economic environment, this ecosystem. But yes, you're going to see, I think, more of the dollars and more of the returns concentrate on the biggest live events. And so you're seeing the cable networks and their owners move to lower cost models to make sure that they still can maintain that high profit margin that they got used to in the heyday.
Makes sense why they keep coming back to live sports, right?
Yep, absolutely. So, and if it weren't for for ads for all the medicines that you can get now, there would be no network or cable TV advertisers.
Right, hard to pronounce.